We'll go through a few figures, a few slides. I'll introduce the directors and make one or two more announcements, and then we'll get on to the questions. Now, if we could put up the first slide, which is the earnings that were released yesterday. As you can see, it was a good quarter. It wasn't quite as good a quarter as it looks, which I'll explain in a second. But we'll go through a few figures. Really, all of our businesses did very well. I'll introduce the directors and make one or two more announcements. You should focus on, and then we'll get on to the questions. Now, if we could put up, Charlie's getting a head start here. The first slide, which is the earnings that were released yesterday. It was a very good. It was a benign quarter. It was a good quarter. Insurance wasn't quite as good a quarter as our other businesses, particularly our big businesses, did quite well. Really, all of our businesses did very well. I don't remember whether we've ever had operating earnings. You should focus on more than 3 points. Operating earnings, almost $8 billion, but Charlie's getting in any event. It was quite satisfactory. Now I'll catch up. Put up slide 2. The insurance earnings were. It was a good, very good. It was a benign quarter. They were still insurance without these factors, but our other businesses, particularly our big businesses, they were helped a bit by the fact that did quite well, and the dollar was strong, and that reduces. I don't remember whether we've ever had operating earnings of liabilities we have outstanding in foreign currency. But in any event, it was we have losses we're going to pay in the future. And put up slide 2. The insurance earnings were, and the dollar appreciates against that a bit. They were still currencies. We got a small benefit from that. We also were helped hurts us in other ways. The dollar was strong. We have so many different kinds of businesses. And then we own liabilities we have on earnings outstanding in foreign currency around the world. We have losses we're going to pay in the future, and they're payable in pounds. Whether when the dollar goes up or down, whether it helps us or not, the dollar appreciates against that. I've never been able to figure it out. Currencies, we so we just sort of take it as it comes. But we do want to explain. We also have it hurts us in other ways. And then we had another item, which is kind of interesting. We have so many different kinds of businesses. Swiss Re about a life insurance contract. Earnings through Coca-Cola that operate around the world. The disagreement's probably lasted for well over a year. Whether when the dollar goes up or down, whether it helps us or not. I've never been able to figure it out. So we just sort of take it as it comes. But we do want to explain that to you, the insurance earnings. And then we had another item, which is kind of interesting. But interestingly, Swiss Re showed a gain of $100 million also from settling this contract. So we are working out an arrangement with Swiss Re whether we'll get the disagreement's probably lasted for over a year. And that was settled in the first both reported higher earnings when we, and as you can see, we showed a gain of $255 million pre-tax can do from settling this disagreement. But interestingly, Swiss Re showed a gain of $100 million also from settling the disagreement. So was the we are working out an arrangement with Swiss Re whether we'll get pickup, which I noticed every quarter. Which I noted in the annual report. Both report higher earnings the gain in both the. When we settle it, the closure rate, magnificent what accounting can do, and the persistency rate at GEICO. These are one real high factors. And if we'll put up the chart, was the showing the gain of GEICO's auto policies pickup, which I noticed, which I noted the strengths I mentioned in 2012 about the gain and continued in 2013, but the closure rate has become even stronger, and the persistency rate. There's a lot of seasonal. GEICO. These are two hugely important factors. And if we'll put up policy gains, chart, but showing the gain of GEICO's auto policies month by month, the strengths I mentioned in 2012 in policies have not only continued in 2013, but improved over 2012. And again, it's because our closure ratio, in other words, the number of people that get a quote from us and then go on to buy a policy gains. That rate has improved, but as you can see, very significantly month by month this year. And with it, we also had a gain in persistency in policies and renew the policies very significantly, and that's pure gold. Improved over 2012, and again, it's because our closure ratio, in other words, the number of people that mathematical value get a quote from us and then go on to buy a policy, $1,500. So that rate has improved. If we had 1 million policies in a year, and I'm hopeful we might do that this year. And with it, that's $1.5 billion of value. The people that renew the policies with us, and that's pure gold. Intrinsic value, which does not show up on the policy income statement or balance sheet at all, but it does increase the mathematical value to us GEICO versus what we carry it for, $1,500. And I can't resist a little sales pitch on that policies in a year, and our closure rate, which, like I say, is that's $1.5 billion of value. Means that when people go to our intrinsic value, which does not show up on the income statement or balance sheet at all, they find that they can save a lot of money of GEICO versus people love our little gecko. And I can't resist
buy
the
the
sales
policies
pitch on that because
we save them money.
this closure rate,
And
which,
it
like
just
I
so
say,
happens is that in the auditorium
incredible
levels right near here
means that
the exposition
when
hall,
people go to
we have a lot of very friendly people.
our website or
that will
call
help
us
you save money too.
get a
So
quote,
I
they
urge
find
you,
that
you
they can
can,
save a
you
lot
can
of
walk
money.
out anytime Charlie is talking.
people love our little
and
gecko.
but
Go
they buy
and
the
get a
policies
quote,
because we
and
save them
a
money.
very high percentage of you
And it just so happens
to save money by doing
that in
that.
the auditorium,
That is
right near
in the
here,
Berkshire spirit.
the exposition
To
hall,
save money at every
we
opportunity.
have a lot of very friendly people.
So I'm hoping you will
that
check
will help
that
you
out
save
and
money
we will
too.
set a
So
record for
I urge you, you
policy
can
sold.
walk out anytime Charlie is talking.
and finally,
and go and get a quote.
our railroad
And
this
a
year
very high percentage of
is
you
doing very well. You saw the
save money
earnings
by
in
doing
the,
that. And
in the
first
that
quarter
is
report,
in
if
the
you got a
Berkshire
chance to
spirit.
look at that,
to save money at
And,
every opportunity.
So I'm hoping you will check that out, and
that,
we will set a record
show our
for
gain in car loadings
policies sold
in the first 17 weeks.
and finally,
3.8%, whereas the other four major
our railroad,
Class 1 railroads in the United
is
States
doing very
have had a
well.
gain of
You saw the
0.4%.
earnings in the
That's
in
significant
the
money.
first quarter report, if you got a chance to look at that.
And
We don't have the
figures
Canadian
up
railroads
that,
here that operate in the
show
United
our
States.
gain in
They've
car
both come down.
loadings
Canadian National,
in the
Canadian
first
Pacific.
17
But-
weeks has been
But this is representative of what's
3.8%,
been
whereas
happening.
the other
We've been
four
helped
major
by the fact that
Class 1 railroads in the United States have had a gain of
fortunately
0.4%.
a lot of oil has been found.
That's significant
Very,
money.
very
Close to our railroad tracks.
we don't have the Canadian
better place
railroads
to
here
find
that
oil?
operate in the
And,
United States. They both
so we've
come
been
down,
moving a lot of
Canadian
that.
National, Canadian Pacific.
And it's worked, but this is representative
and we'll be
of
moving a
what's
lot more
been happening.
the way
We've been
things are
helped
going by the fact that
and
that,
as a result
uh,
of all this,
fortunately a lot of oil has been found.
we now
Very,
we'll put up the
very,
next slide.
and
We're now the
close to our railroad
fifth
tracks
most valuable
and
company
what
in the
better
world
place to find oil.
And so we've been moving a lot of that, and it's worked, and we'll be moving a lot more the way things
And that
are
will
going.
change over time, but I hope it changes for the better.
And as a result of all this,
Like
we now the business part of this meeting
next slide
we're
starts
now
at
the
around
fifth most
3:30,
valuable
and at that time
company
we'll
in
have
the world.
election of directors.
I will start the questioning in just 1 minute, but there are one or two announcements to make.
We've not put it in the
And
annual
that will
report
change
because
over
it,
time, but I hope
we
it
hadn't
changes
firmed
for
it
the
up
better.
yet. But tomorrow at Borsheim's,
The business part of this meeting
starts
friend,
at around
Ariel was
3:30,
saying,
and at that time we'll
will
have
be
the election
available
of directors.
I
Play
will
table
start the
tennis with
questioning in just
any of
1
you
minute.
foolish enough to
One or
challenge
two
her.
announcements to
And
make.
we'd
I
not
met
put
Ariel
it
when she was
in the annual
9.
report because we hadn't
and
firmed it up
she
yet.
became
But tomorrow,
the youngest
at Borsheim's,
women's
table tennis champion of the United States,
our friend.
and then last summer she went on
Ariel
to the
was
Olympics.
saying,
And at
will
the
be
Olympics,
available to
play table tennis.
she
with
won her first
any
two
of you
matches,
foolish
and
enough
she
to
won more
challenge her.
games
Off the
I
woman
met
that
Ariel when she was
became
9,
the eventual Olympic champion,
and she became
and any other
the youngest
participant in that
women's
event.
table
So
tennis
Ariel will
champion
be
of
out
the
there
United States
tomorrow.
And
And
then
last
1
summer she
o'clock,
went
and
on
if
to the
you're,
Olympics. If you're
and at
courageous,
the
Olympics, you'll show up with your paddle. And then
she won her first two matches,
and she won more games off the woman that became the
One more
eventual
introduction. I
Olympic
don't know whether
champion
we can get a spotlight on
than
him or
any
not.
other
but,
participant, Stan Lipsey, in that event. So
Ariel
Ariel
will
will
be
be
out
out
there,
there, publisher of the
tomorrow at
Buffalo
1 o'clock,
News,
and
and
if you're
as Charlie can attest,
you're
as well as
courageous,
I, you'll show up with your paddle
back in
and end up looking like an idiot. 1978, 79, 80. We had
one
an
more
enormous
introduction. I don't know whether we can get a
business
spotlight
problem
on him
in
or not.
Buffalo
but,
News. We were locked in a
Stan Lipsey
competitive struggle.
retired this year as
We were not doing well.
publisher
in
of the
part because
Buffalo
we were
News,
operating
and
under as Charlie can attest as well as
a
I,
tough
judicial order for a while until it
back
got
in
reversed on appeal.
19
And Stan
78,
gave up a
79,
wonderful
80.
life here in Omaha, and
We
we had
had
an enormous
asked no
business
questions
problem
and
and
for no
Buffalo
pay.
News. We were locked and came up to Buffalo.
competitive struggle.
The Buffalo News would not.
we
have
were
turned
not
out
doing
to be,
well
in part because we were operating under a
paper that turned out to be
or
a
a
tough
tough
judicial
judicial
order
order
for a while
until it got
for Berkshire
reversed on appeal.
without Stan Lipsey.
It was
And
announced
Stan
a couple of days ago.
gave up a wonderful life here in
that we
Omaha,
bought out
asked no questions
the
and
final
for no pay.
20% of
came
the
up to
car held by the
Buffalo
family. for about $2 billion at the transaction. They're happy with. We're happy with.
Matter of fact, if you saw Eitan Wertheimer dancing with the stars that have been produced, you could have seen how happy he was. So we will now own. It was announced a couple of days ago that we bought out.
Family will continue.
It's been the final
sheer joy.
20%. The business is under held by the family.
Behave magnificently.
For about $2 billion. It's a transaction they're happy with. We're happy with. Matter of fact, if you saw Eitan Wertheimer dancing with his family, and you could have seen how happy he was. Did you stand up in your family? We will now own 100% of this car, but our relationship
considerably more
with
than
the Wertheimer
12%
family
on
will
net worth,
continue.
and then you say that seems
the
reasonable
sheer
for
joy.
Berkshire also.
The business is done terrifically.
Why do
The
you
people
say
will
that?
behave magnificently.
Given the
And,
past record showing
this
that
car will be
Berkshire
part
has
of
not
Berkshire
been
forever.
earning that much.
Certainly is
I
not
want to
assured in the
thank
future.
and his family.
And the last, Eitan, are you here? Can you stand up? In your family, 10 or so years, or
The
have not been
S&P 500
the best for
earns
business
considerably more
generally.
than
But
12% on net worth, and then you
if
say
the
that
stock
seems
market
reasonable
continues
for Berkshire
to behave
also.
in
Why do
2013
you
as it
say
has
that?
so far, this will
Given
be the first
past record showing that
5-year
Berkshire has
period
not been earning that
where
much.
the gain certainly is not assured in the future.
book value per share.
And the last
has fallen short of the
10 or so years, or
market
have not been
performance, including
best
dividends
for
of
business
the,
generally. But
Standard & Poor's, and
that
that
won't
the
be a
stock
happy
market
day, but it won't be.
continues
It won't
to
behave in
it won't,
2013 as it has so
totally
far. This will be
discourage
the
us
first.
because
It will be a
period
5-year period
where the market has gone up
where the gain
in every one of the 5 years,
and
and
book
as we
value per
regularly
share
pointed out,
we're likely to do
has
better
fallen short
in down years
of
as we did
the
in
market
in
performance,
2008,
including
for
dividends,
example,
which
which
is
is
the year that gets dropped
Standard
this year.
& Poor's, and
That
we're
won't
likely
be
to
a
do
happy
better
day, but it won't be
in down years
relatively.
It won't
than we do in
totally
up years.
discourage us because it
Charlie,
will
how
be
do
a
you feel
period
about the prospects
where the market has gone
I
up
should point out,
in
incidentally,
every one of the
we
5
use
years.
book
and as we
value
regularly pointed out,
because it's a
we're likely to
calculable
do
figure.
better. And
in
it does
down
serve
years
as a
as we did
reasonable
in-
proxy of the year-to-year
2008, for example,
change
which is the year that gets
in
dropped
the
this
intrinsic
year.
value of Berkshire. If we
we're
could
likely
really
to do
give you a
better
figure for
in
intrinsic value
in down years relatively
and back it up,
than
that
we
would
do
be
in
the
up years.
important figure. Charlie,
As I
how do you
pointed
feel
out,
about
if
the
we gain a
prospects of-
million policyholders,
I should point out, incidentally, that
Geico,
we use
that
book
actually adds
value
$1.5 billion
because it's a calculable figure
to
and it
intrinsic
does serve
value,
as
and
a
it doesn't add a
reasonable
dime
proxy of the
to
year-to-year
book value. So
change
there's a
in the intrinsic value
significant
of
gap,
Berkshire.
which
If
is why
we could
we're
really
willing
give
to
you a
buy
figure
your
for
stock at
intrinsic value
120% of book
and
value.
back it up, that would be the
Significant gap
important
between
figure.
the two.
As I pointed out, if we gain a million policyholders at
tracking
Geico, that actually adds $1.5
I should
billion.
point out also, I did this in the annual report in respect
to
Marmon,
intrinsic value.
When
and it
we
doesn't
buy
add a
the
dime,
ISCAR stock
to book
which we pay
value,
about
so
$2 billion for,
there's a
the day we buy
significant
it,
gap, which is why we're willing
we
to
mark
buy
it
in
down
stock at
in terms of our book
120%
value by
book
roughly
value.
$1 billion.
Significant
So $1 billion
gap
comes
between
off
the
our
two.
book value.
Book value is
we're making a purchase
useful
which we regard as
tracking
quite
device.
satisfactory.
I should point out
And
also
so there
I
are
did this
these
in the annual report
distortions
in
that
respect
occur.
to Marmon.
But in the
When
end,
we buy the
we
ISCAR
have to-
stock, we have to
which we
do
pay
better
about
for
$2
you
billion
than you would
for.
do
The
in
day
an
we
index
buy
fund.
it, and if we don't,
We mark it
aren't
down
earning our pay.
in terms of our book value by roughly
and I
$1
think
billion.
we'll do that in the
So
future,
$1 billion
but I don't think
comes
we'll do it
off
every
our
year,
book
and we've
value.
proven that in the last few years.
We're making a
Charlie?
purchase which we regard as quite satisfactory.
Well, I
And so there are these distortions that
confidently
occur.
expect
But in the
that
end,
Berkshire's gonna do
we have to do better for you than you would do
well
in,
over the long term.
in an index fund. And if we don't,
I don't pay much
we
attention
aren't
to
earning
the-
our pay. And I think
Whether
we'll
it's
do
5
that in the
years or
future, but I
3
don't think we'll do it
years
every
or-
year. And we've proven that in the last few years. Charlie?
We have momentums in place that are
Well,
going to
I
do okay. Of course, we won't do as well
confidently
in the future
expect that Berkshire's going to do
in terms of annual gain,
quite
averaged
well
out over the long term, because our past
I don't pay
returns
much
were
attention to
almost
the-
unbelievable, whether it's 5
So,
years or 3 years.
we're slowing
or-
down,
but I think it'll still be very pleasant. I think we have
At
momentums
89,
in place that are
Charlie is not
going to
really
do
concerned
okay.
about
Of
this
course
stuff
we
year
won't
to
do
year.
as
I mean,
well.
he's taking
right.
a longer
In the
range
future,
view.
in terms of annual gain,
I'm trying to take care of my
Averaged out.
old age, which might come
because
on at any time.
our past returns were almost unbelievable.
I haven't noticed it.
So we're slowing
Jonathan
down,
Brandt
but I
is
think
a
it'll
newcomer.
still be very pleasant.
To the
panel,
At 89, Charlie is not really
area
concerned
is,
about this stuff year to year. I mean, he's taking
Other
longer
than
range insurance aspects of Berkshire Hathaway, and
I'm trying to take
I
care
can
of my
assure you
old
that
age, which might
no one
come
has paid
on at
more.
any time.
I played Johnny. I haven't noticed the chess when he was about 4
Jonathan
years old.
Brandt
Is a newcomer.
I don't know, I must have been
To the panel.
40 or something at the time.
His
and
area is
he kept insisting during dinner that we
the
played
other
chess
than
afterwards.
insurance aspects
And
of Berkshire
we started
Hathaway.
playing, and of
And
course,
I can
He got
assure
me
you
into
that
some impossible
no one has paid
position.
more.
I
I played,
and I told his parents to put him to bed.
chess when he was about
So
4 years
Johnny,
old.
I still have those kind of,
And I don't know, I must have
kind
been
of comebacks in me,
40
so,
or something at the time.
Be careful
and,
what you ask.
What do you feel are
he
the
kept
specific
insisting
competitive
during dinner that we
advantages
play
that this
chess
car has
afterwards.
over its primary
And
competitor, Sandvik?
we started
and in
playing,
turn,
and of
what
course,
advantages does
He got me
Sandvik
into some
have over
impossible
Isco?
position.
Sandvik is a very good company.
A few moves,
and his car's a much
and I
better
told his
company.
parents to put him to bed.
The advantage it has is brains.
So, Johnny, I still have those
and
kind of
incredible passion for the
comebacks
business.
in me, so
Be careful what you ask.
it's interesting
What do you
to
feel are the
reflect on
specific
this
competitive
car,
advantages
because
that this car has
if you
over
go
its
back
primary competitor, Sandvik?
to,
and in turn, what advantages
what
does
would it
Sandvik
be,
have over Isco?
Sandvik is a very good
1951 or
company.
thereabouts.
And his car's a much better
When
company.
Seth Wertheimer
come from Germany.
The advantage it has is brains
was
in Israel,
and
started this car.
Incredible passion for the business.
Just think of the prospect that was facing him. Here was a company
interesting
like
to reflect
Sandvik
on
or
this car
this
because
company, country
go back
Metal or different countries,
to,
well-entrenched companies,
what would it be,
well-entrenched, well-financed,
1951 or thereabouts.
and here's this fellow in Israel,
When
Seth Wertheimer,
25 years
Germany,
old,
and
Israel.
the raw material
started this car.
for these cutting tools
Just
comes from
think
China.
of the prospect that was facing him.
Raw
Here was a
material
company
in
like
Israel.
Sandvik
So
or
everybody buys their
this
tungsten, country from
Metal or different
China,
countries.
well-entrenched
And
companies.
they sell to
well-entrenched,
customers that are
well-financed,
using large machine
and here's
tools
this fellow
throughout
in
the
Israel,
world,
but
they're
25
selling into
years
heavy
old.
industry to a significant
And the raw
extent. So
material
they're selling to people like
for these
Boeing
cutting
or General
tools
Motors or
comes from China.
Isn't it
Raw material is
big
in Israel. So
industrial
everybody buys
companies
their
in
tungsten
Germany
and
from
China.
and
There's no
they
great
sell to customers that are
vocational
using
advantage in
large
in
machine
terms of
tools throughout the
being
world,
in
but
Israel
they're
doing this.
selling
But
into
here's this
heavy
25-year-old
industry to a
fellow
significant
getting the
extent.
tungsten
So they're
from
selling to
thousands of
people like
miles
Boeing
away,
or General Motors,
selling
or-
it to customers thousands of
or,
miles away,
competing
big
against people like Sandvik.
industrial companies in Germany.
And this
and,
remarkable business, this
car,
and
comes from that. And
there's no great,
there's no other
vocational
answer you
advantage
can
in-
give
in
to
terms
your
of
question when you
being
see
in
that result.
Israel doing this. But here's this
than to,
25-year-old fellow
say that
getting the tungsten
you
from
have had some
thousands of miles
incredibly
away, selling it to
talented
customers
people
thousands of miles away,
never stopped working,
competing
never stopped
against people
trying to
like
improve the
Sandvik,
product.
never stopped trying to make
And
customers
this
happy.
remarkable business, this car,
And that continues
comes
to
from
this
that.
day. And
there's
Sandvik
no other
is a very
answer
good
you
company,
can give
to your
I can tell you
question
that-
when you see that result,
based
than
not
to,
only on the
uh,
figures but on
say
every other
that
aspect of
you have had some
business
incredibly
observation that I
talented
possess.
people
that
who never stopped working,
car is
never
one of the
stopped
great
trying to improve
companies
the
of the
product,
world,
never
and
stopped trying to make
we feel
customers
very
happy.
fortunate
And
to
that
own it, to be
continues to this
associated with
day.
their management.
And
Charlie?
Sandvik is a very good company.
Well, it's a good comparison.
I can
Sandvik
tell
is
you
a
that-
fabulous company.
that
And,
based not only on the figures but on
it's a
every other
particular
aspect
achievement
of
to
business
really do a
observation
little better
that
in
I
the
possess,
competitive market,
that
as this car's done.
is
Quite a
quite a
bit
bit one of the
better.
great companies of the world, and we feel very fortunate.
Have you really ever seen
to own it,
a
to be
better
associated with
operation
their management
than this car in
Charlie?
the manufacturing business, Charlie?
Only
Well, it's a
place
good comparison. Sandvik
ever
is a
in where I saw
fabulous
nothing but
company.
robots and engineers working
And,
computers. It's a particular achievement
It's a re-
to
You cannot believe how
really do a
modern
little
this
better
car
in the
is.
competitive market.
And the
As
game's
this
not
car's
over
done.
yet either. Quite a bit
Thank
better.
you
They've
for letting
gained.
us in the building early today. But let's
Have
not
you really ever seen much a better operation than this car in the manufacturing business? Charlie?
let's not do that again
Only
next
place
year, though. I don't
I
want to
was
wake up
ever
in
in
your
where I saw nothing but robots and engineers.
If we had a
working
company that
computers.
sold coats, we would have left you out there. And it's
You cannot believe how modern this car
When you
is.
think about Berkshire and the decade
game's not
after
over yet
you're
either.
gone,
To thank
my
you
question
for
is,
letting
what
us in the building
worries
early
you the
today.
most? But let's
I know
not.
nothing keeps you up at night, but
What are your big worries, and what can go wrong? Let's not do that again next year.
Well, it's a good
though.
question.
I
It's
don't
one
wanna
we
wake up any
think
earlier.
about all the time.
Fine.
If we had a company that sold
and
coats,
that's
we would have
why
left you out there. And the culture is all important. The businesses we own are all
When you
important
think about
because
Berkshire and the decade,
those trains will
after
keep
you're
running
gone,
and people
my
will keep
question
calling
is, what
Geico
worries you
the day
most?
after I die. There's no question about
I know
that.
nothing keeps you up at night, but
And
What are your big worries, and what can go wrong?
the key is, well, it's a good question. It's preserving the culture all the time. And that's why successor to
the
culture is
CEO
all
that-
important.
that,
The businesses we own are all
have
important because
more brains, more energy,
those trains will
more
keep
passion
running
for
and
it even
people
than
will
I
keep
have.
calling Geico. And the day after I
It's
die,
the number one
there's no question
subject
about that our board
Uh,
considers at
and
every meeting. And we're solidly
The key
in agreement,
is
preserving
as to
the
whom that
culture
individual should be,
and
having
I think
successor
the
to
culture
CEO that
has just become intensified.
more brains, more energy,
Year after
more
year
passion
after
for
year,
it,
I
even
think
than I
Charlie would
have.
agree with it.
I mean,
And
we always knew what we were about. Our board considers at every meeting.
When we first got
we're
involved with Berkshire,
solidly in agreement, making sure that everybody that joined that individual should be, that owners and shareholders. I think the culture has just become intensified. Everybody that bought into this
after year. I think Charlie would agree with
I think
that.
very special culture. We always knew what we were about. That took time
when we first got involved with Berkshire.
But it is making sure that everybody that joined us now, and I think that the owners,
one of a kind.
I think that anything that came in, directors, any managers, foreign type, bought into this behavior, what I think very
would be
special
cast
culture,
off
because people have self-selected into this group. That took time in the company, and it would be rejected like a foreign tissue.
I think it's really one of a kind now,
and I think that a
person in there we have one of a kind.
I think that anything that came in, we have a board. Any foreign is especially devoted to Berkshire.
behavior.
We don't hold them by
would be cast off
because people have self-selected into this group. And we have people who have brought their companies to Berkshire. It would be rejected like a foreign tissue if we got the wrong sort of. I think a person in there. We have whoever succeeds me. We have a board, and there'll be a lot of newspaper stories and. People especially devoted to there'll be a story that
Berkshire.
We don't hold them by
the same thing.
It will be the same thing. You can count on that.
Charlie, what are your thoughts?
And we have people who have brought their companies to Berkshire.
Well,
They want to be part of
My
it.
thoughts
as
are
did
very
Iscar.
simple.
So
I want to say to the
I think
many mongers in the audience,
whoever
don't be so
succeeds
stupid
me,
as to sell these shares.
and there'll be a lot of newspaper stories, and people after 6 months, there'll be a story that says, it isn't the same thing. It will be the same thing.
That goes for the Buffetts, too. Charlie, what are your thoughts?
There was a column that was written indicating that you had gotten the
Well,
better end of the Heinz
thoughts
deal
are
from
very
your Brazilian
simple.
partners. That
I wanna
column
say to
said that
the
your
many
return was
mongers
likely
in
to
the
come from the
audience,
preferred stock
don't be so
dividends,
stupid as
with
to
the
sell
common
these
equity
shares.
portion being dead money. It also said that the way the deal was structured indicated your low expectations for the market overall. Is
That goes
this
for
an
the Buffetts,
accurate
too.
portrayal of the deal and of your column that was written expectations for the market indicating that overall? You had gotten
it's
the better
totally
end of the
inaccurate.
Heinz deal from your Brazilian
the,
partners. That column said that
interesting.
your return was likely to come
Georgie
from the preferred
Palolemon,
stock dividends, with the common equity
and I
portion
were
being
in
dead money.
Boulder,
It also
Colorado
said
in
that the
early
way the
December.
deal was structured indicated
And
your low expectations
remember
for
it was
the
on
market
the way to the
overall.
airport or when we got
Is
on the
this
plane,
an
but he,
accurate portrayal of the
said
deal
that
and of
he
your
was thinking about,
expectations for the market overall?
No, it's totally inaccurate.
People at Heinz
And proposing a deal. And would I be interested? Georgie Palolemon and I, because I knew both Heinz and I knew Georgie Palo, Boulder, Colorado, and I thought very highly of both. And I said, I'm in. I can't remember if it was on the way to the airport or maybe a week later. I don't remember exactly how long. He said that he was thinking about. I received from Georgie Palo, who I knew the people at Heinz many years, starting proposing a deal, and would I be interested? I received, because I knew both Heinz and I knew Georgie Palo, on the deal, and I thought very highly of both. I said, I'm in governance procedures that he suggested. Maybe a week later, I don't remember exactly how long. About changing this, just let me know. I received his thoughts. It was an absolutely fair deal. Many years, starting at Gillette, I didn't have to change a word in either the term sheet received or the governance arrangement. Now, term sheet on the deal, and we actually another sheet on Charlie and I on governance procedures that he suggested. Paid a little more than we would have paid. Thoughts about changing this, doing the deal ourselves, because thoughts. It was an absolutely fair deal. And Georgie Palo and his associates didn't have to change a word. Extraordinary managers, term sheet or the governance. They're both classy and they're unusually good. Charlie and I, and so we structurally paid a little more than we would have paid because of that fact. Doing the deal ourselves because. And we think that the design of the deal and his associates are extraordinary managers. We do quite well over time at Heinz. They're both classy, and they're for usually 0.1 billion. Will achieve higher rates of return stretched than our overall 12 billion. We have because of that fact. We have a less leveraged position in the capital structure. The design of the deal is such that we created that if we do quite well over time at Heinz, more leverage, and we provided that leverage. 0.1 billion is fair terms. They will achieve higher rates of return. If anybody thinks our overall 12 billion, we have a less leveraged position. We think they're making a mistake, but we'll know the answer to that. And they have in 5 years. The design of the deal more leverage, and we provided leverage on what I regard as fair terms and what they regard as fair terms. More money than operating ability. If anybody thinks that level, and they have lots of operating ability and is dead money, wanted to maximize, we think they're making a mistake. $4 billion. So my guess is we'll know the answer to that in 5 years from now or 10 years from now. You will find that they've earned a higher design of the deal, rate of return on their investment, but because we have more dollars in, we will receive that same rate of return, more money than operating ability at the parent company level, but we also lots of operating ability and a very fair return. Maximize their return on the $8 billion. So my guess is created more leverage 5 years from now or 10 years from now. You will find that they've earned a higher rate of return on their investment, but because we put more dollars in, we will receive that same rate of return on our $4 billion plus of common equity, but we've also will have received a very fair return on the $8 billion that we put into
Berkshire signed a
created more
portfolio
leverage for
underwriting
them.
arrangement with
Charlie?
Aon to do business at Lloyd's. And then last week there was the hiring of several AIG executives. It appears that Berkshire may be taking a broader share of the market. What is the goal of these moves? And
That'll
won't
teach
these
them.
actions eventually produce more average
Jane
results?
appears to be
The goal is to take a greater
with some high
share of the market.
actions.
There have
Berkshire
been two
signed a
important moves
portfolio
made
underwriting
by
arrangement with Aon to do business at Lloyd's.
Ajit's
And
operation
then last
in
week
the
there was the
last
hiring of
month
several
or
AIG
so.
executives.
One
It
is
appears that
the
Berkshire may be taking
the
a
first
broader
one
share of the
that
market.
was announced
What
was
is the
this
goal of these moves?
participation
And won't these
of
actions eventually
7.5%
produce more average
in all of
results?
the goal is to take a greater business. Originally, it was announced share of the market. There have been two important moves made by Lloyd's market. Ajit's operation, I believe it's been extended a month or so. One is the entire London market. The first one, now bear in mind, was this the people participation are insured 7.5%. Still have the right to pick in all of the who their insurers originally was announced as applying. It isn't totally automatic market that we receive 7.5% of every slip. I believe it's been extended. We had an arrangement for a couple of years entire London market. Now bear in mind a marine book and the people in other areas, but not across the board. Still have the right to pick who their insurers shall be. We think that it isn't totally automatic. We think that the profit possibilities we receive 7.5% of every slip for that business. We had an arrangement for a couple of years with Marsh. It will give us on more of a cross section, perhaps some other areas, but not across the board. We've been used to having, but it doesn't mean that we give up our present business at all either. The second that item you mentioned is just in the last. We think that the profit possibilities are reasonable for that business. That we wouldn't have entered into it. It will give us pretty well known more of a cross insurance people that have been with AIG than we've been used to having. But it doesn't mean that we give up our present business at all either. Primarily commercial. The second insurance I mentioned is just initially domestically, perhaps, but weaker around the world. And these are people that reached out to Berkshire, pretty well known insurance people. One of them had been with AIG a number of times in the past. Had joined us. We were ready to enter this field. With these people, primarily commercial people. We've had a number of people reach out initially domestically, the announcement was made only a week or so around the world. So I think you will see are people that Berkshire reached out to Berkshire in addition to all of the other insurance businesses that in the case of at least one of them even had reached out a number of times in the past. But you'll see us become a very significant factor this field worldwide. With these people who are very able people. We've had a number of people reach out. It could be business since the announcement was made only a week or so ago. So I think you will see Berkshire, in addition to all of the number of other insurance businesses over time and had over the years. We've got the right people. I think you'll see us become a very significant factor. Capital like nobody else worldwide. Has. We have the ability to in the commercial insurance business sign on to business that reaches into the billions that other people have to. I would hope that spread out among others. So I think we're ideally situated to go in this business, and I'm looking forward to it. And we've got the right people. We've got
generally speaking, I don't think the reinsurance business is a very good business for most people
to sign on to,
and I think
coverages that other people have to.
A very desirable part of Berkshire's among others, the way it's run.
So I think we're ideally situated to go in this business, and
the other businesses.
I'm looking forward
pretty
to it,
well.
Charlie.
If somebody else owned them. I think
generally speaking, I don't think
reinsurance
the
business under Ajit
is very peculiar
for most people.
And other people who think it's easy are going to find out that it isn't. It's a very desirable part of
and I should
Berkshire's
point out
business, the way it's run.
The commercial
it's
insurance
different
business
from
also,
something
I mean,
like
it will be primary
the other
insurance.
businesses,
Well,
which would work
the
pretty
Aon
well.
arrangement is a
Somebody
reinsurance
else owned
arrangement,
them.
but we will be in the primary
I think
business, so
Reinsurance business under
it will be
Ajit is very
large
peculiar.
commercial
And other people who
risks,
think it's easy are
but
going
there's
to
a lot of
find
premium
out that
volume
it
there,
isn't.
and there's a lot of chances to make mistakes. But
I should point out
the group we have
overseeing
commercial
that
insurance
business
business
also.
also. I mean, it will be
In
primary
regards to
insurance.
Geico,
The Aon
Warren, last
arrangement
year
is a
you said the
reinsurance
firm had no
arrangement.
plans
We will
to
be in the
adopt
primary business,
usage-based
so,
driving technology, similar to what
it will be
competitor
large,
Progressive
commercial
called Snapshot.
risks.
Is that
but
still
there's
the
a lot of
case?
premium volume
And if
there,
so,
and there's a
why
lot of
wouldn't that
chances to make
technology
mistakes,
give
but I'd
Geico
rather
better
have
data?
The group
That
we
still
have
is the case.
overseeing that business
Snapshot
than
is
any other group I can think of.
attracted a fair amount of attention.
In
and
regards
there are
to
other
Geico,
companies
Warren,
doing
last
that.
year you
It's an
said the
arrangement
firm had
essentially
no
to-
plans to adopt
to,
usage-based driving technology, similar to what competitor Progressive
term Snapshot,
called Snapshot.
perhaps says it. I mean, to get
Is that still the
a
case?
picture of
And if so,
how
why
people
wouldn't
really
that
do drive.
technology give Geico better data?
That still is the case.
Insurance
And Snapshot
underwriting,
is
is an
attracted a fair
attempt
amount of attention, and there
to
are other
figure out
companies
the
doing
likely
that. It's an
propensity
arrangement
based on a
essentially
number
to
of variables
of a person
tie
having an accident. Now,
in life insurance,
term
it's very
Snapshot
obvious.
perhaps says it. I mean, to get a picture of
100
how
is-
people really do drive, if you don't know anything else about them, is more likely
Insurance
to die
underwriting,
next year.
is an attempt
20
to figure out
when you get into auto
likely
insurance, figuring out who's
propensity
likely
based
to
on
have
a
an
number of
accident. Variables of a person
involves
having
assessing
an
a number of
accident.
variables,
Now,
and
in
different
life
companies
insurance
go
is
at it
very
different
obvious
ways.
somebody
100
clearly
on statistics.
if you don't know
if you're
anything
a
else about them,
16-year-old
more
male,
likely to die in next
you're
year,
more likely
than
to
somebody
have
that's 20.
an accident.
When
than
you
I
get
am.
into auto insurance,
Now,
figuring out who's likely to have an accident,
that isn't
because I'm a better
involves
driver,
assessing a number of
It's
variables.
because the
and
16-year-old
different companies go at it
about
different
10 times
ways.
as much, and he's trying to impress the girl sitting next to him. Clearly,
And
that doesn't work with me
statistics, if
anymore,
you're
so
a
I've given it up.
16-year-old male, you're more likely to have
We ask
an
a number
accident
of questions,
than I
and
am.
our attempt, as much
Now,
as possible, is to figure out
that isn't
because I'm a better
the
driver.
propensity of any
It's
given
because the
applicant
16-year-old is
or the
probably
possibility
driving
that
about
they
10
will-
times
they
as
will have
much, and he's
accidents.
trying to impress the
There
girl
are a number of
sitting next to
variables
him.
that are quite
And that doesn't work with me
quite
anymore, so I've
useful in
given it up.
predicting.
But, and Progressive
They
is
focusing on this.
we ask a
snapshot
number of
arrangement,
questions.
and
We'll see
our
how they
attempt,
do.
as
I
much
would
as
say
possible,
that is to figure out our ability to
the
sell
propensity
insurance
of any given applicant
at a price
or the possibility that
that's
they will
considerably
have
lower.
accidents.
And there are a
than
number
most
of
of our
variables that are
competitors,
quite evidenced by the fact that when people
quite
call us,
useful
they
in
shift to
predicting.
us. And
And at the
Progressive
same
is
time earn a significant
focusing on this
underwriting
snapshot
profit
arrangement and
indicates that
we'll
our
see how they
selection
do. I would
process
say that is working quite well. I mean,
Our
if your
ability
selection processes
to sell
is wrong.
insurance
If you treat it at a price 16-year-old male
that's
and
considerably
give him the same
lower
rate that you give
than
most
a
of our competitors,
40-year-old
evidenced
that's
by the
driving their
fact
car
that when
3,000 or
people
4,000
call us,
miles
they
a
shift to
year,
us. You're going,
and at
you're
the
going to
same
get
time
terrible
earn a
underwriting results.
significant
So our
underwriting
systems
profit indicates
our
that
underwriting
our selection
criteria
process have been
is working
developed
quite well. I mean,
over
if your
many
selection
decades.
processes, we have a
Is
huge
wrong.
number
If
of
you
policyholders.
treat a
16-year-old
so that it
male
becomes
and
very
give him the
credible
same
these
rate
different underwriting
that you
cells
give a
and
40-year-old that's
everybody
driving
in the
their car
business
3,000 or
is trying to
4,000
figure
miles
out
a year.
ways to,
You're going to get terrible
predict with
underwriting
greater
results. So
accuracy
our
the
systems
possibilities that
a given individual
our underwriting
have an accident
criteria
and
been developed
Progressive is
over many
focusing on
decades.
this. We have a huge number of
snapshot
policies,
approach,
and so that
we
it becomes
we
very
watch it with
credible.
interest,
These
but we're
different
quite happy
underwriting
with the present
cells.
situation.
And,
Warren, now that you're
everybody
on
in the business
Twitter
is trying to
and the
figure out
SEC
ways
is
to,
allowing companies to make material
predict with
announcements
greater
over
accuracy
social
the
media,
possibilities
what are the
that a
implications for
given
Business
individual will have
Wire,
an
a
accident.
unit of Berkshire?
And,
by the way,
Progressive is
what are you
focusing
doing on
this,
Twitter?
Snapshot approach, and
I haven't figured that last one out yet.
we watch it with interest, but we're
The,
quite happy with the present situation.
No, I
Warren,
think it
now
is a
that you're on
mistake.
Twitter and the
some
SEC
companies
is
have
allowing
announced-
companies to make
made
material
important announcements on
announcements
web
over
pages, and
social media,
in certain cases they've
what are
messed
the
it up
implications
and,
for Business
caused
Wire,
a fair
a
amount of
unit of
trouble.
Berkshire?
But the key
and by the way, what are you
disclosure
doing on Twitter?
is accuracy and simultaneity.
I haven't figured that last one
If-
out yet.
If we own the stocks or thinking
No,
about
I-
owning stocks,
I think
we
it
want
is
to
a
be very
mistake
sure that
some
we get
companies have announced accurate information, and we get web pages.
Exactly.
In certain cases, they messed it up, and because Paramount Trouble does a magnificent job of that. And to disclosure, I do not accuracy and simultaneity. Buying Wells Fargo will say if we own or selling it, whatever it may be. Thinking about I do not want to have to keep hitting up to their web page or something. We get accurate information, and hoping that I'm not 10 seconds behind someone else if there's some important announcement. So, Business Wire does a magnificent job of that. It's got a terrific record. I do not accuracy and of getting the information every part of the globe or selling it, whatever it may be. I do not want to have to keep hitting up to their web page or something. That is the key to disclosure, and hoping that I'm not 10 seconds behind someone else if there's some important announcement. I don't think anything has come close to doing that. Business Wire, as well as Business Wire, terrific. So I think we will have accuracy do very well. We've got a sensational manager and Kathy information every part of the globe. I couldn't be happier with the business. So we will simultaneous manner be selling it. And if I could clone Kathy, that is the key to disclosure. And I think I don't think that I will not. I don't think anything has come close to doing that. It puts out its information as well as we like to put it out. Actually, after the market closes, do very well. We've got a sensational manager and Kathy. A terrible mistake to have people trying to figure it all out. I couldn't be happier with one or two pages. So we will not announcement. We will not be selling it. And if anything important from Berkshire or any of our companies, I will not going to come out on Business Wire so that people get. And it puts out its information at exactly the same time. We like to put it out actually after the market closes because we think there's so much.
Well, it's very hard for me to know anything about Twitter when I'm avoiding it like the plague.
Figure it all out in reading a 1 or 2 page. He sent me out the venture in it, and he's going to see anything important from Berkshire or any of our companies is going to come out on Business Wire. Okay, we now have a short seller at exactly the same time. Charlie, first. I believe it, anyway.
Well, it's very hard for me to know anything about Twitter when I'm avoiding it like the plague.
I look forward to playing the role of Daniel in
he
the
sent me out
Lion's
the
Den in
venture
front
in
of
it, and he's going to see if anything bad happens to me.
your closest friends and greatest admirers.
You can bring your own crowd. Okay, we now have a short seller.
I wouldn't know you have me asking the last question.
I believe it, anyway.
Thanks for this unusual invitation. Size matters. I'm honored, and I look forward to playing the role of Daniel in the Lion's Den in front of 45,000. In the past, Berkshire's purchased cheap and greatest admirers. For example,
you can bring your own crowd next year.
Mid-American, your initial purchase of Coca-Cola. I would note, arguably, your company has shifted to becoming a buyer of pricier and more mature businesses. Size matters. Is Berkshire morphing into a stock that has become to resemble an index fund?
There's no question
in the past,
that we cannot
Berkshire's purchased cheaper wholesale.
We did in the past, and size is a factor. Actually,
Coca-Cola.
It depends on the nature of
and
markets,
arguably,
too.
your company has shifted to becoming a buyer of pricier
there will be
and
times
more
when
mature
we'll run
businesses.
into bad markets,
Is
and
Berkshire morphing
sometimes there our
into a
size
stock
can even be an advantage.
That has become to resemble an
it may well
index
have
fund.
been. There's no question that we cannot do as well as. But there, we did in the past. I would take exception to a factor to the fact that it depends on the nature of markets too. Fancier prices in some cases than say in Geico. I think there will be times when we'll run into bad times earnings, and sometimes there our size can even be an multiple of book value. It may well have been in 2008. Partly at Charlie's urging. We paid up for good businesses. I would take exception more than we would have back 30 or 40 years ago. But it's tougher as we get fancier prices, and we've always known that would be the case. In Geico, I think we paid but 20 times earnings, even with some diminution, fairly size multiple of book value from returns of the past. So we still can be satisfactory. Partly at Charlie's urging, we paid up for good businesses. More than we would have 30 or 40 years ago. But it's tougher. There's companies we should have bought 30 or 40 years ago. We've always known that would be the case. Looked higher priced then, but we now realize even with some diminution, paying up for an extraordinary businesses from returns of the past, they still can be satisfactory. Charlie, what was you saying?
Well, we've said over and over again to this group that we can't do as well.
There's companies we should have bought 30 or 40 years ago that
in the future as we did in our early days.
We now realize that.
But I think I can make the short seller's argument even better than he did.
It's not a mistake.
And I'll try and do that.
Charlie, what was you saying?
You look at all the companies that got really big in the past history. We've said over and over again to this group the record is not all that good in percentage terms. Stop to think about it. in the future as we get in our early Standard Oil is practically the only one. But I think I can make the short seller's argument even better. After he got monstrous, continued to do monstrously well. And I'll try and do that. So you look at all the companies that we think we're going to do pretty well in the past of getting very big. We're telling you record is not all that good. We think we'll do a little better than the giants of the past. Rockefeller Standard Oil got a better system. The only one. We don't have a better system. After it got monstrous, continued to do monstrously well. We have a better system than most other people.
Yeah,
when we think we're going to do pretty well in spite of getting very big.
5 years, I think we feel pretty good about those, and overall,
we think we'll do a little better than the giants of the past.
We are buying some very good
businesses. We got a better system. We don't have a better system than writing up oil.
As we pointed out, we own
but we have a better system than most other people.
Would each be on the fortune. In terms of the acquisitions we made in the list, if it was a separate company, 5 years, I think a few months we'll own half of another one. So overall, 8.5, obviously, including the Heinz. We are buying some very good businesses. Well, you haven't convinced me yet to sell the stock, Doug, but keep working.
What would be the effect on the U.S. and the world economy if the dollar loses that status as a world reserve currency?
500. Well, I don't know the answer to that, but a few months we'll own half of another one, so it's going to be relevant. I think the dollar will be the world's. Well, you haven't convinced me yet to sell the stock, Doug, but keep some decades to come. I think China and the United States will be the two super economic powers.
If the dollar loses that status as a world reserve currency?
I think it's extremely unlikely. Well, I don't know the answer to that. Any currency supplants the U.S. dollar as it's going to be relevant currency for many decades. The dollar will be the world's reserve currency for some decades to come. I think China and the United States will be the two super economic powers. But I don't see any. I think it's extremely unlikely that any currency supplants the U.S. dollar as the
England had a
currency
better hand when it had the reserve currency of the world than it had later when the United States had advantages to a country that has the reserve eventually happened currency to the United States. It would not be. If you lose that, you lose some advantage. It's in the nature of things that better hand when it had the reserve currency of every great leader world, and it is no longer the leader. And later, when the United States, over the long run, as Keynes said, we're all dead, and over the long run, eventually happened.
This is the cheery part of the section.
The United States, it would not be. Well, if you stop to think about it, every great leading civilization of the past, it's in the nature of things that.
What do you think the probabilities are that
every great leader,
U.S. dollar will not be the reserve currency
over the long run? As Keynes said, we're all dead, and reserve currency over the long run.
This is the cheery part of the section.
That doesn't mean that it's forever. Well, if you stop to think about it, every
you have to be wildly optimistic to believe that corporate profits as a percent of GDP can, for any sustained period, hold much above 6%.
Oh, I think it'll still be.
Corporate profits are now greater than 10% of GDP.
That doesn't
How
mean
should
that
we think
it's
about
forever.
that?
Well, we should think it's pretty unusual,
you have said
and particularly
you have to be wildly optimistic to believe that corporate profits as a percent of GDP can, for any sustained period, hold much above 6%.
At least looking back
corporate profits are now greater than 10% of GDP. How should we think about that?
Well, we should what's interesting about it, of course, is particularly considering the economic backdrop, to a great extent, is complaining enormously, or frequently extraordinary, about the level of the corporate income tax. And percentage income tax, at least looking back on, is on about half the history of the United States 40 years ago as a percentage of GDP. Yet, as you point out, what's interesting about it, of course, is an all-time record as a percentage of GDP. American business, I would, to a great extent, is complaining enormously, complain frequently in businesses non-competitive about the level of the corporate income tax. Now, the corporate income tax rate, which is about half so widely complained about 40 years ago as a percentage of GDP. American business has done corporate profits are extraordinarely well, an all-time record as a percentage of GDP. So I would, when inequality actually have you take with a grain of salt, widened considerably, both measured complaint that American business is non-competitive because of our people down below corporate income tax rate, which gets so widely complained about. And American business has done extraordinarily well. It will be interesting when inequality actually to see whether these levels widen considerably, both measured by net worth can be maintained. Corporate, if you take the top versus businesses come back very, very strong in terms of profits. One of the from and the precipice that we were on in the fall of 2000. It will be interesting to see whether these not come back the same way and can be maintained. Corporate. That's businesses come back very, very strong. I would say a subject in terms of profits. A lot of public discourse, and you're reading more about that. The precipice that we were on in the fall of 2008. I had to bet panic on whether corporate profits would be 10%. Employment has not come back. GDP, and of course we're talking about profits that are earned outside the United States. That's going to be, I believe in that. I would say a subject of a lot of public discourse. You're reading more about that, but currently I think that of course GDP will be growing. So I had to bet any terrible things on whether corporate profits would be 10%. Charlie, what do you think about the GDP? And of course we're talking about profits that are earned outside the United States.
That 6%
I believe in that
figure turned out to be a
quote
on the low side in the estimate. Just because Warren thought something 20 years ago.
Trend downward, but I think that, of course, GDP will be growing, so that does not mean any terrible things will be happening. We'll talk this over at lunchtime. Charlie, what do you think about that?
Well, I wouldn't
How do you feel
be
about
10%? If that 6%. Well, I'm a natural figure turned out to be on such items on the low side in the estimate. Just because Warren thought something 20 years ago. Stocks themselves doesn't mean it's a law of nature. Owned by a lot of endowments and pension funds and so on.
We'll talk this over at lunchtime.
That figure doesn't mean that.
How do you feel about 10%?
The world's becoming grossly. Well, I'm a natural equal conservative on such items. There's no automatic correlation. You recognize that between those two stocks themselves are.
You feel the corporate tax rate is too high?
Endowments and pension. Well, I think when the rest of the world is. That figure doesn't mean down. The world's becoming disadvantaged to us if we're much more unequal. So there's no automatic correlation between those two figures.
You feel the corporate tax rate is too high?
I rather like Warren's idea that people like, well, I think when the rest of the world is us should pay more, but the corporate tax rate I'm glad to have lower. There's some disadvantage to us if we're
okay. He's the Republican, I'm the Democrat.
You probably have a couple of dozen direct reports from the multitude of non-insurance businesses that Berkshire owns, and this arrangement seems to work wonderfully for you. But I wonder if this could potentially pose a challenge to your successors. How do you weigh the benefits of adding earnings with the risk of leaving a less focused and harder to manage company for even highly capable successors? You probably have a couple of dozen direct reports from the multitude of non-insurance businesses that Berkshire owns, and this arrangement seems to work wonderfully for you. But I wonder if this could potentially pose a challenge to your successors. How do you weigh the benefets of adding earnings with the risk of leaving a less focused and harder to manage company for even highly capable successors?
Yeah, I think my successor will probably organize things a little differently on that, Jonathan, but not dramatically units, so, and we'll certainly never leave an assistant of mine. And my guess is that of our CEOs that running their businesses, and my successor virtually all important ways, will modestly, except for capital allocation, but organize things in a somewhat different way. I've grown up with these companies and with the people and everything. Delegated, so it's a lot easier for me to an assistant of mine, and my guess is that managers sometimes very infrequently. My successor, they don't need it. It just modestly, it's their own preference to some degree. Organize coming in fresh, somewhat different way. I've grown up with these companies and with the people and everything, and to understand very well. It's a lot easier for me to communicate very well the major units managers. But you're right, when you get sometimes very infrequently because they don't need it. We have some business their own preference to some degree. Only 5 or 10. And somebody coming in fresh, $1 million a year, something like that, and would want, my guess is that it gets rearranged a little bit, but that very really make any difference. And that person will understand that, understands now. The real very well the major units, but you're right, when you get down to units and the insurance business. And we have some businesses a little change in only 5 or 10 reporting arrangements, $1 million a year, something like that. Person at headquarters. My guess is that it gets rearranged a little bit, but that won't really make any difference. I mean,
well, I think, of course, it would be
the real money
unwieldy to have so many businesses.
Continue to be made by the big
a lot
businesses,
of them small.
And the
if we were trying to run them through an imperial
a little change in
headquarters that dominated all the
reporting
details.
arrangements, maybe.
But our system is
maybe
totally
one
different.
More person at headquarters.
If your system is decentralization almost to the point of
really
abdication.
take care of things. Charlie?
What difference does it make? Well, I think, of course, it would be unwieldy to have so many businesses.
It's working pretty well now. And it'll work pretty well
if we were trying to run them through an imperial headquarters that dominated all the details.
The mistake.
But our system is totally different.
The culture will remain.
Your system is decentralization almost
and the preeminence
to the
of the
abdication.
managers of the operating units will remain unchanged. And then every now and then something comes along and a change needs to be made. It's working pretty well now. And it'll work pretty well after death or disability. But sometimes my successor mistake is made. I got to do with things identically, but the mistake in the end. But the culture will remain unchanged. We're now trying to, and the preeminence of the managers that are at least of the operating units, $75 million remain unchanged. And then every now and then something comes along and a change. The best acquisitions, sometimes it's some extent the best acquisitions, death or disability, or certainly from my standpoint, makes it easier. Mistake is made. There's these bolt-ons that I talked about in the annual report, in which we did, I think, $2.5 billion worth of last year. We're now trying to, because they fall under the companies that are purview of the $75 million managers that we've got terrific confidence. Incidentally, the best nothing to what happens at headquarters, and of course, some extent the best bolt-ons of all, certainly from my standpoint, makes it easier. Is the one there's these bolt-ons that I talked about minority interest when we buy $2 billion worth, I think, more of ISCAR worth of last year. Because they fall under the purview of with another $1.5 billion managers that we've got terrific confidence in, and they add nothing to what happens at headquarters. And of course, the best bolt-ons of all, those are the ultimate in bolt-on acquisitions. We do getting more of a good thing. Buy out a minority interest when we buy $2 billion worth more of ISCAR or $1 billion.
You just have to think about it.
And a half more of Marmon.
If we're all that difficult, what we're doing now would be impossible.
To come in the next year. That's adding earning power. Without it, to think about that a little, posing any more work. Those are the ultimate in bolt-on acquisitions.
50 years
getting more of a good thing.
20 years ago, if they said to you, can you
Charlie, any more on that,
something this size with a staff of 10 or something? You just have to think about it. Omaha. You would have thought that's we're all that difficult. What we're doing now would be impossible, and it works.
Well, we'll let it go at that.
With the Fed buying $85 billion per month of mortgage securities and treasuries, what do you think are the long-run risks to this process, and how does the Fed stop this without negative implications?
Well, Charlie, you answered that yesterday in an interview,
and it
so
works.
I'll let you lead off.
My basic answer is I don't know.
Well, we'll let it go at that.
With the Fed buying $85 billion per month of mortgage securities and treasuries, what do you think are the long-run risks to this process, and how does the Fed stop this without negative implications?
The questioner is right.
Charlie, you answered that yesterday in an interview, so I'll let you lead off. Yeah, it is really uncharted territory.
The basic answer is I don't know.
As many people say, I have nothing to add. Hunt Brothers buying silver or whatever it might be. It's a lot easier to buy things sometimes than it is to sell them. But Scott, you came from Oberlin, so we'll do our best. The Fed's balance sheet is up around
the questioner is right to suspect that it's
$3.4 trillion now. And it is really uncharted territory. And those are a lot of securities. And the bank, as many people have found out, whether it was the Hunt Brothers buying silver or whatever it might be, it's a lot easier to buy things sometimes is to sell them at the Fed, earning 0.25%. Really earning nothing. The Fed's balance sheet is up around expenses. So $3.4 trillion now. And liquidity that's been created. Those are a lot of securities, and the bank market because reserve positions are incredible. The banks have let us sit. Wells Fargo is sitting with $175 billion. At the Fed, how you use the economy and you pushed it out, and really earning nothing after by having attendant expenses. So buy securities and create reserves for the banks and all of those things. Liquidity that's been created. Believe me, the banks want loans. I mean, they are not happy because Wells is not happy having $175 billion. The banks have let us sit there. looking at in classical economics, they get it out. That's how you juice the economy. And you push it out so that they hope to get it back from whoever they get out to, which Fed buy securities and create reserves for the banks and all of those things. We really are in uncharted territory. I've got a lot of faith in Believe me, the banks want loans. I mean, they are not happy. If he's running a risk, not happy having he's running a risk billion at the Fed. He knows, understands, looking every place they can. I don't know whether he's affected by the fact that proviso that they hope to get it back, so he just hands it out to which baton off to the next guy times and said, "Here, but here's this wonderful balance sheet." We really are in uncharted territory. I've got a lot of faith in Bernanke. $1 trillion, and he. If he's running a risk, a few lectures running a risk Washington University last year, if you care to read them, maybe it'll help you. I don't know whether he's affected by the fact this is term expires very soon, so he just certainly has the baton off to the next guy and said, here's this wonderful balance sheet, and all you have to do is bring it down a few very inflationary. It hasn't been so far. In fact, my guess is, and I gave a few Fed lectures at George Washington University last year, if you cared to read them. If you're running up a lot of debt, it gets measured. This is something we haven't seen in relation. It certainly has to nominal GDP, and the best way to run up, easiest way to run up, not the best way, the easiest way to run up nominal GDP. It hasn't been so far. In fact, my guess is the Fed wishes it had been a little more inflation. They never would admit it, but if you're running up a lot of debt, at least some Fed members are probably disappointed that in relation they haven't seen more inflation to nominal GDP. It won't be when they start selling. The best way to run up. Easiest way to run up, not the best way. The market, the easiest way to run up nominal GDP kind of a signal inflate. And my guess is that they never would admit it, but the buying ends, maybe that selling will take place. But at least some Fed members likely to be the shot heard around the world. Now that doesn't mean they haven't seen more inflation, but it will certainly mean that it won't be when they start selling loans. It'll be securities, and who's felt when the market gets driven into them any by kind of a signal low rates, or that the assets have to go up in price because interest buying rates are so low, maybe that selling will take place. Reevaluating their hand. It's likely to be the shot heard around the world. Now that doesn't mean the world will come to an end. But while I've been talking, Charlie, have you everybody that owns securities and who's felt
well, generally speaking,
they've been driven into them by extremely low rates, or
what's happened in
assets have to go up in price because
macroeconomics has surprised all the people who thought they knew the answers.
We'll start reevaluating their hand, and people reevaluate very fast
that
in markets.
Could go so low and stay so
while
low
I've been
for
talking,
so long,
Charlie, have you
or that Japan, a mighty powerful nation, well, generally speaking, could have 20 years of stasis. What's happened using all the tricks in the economist's bag, macroeconomics, has surprised all the people who given this they knew the history, namely the economists ought to be a little more, who would have guessed that interest rates, believing they know exactly how to stay so low for so long, and they print money, or that Japan, a mighty powerful nation,
a huge experiment,
could have 20 years of stasis after using all the tricks in the
What do you think the
economist's
probabilities
bag.
are that within 10 years you see inflation
given
at the rate
this
of 5%
history,
or higher a year?
The economists ought to be a little more cautious. I worry about believing they know exactly how to stay out of trouble when they print money in massive amounts. If we could get through the next century with the same
huge experiment,
results we had in the last century, which involved a lot of inflation.
What do you think the probabilities are that within 10 years you see inflation
all be
at the
quite
rate of
satisfied.
5% or higher a year?
I suspect it's going to be harder, not easier. Well, I worry about even more than inflation century, and it wouldn't surprise me. I'm not going to be here to see it, but if we could get through the next century, I would predict the same results we had in the last century, which involved a lot of inflation. We think over that long period.
Charlie says he won't be here to see it, but I reject such defeatism.
I suspect it's going to be harder, not easier.
How has the Fed's zero-interest policy affected Berkshire Hathaway's various business segments?
I'm not going to be here to see it, but
well, it's helped.
I would predict that
interest rates
may have more trouble than
are to asset prices, sort of like gravity is to the apple. Charlie says he won't be here to see it, but I reject such defeatism when there are very
How has the
low
Fed's
interest rates.
zero-interest
There's a
policy
very
affected
small
Berkshire Hathaway's
gravitational
various
pull
business segments?
on asset prices. Well, it's helped. We have seen that it getting played out. Interest rates people make different decisions to asset prices when they can borrow money gravity is to the apple than they made back in 1981 and 2 when Volcker was trying. There are very stem inflation, low interest rates. There's a very small gravitational pull. Government bond rates got up to 15%. We have seen that getting played out. I mean, people in the economic make different decisions universe, and they can borrow money for practically nothing than they made back in 1981 and 2 when Volcker was trying to purchase a lot cheaper stem inflation and used 10 or 15 years ago. So that does affect bond rates got up to 15%. So pay. So it's interest rates power every factor, and of course in the economic universe. Presumably they have some effect at some point. As Charlie's pointed out, borrowed the money changed for decades. On the Heinz purchase, a lot cheaper than we could have borrowed it. If you wanted to inflate asset prices, so that does affect bringing down interest rates and keeping them down. At first, nobody believed they'd stay on the very long. Factor, and of course, it reflects. It will. Presumably, the permanence that people feel change at some point, although will be attached to the lower rates. But when you get the 30-year bond down to 2.8%, so if you wanted to inflate asset prices, you're able to bringing down interest rates, have transactions, keeping them down. At first, nobody believed they'd stay on there very long. So it's been a very smart policy. The permanence, the unwind of it. Will be attached to the lower rates. But when you get the 30-year bond down to 2.8%, then it was very easy if you're the Fed. You're able to buy $85 billion a month. Transactions take place. It makes houses more attractive. And it's been a very smart policy. But the unwind of it, $85 billion. Now, when it's got to be more difficult reserves there by far than buying. I mean, it's very easy. Be a lot easier than if those reserves had already been deployed out into the real economy. Then you would really be tightening things up. But I don't know what would happen. This is like watching a good movie as far as I'm concerned, because I do not know the end. Now, when you've got, and that's what makes for a good movie. So reserves there that we will be back here next year, and I will. It might, or maybe certainly be a lot easier than if those reserves have already been deployed. So out into the real economy. Then Charlie, really be tightening things up.
Well, I strongly suspect that interest rates are
this is like watching a good movie as far as I'm concerned, because I do not know the end. And that's what makes for a good movie. So
everybody has been very surprised.
We will be back here next year, and I will. Or maybe in 2 or 3 years, and I will tell you I
seemed impossible.
Told you so, and hope you have a bad memory. Charlie?
At Berkshire, I strongly suspect float in the insurance rates going to stay this low, and our incremental float hugely extended huge amounts of cash. But as I pointed out, is worth less than everybody has been very surprised by what's happened, and that. Because what happened, some share to you people seemed impossissible. If that changes, we may get an advantage. Not very long ago.
Yeah, we have 40 at the end of the.
At Berkshire, of course, we got this enormous float in the insurance business.
We had whatever it
was,
our
incremental float when we're carrying
9 billion or something like that.
Is worth less than it was.
Short-term securities. We're earning basically nothing on that. And we do not.
I suppose
we never stretch for yield in terms of.
If that
commercial
changes,
paper
we may get an advantage.
Brings 10 basis points more than Treasury. Our money. First quarter, we don't count on anybody else, so we keep it in treasuries basically, and so we're earning nothing on that or something like that. So if we get back to an environment, short-term securities, we're earning basically nothing on that. We do not have the same amount. We never stretch for yield in terms of annual commercial paper tax brings 10 basis points more than Treasury. Our money, but of course it would have lots of other effects. We don't count on anybody else, so we keep in our business treasuries basically. So we're earning nothing on that. So if we get back to an environment, and the country has benefited significantly, rates are 5%, we would still have the same amount. That would be a couple $1 billion of annual in the last few years. Tax, and that if they can successfully, but of course it would have pull off a reversal of this without getting a lot of surprises in our business. We'll have all been a lot better off. We have benefited. Cliff, incidentally, you ran a 240 significantly, year, didn't you, in the marathon? And the country has benefited.
I ran the Lincoln Marathon after the shareholder meeting.
We've got incredible talent on this. What the Fed has done in the last few years.
I wanted to ask you more about the commercial insurance business of Berkshire's interest. If the business is attractive, why not make an acquisition? Do you think that public company valuations are too high?
Cliff, incidentally, you ran there aren't too many commercial operations that we would want to acquire. Big ones. It wouldn't do much. We've acquired when we acquired Guard Insurance, it's workers' compensation, but it's just
I wanted to ask you more about the commercial
acquisition. It's a good acquisition, but
if
that
the business is attractive, why not make an acquisition?
Commercial underwriter that
we think that
we acquired
company
last
valuations
year.
are too high today.
But there aren't too many commercial operations that we would want to acquire. Big ones. Some of them wouldn't do much. I mean, we've acquired. There's a couple that we've got insurance. It's workers' compensation. The price is station, but it's a small acquisition. Probably far higher, but that is, I think, we might be able to develop a comparable operation that I mean, we acquired like last year. I think we're going to build a very large commercial operation. And essentially, we build it with book value. There's a couple that we would. And we pick up no bad habits of other companies, at least we hope we don't. And probably far higher than what we think we might be able to develop a comparable operation. Build and buy, if you can find the right people. I think we're going to build a very large commercial operation in the business. And essentially, we build it with book value. And terrific manager, and we pick up no bad habits of other companies. Other people have sought him out. So it's really better to build than buy. If there are certain commercial operations that we could have bought them at the right price, we'd have done it with the right mindset and everything in the business. We've not been able to do that, so we will build our own. And I predict a terrific manager, obviously, in a G. We will have a good and other people have sought him out commercial insurance operation. So I think in a relatively short time, I think.
And I had a question for you regarding
commercial operations that we could have bought them at the right price,
currency such as Bitcoin.
But we've not been
able
to do that.
So we will build our own and like that. Showing up in the last few years is that,
Charlie, I hope you know something about this subject. Good or insignificant.
I know what he's talking about.
Commercial.
I know what he's talking about, but I just don't. I have no confidence whatsoever.
And I had a question for you regarding unregulated digital currency such as Bitcoin.
That would certainly be my gut reaction, but I don't.
I was wondering what you think the significance of something like that.
I'll put it this way: our 49 billion is. I hope you know something about this subject because I don't know a thing.
I know what he's talking about.
I know what he's talking about, but I just don't know.
I have no confidence whatsoever.
The truth is, I don't know anything about it. That doesn't always stop me from talking about things. That would certainly be my gut reaction.
Bill Ackman, the activist investor, who's also a Berkshire investor as well, has raised questions in recent months about the legality of the multi-level marketing company Herbalife. He called it a pyramid scheme. Berkshire owns a multi-level marketing company too. A pampered chef.
The truth is, I don't know anything about it.
Ackman's attack on Herbalife
that doesn't always stop me from talking about things, but it will in this case.
Bill Ackman, the activist investor, who's also a Berkshire investor as well, has raised questions in recent months about the legality of the multi-level marketing company Herbalife. He called it a pyramid scheme.
Direct
Berkshire
marketing
owns a multi-level marketing
really
company
based
too,
on selling product
that would be Will Ackman's attack on Herbalife have any impact on the Pampered Chef or Berkshire?
I don't know anything. I've never in effect selling it to end users on Herbalife. So Pampered Chef is a million miles away from anything. But where I think the money is made anyway is whether by a selling to level direct marketing operation is really based on selling product that wouldn't be lots of distributors of one sort and loading them up the selling results instead of other people that they recruit. In effect, selling it to end users. And this business, a Pampered Chef, is a million miles loading up people with a couple of $100 or any package of the money is made in any way being sort of the main business. And I don't know anything about Herbalife and those people selling. I do know about Pampered Chef, sort of thing. It is true that it's not Pampered Chef's business. Pampered Chef's business is based on selling to the end selling results of other people that they recruit. But we have this business of thousands and thousands loading up people with a couple $100 a week where packages are actually going to use the product being from sort of the main business. And I don't know anything about Herbalife. They're not making the money. I do know about Pampered Chef by loading up people. That is not Pampered Chef's having them Pampered Chef's business lead the sales force based on selling to the end our profit coming from that. And Charlie, we have. I think that should be the distinguishing characteristic. If I were parties are regulating the industry, people are actually going to use the product very hard from somebody, and at operations we're not making the money by their hopes by loading up people as to earning a living by selling the product and invested their savings and buying a whole bunch of product that they didn't need themselves, Charlie. And then I think that should be sort of distinguishing characteristic. If I were abandoning regulating the whole industry, I would left with the product look very hard, and the parent operations were thousands of people got their hopes out and selling millions and millions of people earning a living by that was not selling the product, invested their savings in buying a whole bunch of product that they didn't need themselves, and then
selling
sort of being
magic potions,
abandoning the hope and being left with the product. and the parent company or the main company.
At our age, we're in the market though for any magic potions
on a
if any of
dream
you have them.
that was not fulfilled. Charlie?
Well, I think there's likely to be more flim-flam.
That's the extent of your comment, I assume, Charlie. Okay.
Much of Berkshire's returns over the last decade have been based on your reputation and your ability to extract.
At our age, we're in the market though for any magic potions if any of you have them.
In duress, as compared to the past, when you conducted yourself more as a value investor.
That's the extent of your comment, I assume, Charlie.
And conducting extensive analysis. Much of Berkshire's returns over the last decade. What gives you confidence that your successes on your reputation, imprimatur, and will be as valuable to extract remarkable deals from companies
well,
in
the
duress
successor will probably have even more capital to work with,
when you conducted yourself
they will have capital,
more as a value investor, digging and conducting
from time to
extensive
time
analysis.
When markets
what
are in
gives you
distress,
confidence that your successes
at those times very few people
will be as valuable to
few people have
Berkshire's
the capital and a lot fewer people have the successor will probably have even more capital to work. I have no question that my successor will have capital, have unusual capital from time to time, at times when markets are in distress and at turbulent times when at those times very few people the ability to say yes very quickly. Few people have very large sums and a lot fewer people have the sets you apart from virtually anybody in the investing universe. No question that my successor I would not worry about that. Have unusual capital. Successor at times when being willing to deploy capital under those circumstances. At turbulent times when and being called upon. The ability to say yes very quickly is the 800 number sums when sets you apart from virtually anybody in the investing universe. Really and sort of panic. I would not worry about that. And for one reason or another, people need significant capital. Now that's not our main business. Being willing to deploy. It happened a couple of times. Circumstances in 2008 and being called upon. I mean, it happened once in 2011. But that's not the 800 number. It's fine, and when it'll happen again. And I would think there's really, if you come to a panic in markets, the Dow for one reason or another, people need significant capital. Now that's not our main business. The tide has gone out. It happened a couple of times. Who's been swimming naked in 2008. Swimmers may happen once in 2011. They will that's not been our main business, but it's fine. Berkshire's reputation again will become even more solidified if you come to a day when willing to provide capital for sound deals for a few days. At times when most people the tide has gone out are finding out who's been swimming naked, that those naked swimmers. When that happens, when I'm not around, call Berkshire. They will call Berkshire even more the Berkshire brand, and Berkshire's reputation, Charlie, will become even more solidified.
Well, I would argue that in
terms of being willing to provide capital
huge success
for sound deals
value
at times when most people
companies
are
because his competition was so small.
And when that happens,
stayed in that field,
when I'm not around,
he would have to be in bigger companies, and his competition
and not anything
would be way more intense.
Individual. Charlie?
He's got. Well, I would argue that in the early days, a good home for big companies that don't want to be controlled in meticulous detail by headquarters, little-known companies, where there isn't much his competition was so small. I would argue that he stayed in that field, the right thing. He would have to be in bigger companies, and his competition would be way more intense. He should have stayed in. He's gotten into a field.
But we will say, I think he's probably referring to something like the Bank of America transaction,
meticulous detail by headquarters,
Goldman Sachs and GE, and
where there isn't much.
There will come a time.
So I would argue that
in markets where
he's done exactly the right thing.
I've gotten calls on other things too.
The past, but other people are not getting the call. He should have stayed in.
Well, they don't have the money and they don't have the willingness to act immediately. But we will say, I think he's probably referring to something like the Bank of America will remain with Berkshire. Goldman Sachs gone. In fact, there will come a time, the area we occupy in markets where large sums. I've gotten calls on our own. As we get even bigger.
Yeah, but other people are not getting the calls. That's what I like about it.
Well, they don't have the money and they don't have the willingness to act
during very key events,
and
like
Berkshire
the Sanborn incident,
those qualities will remain with Berkshire.
Or when you were buying Berkshire stocks,
I'm gone. In fact,
you persuaded people to sell their shares when they really didn't want to. What were your
becomes
3
more and
keys
more our own
to influencing
as we
people
get even
in those
bigger, I would
specific
say,
situations?
That's what I like about it.
You brought up Sanborn
During
and you
very
brought
key
up
events,
Seas
like the
and,
Sanborn incident, when you were buying
I don't
Seas,
think the
so when you were buying
Seas
Berkshire
family, there'd
stocks,
been a death in the Seas
you
family.
persuaded people to sell you
Larry
their
Seay, wasn't it,
shares
the
when
guy?
they really didn't want to.
He'd been
What were your
the
3 keys to
instrumental,
influencing people in those specific
I guess
situations?
grandson of Mary Seay, the operator. Brought up Sanborn and you brought
the rest
up
of the family really
Seas
didn't want to
and-
run the business.
So it was put up for sale.
I think
the Seas family, there'd been a
I
death
didn't
in
even
the
hear
Seas
about
family.
it
Until they'd had one
Larry
other
Seay, wasn't it, that
Yeah.
died?
party. He'd been the
I don't even know
instrumental
who it was.
but they negotiated a deal with and then it didn't go through.
Charlie probably
the
remembers
operator,
this better
and
than I do, but
the rest of the
we
family
certainly
really didn't want to run the business.
The Seay family,
So it was put up for
and
sale.
Charlie
Persuaded me to
and
buy it.
I didn't even hear
we didn't
about it
persuade them to sell it until they
Charlie?
had one other
We didn't
party.
buy anything from any unwilling sellers.
I don't even know who it was.
And
But
Berkshire,
they negotiated a deal.
we started
with
buying
and
that in
then it didn't go
1962
through.
in the
Charlie
open
probably
market.
remembers
It
this
had
better
quite a
than
few
I do.
shareholders.
It was
we
a
certainly,
it was
the Seay family
traded and
Charlie
actively and
persuaded me to buy it.
We bought a lot of stock.
We didn't
and
persuade
we
them
did
to
buy
sell it.
a couple of key
Charlie?
pieces. We bought one from Otis Stanton.
Yeah, we didn't
who
buy
was Seabury
anything from
Stanton's
any
brother,
unwilling sellers.
But Otis wanted to sell.
And
It wasn't
Berkshire,
the most attractive business.
we started
in the world.
buying that in
I mean, it was a textile
1962
in the open market.
It had quite a few
lost money.
shareholders.
It was a most of the previous years and over a 10-year
traded
period it had
fairly
significant
actively,
losses. And
we
it
bought
was
a
a
lot of
northern
stock,
textile
and
company.
we
So
did buy
a couple of key pieces.
we bought
one
stock in
from
the
Otis
market.
Stanton. A lot of
So
stock in the
Seabury
market.
Stanton's
We had
brother,
2 big blocks from
but
Otis
Otis wanted
Stanton
to
and
sell.
from- It wasn't the most attractive
relatives of
business in the
Malcolm
world. I mean, it
Case,
was a
but they
textile
were-
company. They were lost money.
They were
and
happy to sell.
Most
I
of the
never
previous
met-
years and over a 10-year period.
At the time
it
I
had
bought the stock from
significant
Otis Stanton.
losses. I had never met him. It was a northern textile company.
No personal
so,
sales to
we bought
the same
stock
thing
in the market.
is true of the Chase
a lot of
family
stock in the
that,
market. We had
not
two
Malcolm
big blocks
himself,
from
but-
Otis Stanton and
but
from
some relatives, they sold us
some
a block of
relatives of
100,000 shares,
Malcolm
but
Chase. But
we were not
out. They were convincing anybody. They were happy to sell.
I never
stock.
met.
At the time I bought the stock from
so
Otis
there's
Stanton, I had never met him.
very little that I can remember
Delivered no
where,
personal sales to him. And the same thing is true of
talked
the
to
Chase
Betty
family.
Peters,
Not Malcolm himself, but
avoiding
but some relatives. They
transaction
sold us
we
a block
thought
of
was
100,000 shares.
dumb.
But when Wesco
We
was
were not out
considered merging
convincing
with
anybody
Financial
to
Corp of Santa Barbara, I flew out
sell
to
their
see her
stock.
in San Francisco. But
she
so
stayed
there's
with
been-
us.
She did not
Been
sell
very
her
little
stock.
I can remember where,
and remains a shareholder
we
to this day.
we talked to Betty
30 plus
Peters
years, almost 40
about
years later.
Can you
avoiding
give all of us, and
A
particularly my
transaction we
daughter
thought
Katie,
was
who is here
dumb
today,
when Wesco was
the Peter Lynch
considered
2-minute
merging with Financial
monologue
Corp of Santa Barbara. I
explaining
flew
the
out to see
business
her
of
in
Berkshire
San Francisco.
Hathaway and its merits
But
as
she
a
stayed with
long-time
us.
investment for
She did
future
not sell her
decades.
stock.
Okay, Charlie, you
And
talk
remains
to
a
Katie.
shareholder to this day, 30
gonna have
plus
some
years,
fudge.
almost
All right.
40 years later.
Can
I'll
you
try
give
that.
all of us, and particularly
We've
my
always
daughter
tried
Katie,
to
who is here
stay
today,
sane.
the Peter
Other
Lynch
people,
2-minute
a lot of them,
monologue
like to
explaining
go
the
crazy.
business of Berkshire
That's a
Hathaway
competitive
and its
advantage.
merits as a long-time investment for future decades.
Okay, Charlie, you talk to Katie.
Number two,
I'm going to have some fudge.
as we've gotten bigger, we've used this sort of golden rule that we've always tried to say subsidiaries the way we would want other people if we were in the subsidiaries like to go crazy. And that again is a very rare attitude in corporate America, and it causes people to come to us who don't want to. Number two, anybody else. As we've gotten bigger, we've used this sort of golden rule that we want to treat the subsidiaries the way we would want to be treated if we were in the subsidiaries. Come to us and need a partner. That again is a very rare attitude in corporate America, and it causes so people are come to us who don't want to leaving behind a field that's very competitive and getting into a place that where is we're a long-term competitive unusual advantage. This was a very good partner. I wish we'd done it on purpose. Who come to us and need a partner with more money. That is a competitive advantage. And
A few years ago,
we are leaving behind
a person who's in this
field
audience,
that's very
I believe,
competitive and getting into a place where we're
came to
more
me,
unusual.
and he was
This was a very
his
good
60s.
idea. I wish we'd done it
And
on
he said
purpose.
that for about a year, he'd been thinking about selling his business. And the reason he'd been thinking about it was not because he wanted to retire.
A few years ago,
we very seldom buy business from people.
A person who's in this audience, I believe,
loved what he was doing.
came to me,
had an experience in buying
business.
He was
in his
a few
60s
years earlier, and he said
from
that
a family where he had known the fellow
for about a year,
the
he'd been
fellow
thinking
died
about selling his business,
and
the
then
reason he'd been thinking about
everything
it,
bad started happening
not
in
because
the
he wanted to
family and the
retire.
business,
And we're not
employees, everything
very
else.
seldom
So he
really wanted to put to bed the question.
loved what he was doing.
What happened with his business?
But he
had an
really
experience
cared a
in
lot
buying
about
monetizing it or having the money. He just
few
wanted
years
to
earlier
put his mind at ease.
from
what
a
he'd
family
spent
where he had known
lovingly
the fellow
building
built
up
it,
over 30
the
or
fellow
40
died,
years was not going to
get destroyed.
Everything bad started happening in the family,
family
and
would get
business,
destroyed.
and employees, everything else. So he really wanted to put to bed the question
if
what
he
happened
died,
with his business. It wasn't
he
that
said
he
he
thought
cared
about
about
monetizing it or having the money. He just wanted
he thought
he
about
wanted
it,
to put his
and he
mind at
thought,
ease.
well, if I sell it
that what he'd spent
to one of my
lovingly building up
competitors,
over
they would
30
be a
or 40
logical
years,
buyer.
was not going to get,
They usually are.
get destroyed
Destroyed.
by antitrust laws, or that his
If he
family
sold
would
it to
get
a
destroyed.
competitor,
They would come
if he-
in, and basically
if he
they would put
if he
their
died,
people in charge. They would have all these ideas
so he
about
said he thought
synergy.
about it a year.
And synergy would mean that the people
he
that
thought
had helped
about
him
it,
build the
and he
business over
thought, well,
30
if I
years
sell it
would all get
to
sacked.
one of my competitors,
And they would be a logical buyer. They usually are. Acquiring company, we have antitrust laws behind and be the conquering
if he
people.
sold it to a competitor,
and he just didn't want
they
to
would
do
come
that to the
in,
people that, and basically they
helped
would
him over the years.
They would put
And
their
then he
people
thought he
in
could
charge.
sell- he
They
might
would
sell
have
it
all
to
these
some
ideas about synergy.
private
And
equity
synergy would
firm.
mean that the people that had helped him build the business over 30 years, debt which he didn't like, would all get sacked.
And then they'd resell it later on.
And then so he would again have lost control. They might
acquire
acquire
a
a
company
company
that
would
didn't
want to have happen in the first place,
and
be the conquering
selling it to a
people,
competitor or whatever it might
and
be.
he just didn't want to do that to the people.
So when he came to me, he said,
helped him over the years.
he described this.
And then he thought he could sell, he might
he
sell
said,
it to some.
It really isn't because you're so
private
attractive.
equity firm,
But he says you're the only guy left
He sold
standing.
it to them.
You know,
They
I
loaded
mean,
up with debt, which he
you're
didn't
not you're
like.
not a competitor.
And then
you're
they'd
not
resell it later
a
on.
private
And
equity
so he would
firm,
again have
and
lost control.
I
They
know
might
I will
do
get
the same
a
thing that he didn't
permanent
want to
home,
have happen in the first place in terms
with
of selling it to
Berkshire,
a competitor or whatever it
and that
might
the
be.
people that have stayed with me over the years.
So when he
will
came to me,
continue
he
get
said
opportunities, and
he described this. They will continue to work for me.
And
And
he
I'll
said,
get to keep doing what I love
it
doing.
really isn't because
And
you're
I
so
won't have to worry about what will
But he says
happen
you're the
if
only guy left
something
standing.
happens.
You know, I mean, you're not a competitor. You're not
for Berkshire,
a private equity firm,
and
I know I will
our
get a
competitive
permanent
advantage
home.
is we had no competitors
with Berkshire,
and
I think
that the people that have stayed
well,
with me over
we
the
will
years
see more of that.
continue
We've
to get
seen a lot of it over the
opportunities,
years.
and we'll see more of it. They will continue to work for me, and I'll
Sure,
get to keep doing what I love doing.
I don't think
and
you
I won't
mentioned
have
the
to
fact
worry
that
about what will
developing
happen
a
if
shareholder base,
something
so
happens
that's
to me
different.
tonight. You know,
We do look at
wonderful
wonderful
acquisition
partners
for
in-
Berkshire. You know, it's not something that a
And
public relations firm wrote
our
for us.
competitive
Anything of the
advantage
sort.
is
we
we
want
want
you to get the
competitors.
same result. We
I
try
think-
to demonstrate that in every way
Well,
we can.
we will see more of that. We've
About
seen a lot of it
Burlington
over the
Northern's
years.
two energy
We'll see more of
franchises,
it.
coal and crude.
Charlie, anything?
Given that
And
coal-fired
I don't think
generation
you
is
mentioned
in
the fact that
gradual
developing
structural
a shareholder
decline,
base, too,
can you
that's
discuss
different.
whether the
Yeah,
tracks,
we do
locomotives,
look at
and other
shareholders as
assets
partners, and
used to
you know,
deliver
it's not
coal
something that a
can be
public relations
redeployed
firm wrote
equally
for us or anything
profitable
of the sort.
serving other customers?
We want you to get the
Are
same
those
result.
assets fungible?
We
Can
try
you
to
also
demonstrate that in
discuss
every way we
whether
can.
crude by rail can continue to grow even as pipelines are built to serve the Bakken, and as given that coal-fired generation is in gradual structural decline, can you discuss whether the tracks,
There was no coal
locomotives,
moving.
and other assets used to deliver
we would
coal
not find a
can
lot
be
of use for some of the
redeployed
tracks
equally
we have. There's no
profitable
question
serving
about
other
that.
customers? Are those assets
so,
fungible? Can you also discuss whether crude by rail can continue to
I think
grow
what you're talking
even as
about would be
pipelines are built to
very
serve
gradual,
the Bakken, and
over
as the
time. But, I mean,
currently
the
large
outlook for coal is not
geographic
the same as
spreads
the
in crude
outlook
prices
for
potentially
oil.
narrow?
A lot of there was no coal moving in terms of the year-by-year fluctuations may depend
would
on
not
the
find
price
a lot of
natural
use for
gas
some of the
because,
tracks we have. There's no question about that.
Some of the generating capacity can go in either direction. I think what you're talking about
oil,
very gradual.
The view a few years
over
ago
time,
was that
but I mean,
there might just be a
outlook
little
for coal is not
blip
the same as the outlook
in terms of rail
for oil. A lot of the coal transportation, the year-by-year fluctuations may depend on the price of natural gas.
I've talked to some
oil producers,
the largest up
some
there.
in the Bakken,
Some of the,
generating capacity
there will
can go in
be
either direction.
a lot of rail usage.
In terms of oil, I think the view
For
a
a
few
long
years
time
ago
ago
was that
increased
there might just be a
rail
little
usage
blip.
in
Oil
terms
moves a
of
whole
rail.
lot faster, incidentally, by transportation than it does by pipeline. But most people have. I've talked to some oil producers, the largest up there, in the conception that I think there will be a lot of rail usage flowing at terrific speeds through pipelines for a long time. In fact, it's increased sideline someplace. Rail usage, but it's just the opposite. Oil moves a whole lot faster, a lot faster. by rail than it does by pipeline. With most different market prices and different refinery situations and all that. There's a lot of flexibility conception in the oil. And the oil is transportation by rail, flowing at terrific speeds through
the two franchises
pipelines. The rail
really
cars are
different.
sitting on the sidelines
That's just the way
someplace. But it's just the opposite.
is laid out.
You can move
we
oil a lot
expect the
faster.
coal franchise
and
to basically
with
stay about where it is
different market
today,
prices
on,
and different
natural
refinery
gas prices
situations
as well
and all
as
that.
what happens with
There's a lot of
EPA.
flexibility.
Our crude by rail,
oil,
right now we have about 10 loading stations
transportation
in the
by
Bakken
rail.
with about 30 destination stations. The two franchises are currently in negotiation. That's about another 30 destination stations. So it's really an exciting time. Right now we're handling about 650,000 barrels it is today, crude today. I think we'll be at 750 by the end of this year. And we by rail, right now we have about 10 loading stations.
When you think of the whole country,
with about 30 destination
5 million barrels a day.
Currently in negotiation,
that is
looking
a
at
lot of
about
oil.
30
And of course, it isn't just the Bakken.
So it's really an exciting time. Right now, we're handling about 650,000 barrels of crude a day.
Over time.
We think we'll be at 750 by the end of this year, and we see a pathway to 1 million to 1.4 million.
When you think of the whole country
at 15%.
producing
I noticed
5
that
million
note
barrels a
comes due
day
in
not long ago.
2014.
That is a lot of
What are
oil.
your plans
And of
or
course, it isn't
thoughts,
just the
once
Bakken.
that investment comes due?
The shale developments. Well, what we'd like to do is not answer the mail. Open up a lot of things over time. Just let them keep paying us 15%, but that won't happen.
Investment in Harley-Davidson.
Those
with a
were
5-year term at 15%.
we had a few private transactions
that note comes due
during
in
a period when the corporate
2014.
bond market was basically
What are your plans
frozen
or thoughts once
and
that investment comes
received
due?
unusual terms. Well, although the best do is not answer the mail, obviously could obtain at that
keep
time.
paying us 15%,
And those
but that
deals
won't
are
happen.
coming due, and I wish the 5-year deals had been 10-year deals. But we had a few private transactions. Those were during a period when the corporate bond market was basically frozen. In effect, that's a depleting asset. Received unusual terms that's left over. Although the best terms those companies obviously could we won't see anything like that for a while, but those deals are coming due, and I wish the 5-year deals had been 10-year deals in the future. I mean, the world is given to excesses. That was a special time. They have consequences, and in effect, that's a depleting asset. We are always willing to act. I mean, we did not think Harley-Davidson was 5 years ago going to go broke. I mean, it was that simple. We won't see anything like that for a while. Any kind of company that gets similar its customers to tattoo ads on their chest, the world is given to excesses, and they have consequences. But it will be a sad day when the Harley-Davidson notes mature. Harley-Davidson was going to go broke. I mean, it was that simple.
This question comes from Andishi Tazush, who asks, if Todd
any kind
Combs
of company
and Ted
that gets
Weschler, if they purchase
its
stock in a
customers to
company
tattoo ads
that
on their
you
chest
have reviewed
can't be all
before
bad,
and
you
did
know?
not believe to be a good investment, would you share your thoughts with them?
I would probably not know. But it will be a sad day when the Harley-Davidson notes mature. A month after they started. They do not check with me
comes from Andishi
before they buy something. I gave them each another $1 billion on March 31st.
If they purchase stock in a company that you have reviewed
I do not
before
know
and did
whether
not
they've spent the
believe to be a good
billion or
investment,
whether
would you
which
share your
stocks
thoughts
they
with
bought.
them?
Now I will see. I would probably not know on portfolio sheets. They were even buying it until maybe a month after they started. They do not check with me. Before they buy something. I gave them each another $1 or $2 billion on March 31st on in terms of, and I do not know, for example, they spent the $1 billion or whether we own which stocks they bought. A chunk of American Express. Now I will see it under the bank holding company law. We would not be allowed to buy another share. So there's a couple of things like that. I get a monthly restrictions they have, but otherwise they have no restrictions on their investment. What they buy. 1 or 2 things they've bought things I wouldn't buy. On in terms of, I buy things they wouldn't buy. That's for example, the investment process. We own. I do not tell them American Express and under the bank holding company all in one stock. Not be allowed to buy another share. So there's a couple of things like that. Put it in that 50 stocks. Restrictions they have, but otherwise. They have no restrictions. They're managing money, and when I manage money, they've bought things I wanted to be. I buy things they wouldn't buy. Agent. If people wanted to give me the money, they could make a decision where they wanted to give me the money. But once they gave me the money, I do not tell them how much. I had the responsibility for managing it all in one. I wanted free reign to do what I wanted. Put it and 50 stocks. Want to be held responsible for things with my hands tied. They are managing. That's exactly. And when I manage the money position we have with Todd and Ted now. it takes a lot of free agent. If people want to give me the money, they can make the decision where they want to give me the money. But we will give that kind of responsibility to that. And I had the responsibility for managing it. I wanted free rein, but to do what I wanted. And we thought they deserved the trust to be held responsible for things with my hands tied them. And that's exactly more than ever after the position we have with Todd and Ted now. It takes a lot of. It's an unusual person.
In addition to
that we will give that kind of responsibility to.
I realize that Geico's first quarter numbers are very good. Things are going very well at the company.
But
Progressive is claiming that the data
we thought they deserved the trust
that they're getting from Snapshot, that they can give their best drivers 30% rate cuts.
More than ever,
and those customers are still their most profitable customers.
Charlie,
we have a lot of Geico policyholders here today. I'm sure they're very good drivers.
Okay.
Why shouldn't I realize that Geico's first quarter numbers are very good. Things are going very well at the company. Why isn't Geico investing? Progressive is claiming that the data credible is profound underwriting tool and potential. They can give their best drivers 30% rate cuts, and those customers are still their most profitable customers.
Is better than ours, and
we have a lot of Geico policyholders here today. I'm sure they're very good drivers.
Better than theirs.
Why shouldn't they go try Snapshot and try to save 30% or more?
A different approach.
Why isn't Geico investing in what I think appears to be
Peter Lewis, who runs Progressive,
underwriting tool and
when he started the company, obviously Progressive disagreed. Told me the story himself. I don't think there's a tiny little company came out of a mutual company. It's better than ours, and I would say that he went in the motorcycle business. I might even feel that ours is a little bit better than theirs. He insured. But every first losses that it was reported came from some guy that was redheaded. And Peter Lewis, who runs Progressive, insured redheads for a while. When he started the company, you don't have very much money. You can't afford to experiment too long. Tiny little company came out of. Peter learned that was not a criteria, and he knew that. But he went in the motorcycle business. And the first guy all we're trying to do insured. I'm looking at all these people here. First loss that I'm going to insure came from some insurance policies redheaded. I'm going to charge different rates insuring redheads for a while. When you don't have very much money, you can't afford to experiment too long. Different rates to them. Peter learned that was not a criteria, and he knew that. But he had fun. There's a different story. But there's a different probability. All we're trying to do with I'm looking at individuals based on a whole lot of, and I'm going to issue a lot of insurance policies for next year. I'm going to charge different rates to Progressive before Snapshot. They had a different selection. Approach. I'm going to sell them life insurance. I'm going to charge, like I say, ours to them. If I'm going to sell them health insurance, I'm going to charge them very well. There's a different. We think it will continue to. There's a different probability attached. We are each individual based on our whole selection system. A lot of we are obtaining a hugely disproportionate Progressive before Snapshot. They had a different selection. New policy compared to the growth in the market. Like I say, ours so our. Rates are attractive very well, and our underwriting results we think it will continue to work well, and we are obtaining. We continue always to system. Look for further ways, obviously, we are obtaining to refine the selection technique. Disproportionate, but we don't do any of it lightly because what we're doing now is working very well, and so I just invite you to compare. Rates are attractive. The Progressive results with the Geico results in the next 2 or 3 years, and I will. We continue always wrong. I will look for further ways, obviously, to freely refine the selection technique. I don't think we will be. But we don't do any of it lightly. Okay, Station 8. What we're doing now is working very well, and I just invite you to compare the Progressive results with the Geico results.
Copy the oddball thing that every single competitor does.
I will. If we're wrong, I will.
Particularly when we've got an operation that's working so well.
Freely admit that we were wrong, but I don't think we will be. If I were starting in the direct Station 8 auto insurance business, Charlie, do you want to? I think I would attempt to copy Geico.
Well, it wouldn't
obviously
work. We're not going to.
But it would offer you the best chance.
Immediately copy the oddball thing that
it's a remarkable
every
system.
Competitor does in the world.
Tony Nicely,
particularly when we got an operation that's working so well.
We will. I hope we will. If I were starting in the policies this year, auto insurance business, the entire industry, I would attempt to copy Geico. I don't think we'll gain more than $1.5 million. So it would offer you the best chance. I think, in my view, we'll get 2/3 of all the global system, and we'll do it profitably. Tony Nicely, people a lot of money. You can't give him enough credit. That's quite a company. We will. I hope we will gain 1 million policies this year.
Focusing your energy is that you write down the 25 things you want to achieve.
I don't think we'll gain more than $1.5 million.
Choose the top 5 and then avoid the bottom 20. I'm really curious how you came up with this and what other methods you have to prioritizing your desires.
So I think well, I'm actually more curious about how you came up with it, because
I've heard that one of your ways of focusing your energy
it really isn't the case. It sounds like a very good method of operating.
Things you want to achieve. Choose the
it's
top
much more
5
discipline than I actually
avoid
am.
the bottom 20. I'm really curious how you came up with this and what other methods you have to prioritizing your desires.
Well, I'm actually more curious about how you came up with it.
I don't mean to.
It really isn't the case. It sounds like a very good method of operating.
Very simple lives.
But we know what we do.
It's much more
enjoy.
discipline than I actually am.
And we now have.
If they stick fudge down in front of me, I eat it.
I'm not thinking about
25 other design buildings. I mean,
choices. He's a. He's no longer a frustrated architect. He's a full-fledged architect now, and and we both like to read a lot.
very simple lives.
We know what we do enjoy,
and
we now have
a list
the option of doing it pretty
in
much.
my life. Charlie likes to design buildings. I mean,
maybe I'll start.
You've given me an idea.
He's no longer a frustrated
Charlie.
architect. He's a full-fledged architect now, and and we both like to read a lot.
Interesting on the subject of Warren's operating methods.
You
can see.
I've never made lists
happening here.
I can't recall making.
We didn't know
a list
when we started out this modern psychological.
Maybe I'll start.
Evidence
You've given me an idea. Thank you.
You shouldn't make
Charlie?
a lot of important decisions when you're tired, and that making a lot of difficult decisions on this subject of Warren's operating methods. And we didn't also know as well as we now do happening here how helpful it is to be consuming caffeine and sugar when we start making important decisions. This modern psychological evidence. And what happens, of course, is that both Warren and I live entirely on autopilot. Tired in terms of making a lot of difficult decisions in life is tiring. Totally habitual, so we don't. And we didn't also waste any decision-making industry. How helpful it is to be consuming caffeine and sugar, ingesting caffeine and making important decisions. And it turns out, under the modern evidence, this is an ideal way is that both Warren and I live entirely on autopilot. And in terms of he didn't know that, he just stumbled into it. We're just totally habitual, so we don't waste any
when we write our book on nutrition, we promise it to be a huge seller
on that stuff, and we're ingesting caffeine and sugar. I cannot remember an important decision that Warren has made when he was modern evidence. This is an ideal way to sit where Warren sits. And he sleeps soundly. He didn't know that. He just stumbled into it. He doesn't waste time thinking about what he's going to eat, as you say. He just
when we write our book on nutrition,
what he's always
we promise it to be a huge seller.
Oh, his style turns out to be. I cannot remember an important decision that Warren has made when he was tired. He's never tired. It looks peculiar, but he sleeps soundly. He stumbled into something very good. He doesn't waste time thinking about what he's.
You can write the forward to my next book. Okay.
What he's always eating.
They write, I'm from Omaha, and I'm thrilled you bought our newspaper as a local citizen, but not so much as an investor in Berkshire. Why would you buy such a small business since you always say you want to buy elephants?
But
please quantify exactly what rate of return you expect from the newspapers.
I would write the forward to my next book. Okay. We will get a decent rate of return.
Write, I'm from Omaha, and I'm thrilled you bought our newspaper as a
most
local
of them
citizen,
incidentally have been
but
bought,
not so much as an investor in Berkshire. Why would you buy such a small business since you always say you want to buy elephants?
Partnerships of some
Please
sort.
quantify exactly what rate of return you expect
buying
from
a Heinz,
the newspapers.
for example, or I would say that BNSF we will get a decent rate of return. They actually have a certain structural advantage in terms of the eventual return. Most of them, incidentally, have been bought because we get to, and they were either S corporations or partnerships of some sort. So that affects the after-tax return. Buying a Heinz, for example, or the pre-tax return would come from this. But I would say BNSF or something of the sort. Our after-tax actually have a certain structural advantage in terms of the eventual return with declining earnings, which I expect, because we get to would be at least 10% after tax, but I think the intangibles we're purchasing higher. I think it's very unlikely that the after-tax return that would be significantly lower return. And everything we have seen to date that our after-tax return, but we have a number of papers now with declining earnings, which I expect. would be at least a 10%. 10%
it doesn't
tax,
have.
I think
It's not going to move the needle at Berkshire.
somewhat higher. I think it's very unlikely that it's the papers we have that would be significantly lower,
getting close to maybe
and everything we have seen to date, pre-tax earnings, a good bit of which is, but we have a number of papers now, a fair amount of which indicate we get a favorable tax treatment on because they were bought from S corporations. 10%. It doesn't have, it's not going to move the needle at Berkshire. It's real money, but it doesn't move the needle at Berkshire. But it will end up being a very, I think it'll be a perfectly decent return close to maybe in relation to capital employed. Now, we wouldn't have done it in any other business, a good bit of which is, the questioner is right about that, fair amount of which we get a favorable tax treatment on. It doesn't, because they were bought from S corporations. An extra ounce, and $100 million of effort by me or Charlie. It's real money, but it doesn't move the needle at Berkshire. But it will end up being a very I think it'll be a perfectly decent return in relation to one thing I'll promise to do with you is I'll be glad to give you, the questioner is right about that, figures annually, but as to how we are doing relative to investment, we are buying the papers an extra ounce at very, very low prices by me or Charlie current earnings at headquarters. And we must do that. We'll get a decent return, and we like those down. Now, the interesting thing is, the one thing I'll promise to do with you is I will, from investment bankers, be glad to give you on all kinds of businesses, and always the projected earnings go up as to how we are doing relative. A lot of times they don't. We are buying the papers. They don't go up. The difference is that we expect them to go down compared to the newspapers, and we must do that whatever the earnings investment salesmen expect. Now, the interesting thing is, of course, that any business books sell from investment bankers declining earnings on all kinds of businesses, and always the projected earnings go up in the book.
I think what you're saying is
a lot of times they don't go.
It's an exception.
In reality, they don't
go
up.
Like doing
the difference is that we expect them to go down in the newspapers, and whatever the I wish I hadn't asked. Salesmen expect. They certainly don't project that any business they sell will have declining earnings. Charlie? Doug?
Well, I think what you're saying is
lead into you, Doug.
It's an exception, and you like doing it.
Warren, in a previous answer to a question, you suggested, I think for the first time, that when you're gone,
I wish I hadn't asked.
And everyone here hopes that's not for a very long time.
No one more than I. Okay.
I thought you would say that.
Doug.
You're going to move, Berkshire will likely move to a more centralized. Warren, in a previous answer to a question, approach to management, suggested, I think for the first time, my question is, in the past, that when you're demonstrated a great deal of respect for Dr. Henry Singleton,
no one more than I,
and longtime CEO of the diversified conglomerate Teledyne. I thought you would say that. You have written about Singleton, quote, Henry is a manager Berkshire that all investors who a more centralized would-be CEOs style and MBA to management should study. My question is, in the past, he was 100% rational. A great deal of respect for Dr. Henry Singleton, about whom I the founder and longtime CEO of the diversified conglomerate Teledyne. Broke up Teledyne. You have written about Singleton. Dr. Singleton Henry is a manager that all investors, CEOs, that would be CEOs. And there was one reason in particular that Lee mentioned to me. In the end, he was 100% rational. According to Singleton, there are very few CEOs Teledyne was getting very hard to manage for one CEO. Prior to what would you say about the Berkshire situation, and what Dr. Singleton told our mutual friend Lee Cooperman, Berkshire, that he separately traded companies along business lines? There was one reason in particular thatLee mentioned to me that I want to ask you about.
Company to manage.
According to Singleton, Teledyne was getting very hard to manage for one
earlier
CEO.
Answer, and I understand why you did.
What would you say about the Berkshire situation?
Greater
and what is the
centralization after my death? There will be a tiny Berkshire bit more, just in terms of the small companies. But I do not anticipate any change of Berkshire, any real to me, seems about the easiest company to manage. Charlie knew imaginable, and Henry Singleton. If you took an earlier answer, I think I understand why you did. It might be interesting for greater centralization after my death. On what there will be a tiny bit more, just in terms of the small companies. But I do not anticipate. I'll answer the last part. Any real significance. Breaking it up into several companies. Charlie knew. I'm convinced Henry Singleton a poorer result. I think certainly now, and I believe in the future. It might be interesting for
well, Henry Singleton,
Charlie, to give you his views on what Singleton did right and eventually wrong. And
blindfolded just below the grandmaster.
I'll answer the last part of your question though. First, breaking it up into several companies.
On any complicated
I'm convinced would produce a poorer result. certainly now, and I believe
I knew
in the
him. He
future.
lived in my
Charlie.
community.
Well,
But
Henry
he started as a
Singleton
conglomerate where he was very entertainious, reporting higher earnings all the time, so he could keep the daisy chain going. And when he managed it on the way down, he bought in the stock and never got less than an 800 and very logically, like a great chess player should. But he managed those companies on a way more centralized. But he started as a conglomerate where he was very ever operated, reporting higher earnings all the time, so the great bulk of the enterprise going. He wanted to sell to us on the way down, and he bought in the stock. At that time, he was relentlessly and very logically, he really wanted to sell to us, and of course he wanted Berkshire stock. But he managed those companies on a way more centralized. We love you, and we'd love to buy your businesses. Berkshire's ever operated Berkshire stock. And in the end, the great bulk of the enterprises, he wanted to sell just because he was a genius, and he did it better than we did. And he really wanted to sell to us, and of course these very high-tech wanted Berkshire stock. And we basically said to him,
played the public markets.
We love you, and we'd love to buy your businesses.
We're not interested in doing that, actually.
No, we're not.
And he was incredible.
I don't think you should get the idea that just because he was a genius,
and
he did it better than we did.
For shareholders who stayed with him, but he
did in some ways because he understood these very high-tech businesses.
He looked at the shareholder group as somebody to be taken. He played the public markets, and he issued stock like crazy. We're not interested in doing that. At least 50 acquisitions. And he wanted to use a very fancy price stock. He was playing the game of the '60s in that, and he made a. We actually have never wanted fortune. Get in that game. I mean, he promoted him, but he was, he had the Litton Industries to some extent background. He looked at the shareholder group as somebody to be taken that we're advantage of, and wonderfully stock like crazy. How it ended up. I'll bet he did at least 50 acquisitions. So we have not played that game. He wanted to use a very fancy price stock. He was playing the game in terms of wanting to get Berkshire stock. And we actually have never wanted to. Was going into the third stage. He promoted the stock. He had the Litton Industries. First issuing shares at overpriced, buying it back very underpriced, and then it was a game that we're going to wonderfully if you didn't care about how it ended up.
Exactly. Our own stock, but.
So we have not played that game. He was a
man, and that cool rationality.
In terms of wanting to get Berkshire stock, he essentially was going into the third stage of first issuing shares at overpriced things, buying it back very underpriced, and then he was going to the toughest test.
Sell it for more than it was worth.
And I'm wondering if you can elaborate on what the top 2 or 3 things you think both business leaders and policymakers should be focused on to preserve U.S. competitiveness.
Admired.
I like our healthcare costs would be a big item. We're more avuncular. Spending, we'll say, you get different figures, but call it 17.5%. The toughest GDP.
And I'm wondering if you can elaborate on what the top 2 or 3 things you think both business leaders and policymakers should be focused on to preserve U.S. competitiveness.
Probably 9.5 to maybe 11.5 or thereabouts. So, well, I would say healthcare costs would be a big item. Cents in the dollar, and if you give up a country that 6 or 7 or 8 points, different figures of that dollar, I mean, it's just like having a raw material that costs you more or something of the sort. Most of our rivals, that will be a major paying anywhere problem in American, probably 9.5 to maybe 11 right now, and it will. There are only cents in the dollar, and it will become if you give up more so. And it doesn't relate 7 or 8 points to a Medicare problem. That dollar, a huge problem, like having a raw material. The real problem is healthcare costs, something of the sort, private system or that will be a whatever payer system you have problem in American. We have competitiveness. It is right now, and disadvantage in cost will versus the rest of the world. People used to talk about how General Motors had $1,500 a car in healthcare costs to the Medicare problem, which is a huge problem. Well, if they had $1,500, the real problem is healthcare costs, whether it's in the private disadvantage in steel costs. I mean, whatever payer system you have. Focused on that. If they had $150, if they had $15, disadvantage difference in steel costs, but versus the rest of the world, people used to talk about how General Motors had $1,500 a car in healthcare costs. Sort of beyond the Toyota didn't have beyond the control of $1,500 one company. Disadvantage in steel costs, competitive disadvantage. The overall, incidentally, I mean, focused on that. United $150. Since they had $15, 2008. Difference in steel costs. We've done very well compared to healthcare costs. Most countries and our system works, but beyond. If you ask me the number one problem beyond for American business control of any, I would say it's that healthcare cost disadvantage. It's not promised to be a huge competitive disadvantage. Overall, incidentally, I mean, the United States since the crisis of 2008. we've done very well
securities
compared
and
to
derivative market.
most countries, and our system
markets.
works. But
And the
if you ask
young
me the
men
number
from
one
Caltech
problem
and
for American
MIT
business,
going into high
I would
finance
say it's that
and
healthcare cost
derivative
disadvantage.
trading and
Charlie?
so on. I think this is
Well,
a
I would
perfectly
add,
crazy.
I don't think it
does our
outcome,
competitiveness any good to have this
in terms of its effect on the
grossly
country.
swollen securities and derivative market.
Anything further?
Well, I agree with you about the health care. And the young men from Caltech and MIT going
I find the
into
other
high
more
finance
revolting.
and derivative trading and so on. I think
Charlie's
this is a
very Old
perfectly
Testament.
crazy outcome
And he's right.
in
How
terms
is the
of its effect on the
Affordable Care
country.
Act going to affect Berkshire?
Yeah, I don't know the answer to that. Anything further?
Well, I agree with you
virtually
about the
certain
health
that,
care, but
we've got
I
70
find the other more revolting.
plus subsidiaries, one of which has over 100 itself.
Charlie's very Old
Very hard to
Testament.
speak totally categorically, but to my knowledge, and he's right.
How is the Affordable Care
I
Act
don't know of any
going to
units
affect Berkshire?
I don't know the answer to that. The health care benefits, but like I said, virtually certain. We just bought 27 or 28. We've got 70 daily newspapers, some of them are very small, some of which, one of which has over 100 itself. Every single unit. Very hard to speak totally categorically. To my knowledge, huge cost for us. I don't know of any units we're actually going to do. We do very few things with healthcare on a centralized basis, but that is something we just where all of our companies, 27 or 28, will try to daily newspapers. Some of them are very what's in store for them and try to figure out some answers. But every single unit, healthcare costs are we have not yet for us. We have not assessed in any way. We're actually the kind of figures going to do. We do very few things. We spend on a centralized basis, but that is something where all of our companies that will try to that are coming through on healthcare what's in store for them and trying to figure out some answers. Individual units, but as I look at their monthly reports, we have not yet cost rising. We have not assessed in any way. Put together the kind of figures that what happens calls for. We spend a lot of money. I don't know, but the same thing will be happening to our competitors, and we will try to figure out what makes them coming through on healthcare costs. I see them at some of our a few of our individual units. As I look at their monthly reports, the larger units are spending a lot of time on that. Cost rising, something we try to control at headquarters. And Charlie.
Yeah,
what happens in 2014,
we really
I don't know.
Try and control
the same thing will be happening to our competitors,
and
we will try to figure out what makes the most sense at that time.
Firing line.
And our individual managers are already working.
The question is about the capital spending plans at your regulated utilities and a potential long-term risk to realizing returns on current and future capacity. With the ongoing reduction in the cost of solar panels causing more utility customers to at least consider generating electricity from their own rooftops, some worry about a vicious circle of customers reducing their dependence on the grid. Capital spending plans at your regulated utilities and a potential long-term risk to realizing returns on current and future capacity. With the ongoing reduction in the cost of solar panels causing more utility customers to at least consider generating electricity from their own rooftops, some worry about a vicious circle of customers reducing their dependence on the grid.
And Berkshire's big operations, well, my answer would in solar are really knows exactly how this is going to play out. And we get very confidently predict there'll be more solar generation in deserts. I think Berkshire's going to do fine in rooftops in cloudy places. And I am skeptical. There's a good reason for that. And Berkshire's big operations, as you run the utilities in solar, are a bunch of little tiny rooftops. And I suspect get very favorable terms and incentives and some fancy salesmanship going to do fine in solar arena. And of course, the people who did it early, I am skeptical myself. We're foolish because the price came down rapidly thereafter. Utilities. So put me down from a bunch of little tiny rooftops. Charmed by rooftops in cloudy areas. There's some
we have Greg Abel here from Mid-American Energy.
Some fancy salesmanship in that.
Director Spotlight down there. Greg can probably speak to this.
And of course, the people who did it
more intelligence than Charlie and I. I noticed that Jonathan left me out of the thing entirely when he went to get an intelligent answer, but I'm not taking any offense at that. Greg?
You're absolutely right. We're seeing, when it comes to rooftop solar,
we have Greg Abel here from Mid-American Energy.
Of installing them.
At the same time, down there,
compared to a
regional tariff
or a specific
tariff
more
more intelligence than
states,
Charlie and I noticed
utility is extremely still
Jonathan
competitive.
left me out of the thing
And
entirely.
I would highlight that
when
as
we
you
get an
see more
intelligent answer,
rooftops
but
coming
I'm not
on, you'll
taking
see a
any offense to that.
restructuring of the tariffs.
Greg?
You're absolutely right.
But at
We're
the
seeing
same time, there's a
when it
lot
comes
of
to
protection for the
rooftop solar
utility. So in
decline
the regions
total cost of installing
supplying
at the
power,
same time, when you
we will
compare
see
it to
some
a
introduction of
regional
solar, but we're
tariff
absolutely
or
comfortable our
specific
systems
tariff
for
for
long-term
long-term
states
are valuable both
the
to our
utility is
customers
extremely
and to
still
our
competitive.
shareholders, the Berkshire.
And I would highlight
Berkshire
that as you see
shareholders
more
for long-term.
rooftops coming on,
Bill
you'll see a
Gross made recent
restructuring of the
comments that his
tariffs.
generation of investors,
But at the same time,
yourselves
there's a lot of
included,
protection for
owed
the
a deal of their
utilities. So in
success
the
to timing.
regions we're
Do you agree with Bill's
supplying
comment?
power,
Yeah, there's no question.
we will see some introduction
Being born
of
in the
solar, but
United
we're absolutely
States,
comfortable. Our systems for
was a
long-term
huge,
are
huge,
valuable
huge
both to our
advantage to
customers
me. And
and
as
to
I
our
pointed out in a recent article, being born male was a
Berkshire
big
shareholders
advantage.
for long-term.
I would not have
Bill
had the same
Gross made
opportunities
recent comments that
in the
his
investment
generation of
or in
investors,
all-
yourselves
in the
included,
business world
owed a deal of their
remotely,
success to timing. Do you agree with Bill's
that I've
comment?
had. And there's no question. Female born in 1930, being born in the United States and was a huge, the timing huge, could have been huge a little better to me. And as I pointed out in a recent article, being born male was a big advantage. Security sales would not have had the same opportunities and investment, or I was conceived in the business world remotely. November that I've had 1929, and if you remember, the stocks had gone down dramatically at that time. There really wasn't the timing to call on a little better for my dad, and there wasn't actually any television at home or anything. So security salesman, and so I feel myself very lucky. I was conceived in the crash of 1929, November 1929, and if you remember, the stocks had gone down dramatically. That also, there really wasn't anybody to call on. A decade. More than that, and there wasn't any television very turned off. Well, so here I am, a decade of terrible business for quite a while, and then a decade of. So I feel myself very lucky. Were turned off on stocks, just as we sort of had a decade like that. Crash of 1929 came along up to 2010 or so. People and a lot of people also turned off by stocks. So that was provided. That was a favorable environment. More than a decade. But the United States itself was incredibly a decade of terrible business for quite a while. Born in a decade of 5 years earlier, more people were turned off more money on stocks. Just we sort of had a decade like that, probably less in the past. Decade going up to 2010 or so. I envy gotten turned off by stocks. So that was maybe there's being that was a favorable environment. I mean, I think on a probability. But the United States itself, that's the luckiest individual that's ever been born. And I think I've been born. Do very well earlier. I probably would have made more money, but if I'd been born 10 or 15 years on a probability basis, probably less money. Better than existed when I was born. I envy, and I think they'll have opportunities to do very well in the United States in the investment field at probability basis. That's the luckiest individual that's ever been born, as it was for me starting in 19. Do very well, say 50 in life in all kinds of ways or thereabouts on a probability basis. But it will be a very good field better than the person that one has a passion for investing, and I think born today they'll have opportunities coming of age 20 years from now in the investment field. It may not be as good, in my view, to do very well. The field is to live for me starting far better than we live today, just as we live far better than John D. Rockefeller lived. But it will be a very good field to operate in. The person that has a passion for investing
was very weak in your early
born
days.
Today, coming of age 20 years from now,
competition is as weak now.
Is likely, in my view,
so
to do very well and
sure we got
to
advantages
live
from timing
far better than we live today, just as we live far better than John D. Rockefeller lived many years ago. Charlie?
But I don't think that means there's nothing to be done. The competition was very weak in your early days.
But Charlie, in 2000,
and I don't think the competition is as weak now.
There were all kinds of high IQ.
I think sure we got
highly
advantages
experienced
from timing.
Investment professionals. I mean, thousands and thousands and thousands of them. And you invested at the Daily Journal Company.
That means
and
there's
some
nothing
equities
to be done ahead.
X that are worth what? 3 extra. But Charlie, in 2000,
like that. That's right.
8 and 9. I call that opportunity, but maybe
all
kinds of high IQ, highly experienced
for a lot of years
investment professionals. I mean, thousands and thousands.
It still became
and
available.
of them.
Oh yes,
and you invested at the Daily Journal Company in some equities at X that are worth what?
You were not waiting
for now or something like that. I wasn't drowning in money, unfortunately. I call that
opportunity.
Maybe routine to him, but
yeah, but
now we got money and no ideas. Okay, station.
it still became available.
Oh, yes.
And if you could communicate to yourself
But
50
you were
years
drowning
ago,
in opportunities
what would you
when I
tell them
first
one
knew
piece
you.
of advice, business or personal,
You
and
were
how
not
would you do
waiting
in a
for-
way where your
I
former
wasn't
self
drowning
would
in money,
actually heed it?
unfortunately.
No, what you lacked was money.
Charlie, I'll let you answer that. Well,
Now we got
incidentally,
money
I'll
and
trade
no
you
ideas.
places.
Okay,
So,
station.
don't worry about your future.
How do you think you've changed over the last 50 years? And if you could communicate to yourself 50
Yeah,
years ago, what would you tell them
we're
one piece of
basically so
advice, business or
old-fashioned that
personal, and how would you do it in a way where
we're
your former
boringly
self would actually
trite.
heed it?
We think you ought to keep plugging along.
Charlie, I'll let
stay
you answer
rational,
that.
Stay energetic.
Incidentally, I'll trade you places. So
Just
don't
all
worry
the
about
old
your future.
virtues still work. And
But find what you turn you on.
yeah, you gotta. We're basically so old-fashioned. I don't know about Warren, but I have never succeeded. We think you ought to stand in something. Keep plugging along and stay
Charlie and
rational.
I both started in the same
stay
grocery store.
energetic
And neither one of us are in the
just all
grocery
the old
business.
virtues still work. We were not going to be promoted either.
But find what you turned you on.
Yeah, you gotta work where you're turned on.
My grandfather was right,
Warren,
too.
but I have never succeeded to any great extent in something I didn't like doing.
Charlie and I both started in the same grocery store. Charlie and neither one of us are in the grocery business. we were lucky to be in this country to start with, but
even though you had the family
we found
name.
things we liked to do very early in life. And then my grandfather was right. We pushed very hard in doing those things, but we were enjoying it while we did it. We have had so much fun. It's really, running Berkshire. If you're lucky, it's almost sinful. Charlie and I were lucky in this respect, but we were lucky to be in this country. My dad happened to be in a business. We found things we liked to do. He didn't find very interesting. Very early I found very interesting, and so when I would go down on Saturday, there were a lot of very hard in doing those things. But we were enjoying it. Just flowed from a very early age. We have had so much fun. And Charlie found Berkshire. It's almost sinful.
You found a way to atone by your sins. We
were lucky
so
to.
much fun.
You're giving
all
my
the
dad
money
happened
back.
to be in a business. Yeah, but that.
You give it all back whether you want to or
I
not.
found very interesting, and so when I would get down on Saturday, there were a lot of books to read, and
Berkshire's insurance pricing policy
it
to stay so
just
rational
flowed from a
while
very
also
early
being a very
age, and
sizable market participant.
Charlie found in insurance was
In insurance.
You found
Yeah.
a way to atone for your sins.
Well,
and
I
having
would
so
say
much
this.
Fun.
I really
You're
do
giving
think
all the
that
money back.
Berkshire is an unusually rational.
You give it all
place.
back whether you want to or not in the end.
We know what we want to
factors have
accomplish.
enabled Berkshire's insurance pricing policy to
We've
stay
had the
so
benefit of a
rational
very,
while also
very
being a
long
very
run, and we've had
sizable
the
market
benefit of a.
participant?
In insurance,
Whether
we
you
can
In
argue whether
insurance,
it's a
yeah.
benefit or not, but of a controlling shareholder, so we did not have outside
I would say this.
influences
I really
that
do think
pushed us
that
in directions that Berkshire is
we
an
didn't wanna
unusually
go
rational
someplace.
place. I mean,
We
insurance.
know
what we
should
want to
be
accomplish
conducted
as a rational activity.
We've had the benefit
and
of a very, very
one
long
of the
run, and we've
problems
had the benefit
that
of
some insurers have
we
had
argue
is
whether
that
it's
they
a
would
benefit
have
or
a
not,
but
but
a
a
controlling
for
shareholder,
increasing
so we did
premium
not have
volume
outside
every year
influences
brought upon by
pushed us in directions
by
that
Wall Street
that we didn't want to
very
go.
few.
So we actually contracted the business.
insurance
By National Indemnity
should be
our-
conducted
formerly our main business
as a
is
rational
traditional
activity,
business.
and
I think we contracted
one
it
of
probably
the
by 80%
problems
or something
that
of the sort when some insurers
when the
have
business
had
became
is that
less
they would have
attractive,
a pressure for
I'm not sure
increasing
any
premium volume every
manager
year
of a
brought upon
public
by
company that was
answering to
Wall
quarterly
Street
earnings calls and that
very
sort of
few.
thing.
I'm
We
not sure
actually
whether they could have
contracted the business
stood
written
up
by
to
the kind of pressure that
National
they would receive
Indemnity, or
if they'd followed
formerly
us
our
on our
main
policy.
business. It's
We have
traditional
no.
business.
I think we contracted
If
it
we do
probably
something
by
stupid,
80% or something of the sort.
it's because we did something
when
stupid.
the
It's
business
not-
became less attractive.
I'm not sure
no
any
external factors.
manager of a public
pressing
company
on
that
us,
was answering to
and,
quarterly earnings calls and that sort of thing.
That's a
I'm
great
not
way
sure
to
whether they really
operate.
could have
And it'll
stood
continue
up
to be the
way
kind
they
of pressure
operate.
that they would receive.
Most people,
if they'd followed a similar policy. We
if you
have
own
no
half of
1% of the company or less.
If we do
you
something
know, and-
stupid,
and other people are
it's
doing
because
things
we did
that Wall
something
Street is
stupid. It's
applauding,
not-
and you're not doing them.
It can be very
no
hard
external factors are
to
pressing
resist.
on us,
And,
you know, you respond to media criticism.
that's a great way
and
to
all kinds of
operate.
things. And it'll
We
continue
don't
to be
have
the way
we
they
don't have
operate.
to do it.
And most people, there's no reason if you own a half or
for us to
1% of
do
the company
anything
or less, you know, and-
stupid in insurance.
and other
You get
people are
offered a
doing
lot of
things that Wall Street is
opportunities to do
applauding,
things
and
that
you're
are
not
stupid.
doing
We
them.
were
Major
very hard
riders
of catastrophe, to resist natural catastrophe insurance. You respond to media criticism and all kinds of things. When the prices were right, we don't have to do it. The prices are right now, so we don't write it. There's no reason we haven't left the market. The market left us and stupid in insurance. But we are not offered a lot of opportunities to do where we get paid 90 cents. Major writers running a catastrophe, a probabilistic loss of $1 insurance doesn't make any sense in the United States, and we don't put any pressure on anybody to when the prices were right. We don't incomes are not right now, so we don't write it. We haven't left the market. It's not hard to be rational in Berkshire, Charlie. But we are not about to do something
there are pressures
where we get
on
paid
other
90 cents for running
don't want and therefore don't have.
A probabilistic loss of $1.
It's very
doesn't
hard.
make any sense, and we won't do it. And we don't put any pressure on anybody to do it.
80%
And their
of the
incomes are
people
not
who
dependent on doing it.
come in every day don't have enough to do, and
it's not hard to be rational with Berkshire, Charlie.
it's a counterintuitive thing to do. Pressures on other people. It's absolutely required that you do it want and therefore don't have as crazy as they do in insurance. It is very hard.
It's like not buying internet stocks,
operation,
in the late 1990s.
80% of the people who come
all
in
around
every day
you,
don't
you
have
have
enough
these
to
people
do,
that have high IQs, and they're doing it, and they're being successful. And so
it's a counterintuitive
everybody
thing to do.
From
But
your,
it's absolutely
your spouse to
required
your
that you do
employer
it
to
in
the
a place
press
where
says,
people go as crazy
how
as
can
they
all
do
these
in
other people,
insurance.
how come you think you're so smart? Well, avoiding this when everybody else is doing it, and making a lot of money, and of course it creates this social all around you. You have these people that have high IQs, and they're doing it for a while. That's the great danger period. And everybody from these bubbles is that from your your spouse starts out with skepticism and ends up with how can all these other people, how come you think you're so smart? Avoiding this when everybody else is doing it, and they're making a lot of money, sort of thing. The bandwagon effect and everything. Those things are very hard to resist. But we don't have any pressures. It worked for a while. That's the great danger. Just don't give a damn in all of these bubbles. Is that we don't necessarily think we're smarter than the other person on that. We just we don't understand what it's all about. We're getting richer than you are. They can make a lot of money. He went along trading or whatever it may be, that sort of thing. Good luck to him, but we're not everything. Those we're not very hard to resist, but we certainly. But we don't have any pressure to do it just because they're doing it to do that sort of thing. I mean, we just don't give a damn, and that. We don't necessarily think we're smarter than the other person on that. We just think we don't understand what it's all about.
Stuff is in the Bible.
And if they can make a lot of money, day trading or whatever it may be, good luck to them. But we're not envious of them. But we certainly
they were having trouble with envy a long time ago
because they're doing it.
And it's a perfectly terrible thing to do. And how much fun can you have being envious? I always say there's a reason why. So one sin, there's no fun. In the Bible, you can't covet your neighbor's.
Gluttony is a lot of fun. Lust has its place too.
They were having trouble with envy a long time ago.
Reinsurance pricing is expected to be down at mid-year renewals this year.
It's a perfectly
despite the
terrible
fact that
thing
we've
to
had
do.
a lot of catastrophes in recent years.
How much fun can you have?
The finger is being pointed towards alternative capital entering the market, new capacity entering the market. How concerned are you about this new capacity?
Gluttony is a lot of fun.
What is the likelihood that cheap reinsurance pricing soon
Lust
leads to
has its place too, but we won't get into that.
Reinsurance
we hate
pricing
dumb
is expected
competition.
to be down at mid-year renewals this year. Despite the fact that we've had a lot of catastrophes in recent years.
Hedge fund, managed
the finger
money,
is being pointed towards
funds
alternative capital entering the market, new capacity hurting the market.
Entered
How concerned are you about this new capacity?
More particularly, probably the reinsurance
What is the likelihood
business.
that cheap reinsurance pricing
Quite aggressively
soon leads to
in the last
cheaper
few years. For one thing, it gives them a chance. Yeah, we hate dumb competition to have a beard, in effect, to operate in a Bermuda or someplace where the tax rates are low and where they defer their own income from U.S. income taxes for a long time, and it's a perfectly respectable, particularly probably the reinsurance business, quite aggressively in the last few years. It can be sold to them a chance and to talk about a beard, in effect, to operate in an uncorrelated type tax rates are low and where they defer their operation and all of that. Anything from U.S. anything Wall Street can sell at time, and it's a perfectly respectable and beard. And it's it can be sold to investors. It's very saleable now. People talk the money will about it flow in and. The money will, being an uncorrelated bring down prices. It may do stupid things, operation and all of that. But that's happened before. Anything Wall Street can sell, it will sell. I mean, you can count on that. And we know what we're willing to do. We know what we think the prices should be. Yeah, and we will. we will do insurance
business
very
where we think
sellable
that
and the money
the
will
odds favor
flow in
assuring an underwriting profit.
The money will, and if we
may
can't
bring
down prices, it may do stupid things in reinsurance.
We'll watch for a
but
while.
that's happened before. And you can't afford, we know what we're willing to do. We know along with the prices should be with the crowd. We will an investment. We will do insurance business where a lot of other things, and it can be irritating. Assuring an underwriting profit. I mean, and if we can't do it, if you've got a service station on the corner and you got a guy across the street that is willing to sell gas below, you can't afford full cost, to go along with the. You've got a terrible problem with the crowd, and that's why I got out of the gas insurance for a long time ago. A lot of other things. Insurance, it can be irritating. Nice thing about it is to have a dumb competitor. The standby costs are not huge. So if you've got a service station like idling on the corner, and you got a guy across the street that. So we were perfectly gas below in the 1980s to have our expense ratio go up significantly. You got a terrible because our volume went down so dramatically. That's why I got out of the gas station business a long time ago. Insurance was a standby cost. The nice thing about it is it was real. The standby costs are not huge, and so we just waited. It's not like idling steel plants or something. So we were perfectly willing in the 1980s to have our expense ratio go up significantly. Because our volume went down so dramatically.
Large-scale casualty insurance operation in the world.
It was a standby cost that was. I think that's true. That was real, but it wasn't back.
So why would we change?
And we just waited for better. We never really anticipated when they came along. When we started in.
That's true.
Yeah.
Cranky waited out.
But the principles were useful, and then we
the best large-scale casualty insurance operation in the world.
We were very lucky in getting some sensational people.
I think that's true.
We've got. Got Tad
Montrose. So why would we change?
Generally, we've got a G. Jane. We never really anticipated it would happen, though. We've got Tony. When we started in, nicely.
That's true.
Geico. Yeah. I mean, we just sort of we have just hit the jackpot. But the principles, in terms of the people, were useful, and they liked the environment of Berkshire, in which we were very lucky in getting some to do dumb things, which they would get at many other places. Get Tad Montrose.
I've noticed and applaud the fact that you've added women to Berkshire's board. But both the board and senior management at Berkshire still reflect the reality that in 2013, there are very few women holding the top jobs in corporate America. Do you see this as a problem? And if so, what should be done about it?
To do dumb things. Well, I do see it as a problem. And
I've noticed and applaud the fact that you've added women to Berkshire's
magazine,
board.
which if you
But
go to
both the board and senior
fortune.com, I
management
guess
at Berkshire still reflect the reality that in
in front of the
2013,
paywall. You can
there are
click on
very
it.
few
It's only
women holding the top
1150
jobs
words
in
or so.
corporate America.
And
do you see this
you'll
as
see
a
my
problem?
views on that.
And
But
if so,
there's no
what should be done
question
about it?
Well, I do see it as a problem. Women throughout my lifetime, and I've written an article in Fortune magazine, which if you go to fortune.com, I guess the same shot. It's in front of the paywall. You can click on it. It's only 1150 words or so, as I pointed out in this article. You'll see my views on that. But there's no question, I believe, and women throughout my lifetime, and absolutely, for millennia, smart as I am, they more personable than I am. I've not had the same shot. Along with people much better than I did when we were young in the world. The males were the same. I had two sisters, as I pointed out in this article. They did not have the same opportunities at all. I mean, both here today, I believe, and nobody really wanted to know. Certainly, there's on each side of me. My parents love them the same way as they felt about me. Smart as I am, they more personable than I am. Never would have dreamt of saying along with people much better than I did when we were young. Warren gets all these opportunities, and their grades were the same, but it just existed. But they did not have the same opportunities at all. All my teachers, nobody grade school, every one of them, nobody really wanted to learn. The reason they were females is because their parents loved them the same way as open to them about me, and as a result, I had way better teachers than I sort of deserved. Never would have dreamt of saying pay level that existed in them, because Warren gets all these opportunities and you don't. But it just exists areas. And, well, a lot of improvement has been made. All my teachers are still in grade school. Every one of them ways to go. And there is a reason they were females. I mean, they only had a few occupations open to them. But as a result, I had way better teachers, and I sort of not changing at all. And then I also wrote about what existed in it, because all this talent was being compressed into a few areas placed in that position. Well, a lot of improvement has been made, so that they did not their own objectives ways to go, and there is a pipeline of potential. I mean, you couldn't change it all in one day if you wanted to. Use the example of, on the other hand, that should not be an excuse for not changing at all. And then I also wrote about the fact that there's, she was very, very intelligent. She was very high grade. She had all placed in that position. They start believing it about themselves. She'd been told by a mother, and she'd been told their own objectives by a husband. She'd been told by society potential would indicate that women couldn't run businesses. I use the example of Catherine Graham, who I knew quite well. She knew it wasn't true, but she couldn't get rid of it. When she saw herself in this funhouse, very, very intelligent. She was very high grade. She had all kinds of good qualities. No matter how hard she tried, she had been told by a mother, and she'd been told by a husband, and she'd been told by society. Kept saying, look at yourself in a record. Women couldn't run businesses as well as very high grade men, as good as any male you'll find. She knew it wasn't true. 40 for 1. She couldn't get rid of it. And she saw herself in a Pulitzer Prize winning autobiography. And to her dying day, she, at one level, she knew she was equal of the males around her, and at another level, saying, look at yourself in a record. Couldn't get rid of that little voice inside of her. Very high grade, as good as any male you'll find. Society that said her stock went up 40 for 1. You should take care of the garden and let the males Pulitzer Prize work. So winning autobiography, both the exterior and to her dying day, she obstacles. At one level, she knew she was equal of the males around her, and at another level, she only took thousands. Couldn't get rid of that little voice inside of her. Point on the article we said it came from Declaration of Independence. We hold these truths to be self-evident that all men are take care of the garden and let the males. They weren't so self-evident. So when they got around to writing the Constitution, they used a bunch of male pronouns in describing the presidency. And when they didn't get around to putting a female Supreme Court justice on until it took thousands of years. 1981. So the point on the article we said the country has come a long way on it. We hold these truths to be self-evident that all moving in the right direction. Equal. They weren't so self-evident, when they got around to writing the Constitution. They used a bunch of male pronouns in describing the presidency and laboring when they didn't get around to putting a female Supreme Court justice on until we're told to them about themselves that aren't true. The country has come a long way on it. It continues to move. It's moving in the right direction. Fortune.com. Thank you.
Is Berkshire too big to fail? On the same topic,
I think I heard of a book by that name. Who wrote it? These?
On the same topic, how do you feel about Dodd-Frank? And now that it's being implemented, how is it impacting Berkshire's insurance businesses and our investments in banks like Wells Fargo and Goldman Sachs?
I don't think. Thank you. I don't think it's affecting Berkshire's insurance businesses, to my knowledge. I mean,
on the same topic,
I think I heard of a book by that name. Who wrote it?
On the same topic, how do you feel about Dodd-Frank? And now that it's being implemented, how is it impacting Berkshire's insurance businesses and our investments in banks like Wells Fargo and Goldman Sachs?
I don't think it's affecting the insurance businesses, to my knowledge. Capital ratios for large banks are being established. We're somewhat higher levels than smaller banks, and that obviously affects return to my knowledge. We've never had anything that ratios, as I understand it, for Wells are not as high as too big to fail would be for Citi or J.P. Morgan, but they're higher than they would be for a local bank in Omaha. And capital ratios for the large banks return on equity will be at somewhat higher levels. I consider smaller banks, and that obviously affects return on equity. United States. The ratios, as I understand it, for Wells are not as high in the last 25 years, or J.P. Morgan, but they're higher than they would be for a local dramatically bank higher, and a lot of the higher the capital ratio, the lower the return on equity will be. A very significant part of the loans that were troublesome are gone. The loans have been put on the last 4 or 5 years system in the United States. I think we've got stronger than Canadian banking any time in the last 25 years. Our banks are capital, or compared to our banks of 20 years ago, I think they're dramatically stronger than they were then. Well, I do not worry about part of the loans that were troublesome are gone. The banking system, the loans have been put on in the last 4 or 5 years are far better. The cause of the next bubble. I mean, the Canadian banking system is very strong, but compared to Europe, we will have bubbles in capital, or compared to those our banks of 20 years ago, I think they're dramatically. It's because of the humans that stronger than they were then. I do not worry about have that again, but usually you don't get them. the same way as you got it before. I don't think it'll be a housing boom next time. The cause of, but the next bubble. I mean, it will be something else. I feel very good about our investment. We will have bubbles in Fargo. I feel very good about our investment in U.S. Bank. I feel very good about our investment in MA because of the humans that operate in it. All of those are very strong. We will have that again, but pursuing them, I get it. Sound the same way as you got it before. I don't think it should be a housing boom next time. It should be decent investments over time. They won't earn as high a return. I feel very good about our investment equity, nearly as high a return as Fargo. I feel very good about our investment in U.S. Bank. The rules have been investment in M&T. They've been changed to provide all of those are equities and very strong return on equity. Pursuing, Charlie, in my view, has been known to express himself on this subject, and they give him the floor. It should be decent investments over time. They won't earn as high a return
about the banking system
on tangible equity, nearly as high a return as they would have 7 or 8 years ago.
I would like to see
the rules have been changed, and they have been changed to provide thicker equities
more
and that
extreme
pulls down
in
return
terms
on
of
equity.
Bank activities.
Charlie has been known to express himself on this subject, and give him the floor.
Should be mixed up with. Well, I'm a little less optimistic about the banking system. Deposits that are insured long-term than you are.
I'm with Charlie on that.
I would like to see something more extreme in terms of more bankers want to be like investment bankers. I do not see bankers massive derivative. The worse I like it should be mixed up with insured deposits that are insured by the country.
I'm with Charlie on that.
I don't want to say more.
Yeah.
I get enough trouble on the subject already.
I can see the journalists just
the more bankers want to be like investment bankers instead of bankers.
A thunderbolt, but
the worse I like
I'm usually restrained. We're now very close to noon. I promised 5 years ago.
I don't want to say more.
Wrote about
I get enough trouble
5 or 6 years ago
already
about the inordinate costs. I can see the journalists just that investors bear. I'm waiting for Charlie to many investors bear I'm usually restrained. Getting sold various types of products. We're now very close to noon. I talked about I promised private equity and all 5 years ago a whole variety of things. The investment world about 5 or 6 years ago, extracting about the inordinate costs, a very significant percentage of the returns that investors get, many investors bear for themselves. So I offered getting sold various types of products. I talked about anyone that wanted to step up to the plate with and all kinds of a group of a whole variety of things. Investment world would not beat very unmanaged, extracting a no-load index, a very significant percentage of the returns that investors and I promised, and then for themselves. And so I offered a very nice to bet people. I like them. Anyone that wanted to step up to the plate, they took me up on this. So we hedge funds, we each put would not beat about unmanaged $50,000 no-load into something over a 10-year period. And well, we put and I promised, and zero coupon treasuries, which would mature and be worth $1 million. Very nice group of people. And I promised to report like a bet every year. And they took me up on what we did this year. Interest rates fell so far. About our $350,000 original $700,000 or so investment in 10 years, it got to be worth like $950,000 zero coupon treasuries, which would mature and treasury got so low. So there was very little appreciation left into it, and I promised to report between now and 5 years from now when it matures. What we did this year, we sold the interest rates fell so far treasuries, and we bought Berkshire with the proceeds. Original $700,000. I guaranteed that it would be worth $1 million. That's currently worth about $950,000. Charities are the 5-year benefiting to some extent now. So there was very little appreciation. Ted has one charity, which is a very worthwhile charity. Between now and 5 years from now, when it matures, charity I selected. So we sold the. We'll put the coupon treasuries, and we bought the figures up on the proceeds. And I guaranteed that it would be worth $1 million. Currently, it's worth about $1 million. Hedge funds got off to a fast start. Charities are benefiting to some extent now. The index fund. Ted has one charity, which is a very worthwhile 4 years, and these are fund to funds charity I selected. So they really represent probably 200 or 300. We'll put the hedge funds underneath. Put the figures up on the two levels of
there as to where we stand at the moment. Fees of the hedge funds got off to a fast start, 2 and 20, but can be over 13 points ahead. There's the fee of the fund of funds on top of it. So first year, but the last 4 years, and these are we now are at the fund to fund halfway point. So they really represent probably and I'll keep reporting to you every year how we do. Hedge funds underneath. If Berkshire does well, 2 levels of fees involved, over $1 million to distribute to one of 2 charity funds, which you might enjoy. 2 and 20, but can be other things. Going to, and then there's the fee of the fund of funds on top of it. So called longbets.org. That's the halfway point. They're the people that hold the money. And I'll keep reporting to you every year how we do. And if Berkshire does well, the people have wagered on well over $1 million to distribute to one of 2 charities. And the opponent of you might enjoy going to a description. Ted gave a website of why he thought he'd win. I gave a description of why I thought I'd win. But longbets.org. That's where can't resist. They're the people that hold the money. Pointing out a couple of and you will see that on the web. But one of it is that a large collider will destroy the Earth in 10 years. People have wagered on. Now there's a $1,000 bet on that, but I'm not sure who will collect. The opponent of every proposition. Give a short. I thought that was an interesting one. Ted gave a description of why he thought he'd win. I gave a description of why I thought I would win. But there was one other. But some of these are lunch. But they just can't resist. There are a number of these that are quite interesting. Pointing out at least one human alive on the web. But one of it is that a large collider will destroy the Earth in 10 years. That's $148. There's a $1,000 bet on that. When the bet was entered, there's a $2,000 bet on that. And I hope Charlie is in contention for the being the winner of that one. Okay, and then we'll go to lunch. Hot dog with a lot of ketchup for lunch. There are a number of these that are quite interesting. At least one human alive in the year 2000 will still be alive in 2150.
More than the score.
Now that's 148
Your research style
years
has seemed to morph
from when the bet was entered. There's a $2,000 bet on that. And
American Express comes into mind.
I hope Charlie is
when
in
you hired
contention for the
dad, Henry
being
Brandt.
the winner of that one.
You and he conducted weeks of analysis.
Hot dog with a lot of ketchup for lunch. I hope you
not
did
so
the
much
same.
in the later investments. As an example, now, you famously where the game of making you more the Bank of America investment your research in your style has seemed to morph over there time is an investment like analysis of this transformation to mind when you hired Jonathan's dad, Henry Brandt. Would you explain? Conducted weeks of analysis. It has to do with the market checks. Berkshire's not so much in the later investments, some other factors. As an example, actually, you famously thought of making the Bank of America investment in your bathtub.
There may be exceptions
there is
on
an
that,
investment
but
message
it is enormous
of this transformation
advantage
from being intense
if you
to
absolutely
less intense.
Love what you're
Would
doing
you
every minute of it.
Please explain the degree
that,
it has to do with the market,
the nature of it is that
Berkshire's
intensity
size, or some other factors.
Adds to your productivity. You have to love something to do well at it. There may be exceptions on that, but it is enormous intensity, enormous advantage. Not manifested exactly the same way. Love what you're doing every minute of it. But it's there every minute. I mean, I love the nature of it is that intensity. I love thinking about its businesses. I love thinking about its managers' productivity. It's part of me, and it is true. You can't separate the intensity from the scorecard. I mean, not manifested exactly the same way. Scorecard is part of playing the game and loving the game. I mean, I love thinking about Berkshire. I love thinking about its investments. I love thinking about its businesses. To me, I love thinking about its managers. Its proceeds are part of the scorecard, so they come with a scorecard. But it is true. It's much more important. You can't separate the game from the scorecard. I mean, no question about it. I would. So you feel the same way about Berkshire. Scorecard is part of playing the game and loving the game. If I didn't own a share of it, if I didn't get paid, I mean, it's what I like doing in life, and that's why to me are unimportant. I don't think you. But the proceeds are part of the scorecard, so they come with a correct observation. Charlie can comment on this. It's much more important. I mean, I would because we're doing things in a somewhat different way. Feel the same way about Berkshire. Any of the intensity or the passion has been lost. There's nothing more fun to get paid. I mean, it's what I like doing in life, and that's why I do it. Something new. I don't think you'll add to Berkshire, and that was true. I don't think it's 40 years ago, correct observation, and now Charlie can comment on this. True. 10 years from now, I hope. To say that because, Charlie, how would you answer that? We're doing things in a somewhat different way.
Well, I think when you bought American Express
any of the intensity or the passion has been lost. There's nothing more fun for me.
The second time you bought it, I remember you got on
to add to Berkshire, and that was true
Olson
40 years ago. It's true now.
You just saw how he couldn't get rid of American Express. If you want to do.
Charlie, how would you answer that?
You bought it the second time. Well, I think when you bought American Express for the first time, the first one was hard. And the second was easy. You were digging in rather deeply.
It's all cumulative.
Yeah, it's cumulative. The second time you bought it, I remember you got on the golf
You know what I learned,
Olson,
Franco, sitting with Lorimer Davidson
saw how he couldn't
on
get
a
rid
Saturday
of American
at
Express.
Geico in
You
January
wanted to, and then you bought it the second time.
1951.
The research was still just
is useful to me.
The
And I
first
don't
one
have to
was
learn it
hard.
the second time. I
The
can
second was
build
easy.
on it. But
Yeah, it's cumulative.
that's one of the great things
Yeah.
about investing. I mean, the universe, you know, what I learned, there's enough in it sitting with so that you can find lots
Lorimer
of opportunities,
Davidson,
but it's not
on a
it's
Saturday
not like it's
at
changing
Geico
dramatically
in
all the
January
time.
of
There's some things that may change, and we just don't play in
1951
that part of the game if we don't
is still-
understand them. But it's useful to me, and I don't have to learn it the second
Charlie
time.
says
I
is
can
true.
build on it. I didn't know a thing about American Express, but when the
That's one of
salad
the great
oil
things about
scandal
investing
hit, I
in
mean, the
November of
universe,
1963.
there's enough in
But
it so that you can find
thought I
lots of
saw an
opportunities.
opportunity,
but
so I learned a
it's
lot
not-
about it.
It's not like
and
it's
I went around
changing dramatically
to
all the time.
restaurants
There's some
and talked
things
to
that may
people
change,
about
and we just don't play in
about
that part of the game if we don't
travel and
understand them.
entertainment
But
cards, as they were called then.
But,
I learned about travelers.
Charlie
checks.
says
I
it's
talked to
true.
banks.
I didn't know a thing about
And
American Express.
I was absorbing some knowledge
when the salad oil scandal
And
hit
then,
in
as
November
Charlie said,
of
1963,
playing
But
golf
I
with Frank Olson, and
thought I saw an
he was
opportunity, so
running
I
the
learned
Hertz
a lot
Corp,
about it, and I went around to restaurants and talked to
telling me
people
that
about there was no way in the world that
travel and entertainment
he could
cards,
get rid
as
of
they were
American
called then. I
Express or
learned
even
about
get them to
travelers
cut their
checks. I
fees.
talked to banks, and that was my
And
kind of business.
I was
and
absorbing
enough
some
to
knowledge.
and then
proceed to buy a fair
said
amount of
when we were
stock
up at
and now we
Krausneck,
own
whatever it is,
playing golf with Frank
probably
Olson.
13% of the company
he
or
was
thereabouts,
running the
and
Hertz
they
Corp.
keep buying in their stock. We can't
And,
buy any more stock ourselves.
telling me that
I got asked that question in March of 2009 by Joe Kernan Express or even get them to cut their fees. Well, it was a bank holding company, and we couldn't have
my
a
kind
share.
of business.
But they are doing it for us.
And I love
Proceed
that.
to buy a fair amount of
Coca-Cola
stock,
Wells
and now we
Fargo,
own whatever it is,
to a lesser degree,
probably
IBM,
13% of the company or
most of our
thereabouts.
companies,
And they keep buying in
our
their stock.
interest
We
in the
can't buy
company
any
goes
more
up
stock
every year
ourselves.
because the companies are repurchasing shares.
I
And
got
they
asked that
probably
question
earn
in
more
March
money,
of
so we got a double
2009 by
going
Joe
for us.
Kernan. Why aren't you buying the stock of American
The
Express?
passion
Well, it
was
was a
not
bank
gone, I
holding
promise
company.
you.
We couldn't add a share.
When you analyze
But they
a
are doing
stock
it for
or
us.
purchase,
And I love that.
what's
At
your
Coca-Cola,
top
Wells
5
Fargo,
quantitative
to a lesser
metrics
degree, at
that you
IBM.
look at?
We're
most
looking
of our
at quantitative
companies.
and our interest in the company
We aren't
goes
looking
up
at
every year because the
the
companies are
aspects of the
repurchasing
stock. We're
shares
looking
and
at
they
the
probably
aspects of
earn
the
more
business.
money,
It's
so
very
we got a double
important
play going
to
for
have
us.
that mindset.
The
that
passion is
we
not
are
gone, I
buying
promise
businesses,
whether we're
When you
buying 100
analyze
shares
a
of something
stock
or whether we're
or
buying the
purchase,
entire company.
What's
We
your
always
top
think of them as
5
businesses.
quantitative
So
metrics
when Charlie and
that
I
you look at?
leaf
We're
through
looking at
value line or look
quantitative
at
and
annual reports that come across our
quantitative.
desk,
We
or
aren't
read the
looking at
paper, whatever it may be.
the aspects of the stock. We're looking at the
For
aspects
one thing,
of the
we have
business. It's
a
very important.
we do have this
to have that
cumulative
mindset
knowledge
that
a good
we are
many
buying
industries
businesses
and a good many
whether
companies,
we're buying
not all
100
by a
shares
long
of
shot,
something or whether we're buying the
And
entire company.
We always think of
numbers
them as
are
businesses.
of
So when Charlie and I
importance are very
leaf through value line or look
importance,
at annual reports that come across our desk, or
depending
read
on
the
the kind of
paper, whatever
business.
it may be.
I mean,
If you were a basketball
for
coach,
one thing, we have a
we
you
do
would-
have this cumulative.
If you're walking down the street and
knowledge
some guy
of
comes
a
up
good
that's
many
5'4",
industries and a good many
and says,
companies,
you ought to
not all
sign
by
me
a
up
long
because you
shot.
ought to see me handle the ball.
And you would probably have a certain
different
prejudice against
numbers.
it, but there
are
might be some one
player out there.
different importance, or various numbers are of different importance.
It made sense on
But on balance, we
depending on
would
the kind
say,
of business.
well,
I mean,
good luck,
if you were a
son, but,
basketball
we're
coach,
looking for
you know,
7-footers.
you
and
would-
then we find
if you're
7-footers.
walking
We
down
have
the
to
street
worry
and
about
some guy
whether we
comes
can
up that's 5'4",
get them halfway coordinated.
says,
and
you know,
keep
you ought
them
to sign
in
me up
school,
because you ought to
things
see me
like that.
handle the ball.
But you would probably
we
have a
see
certain
certain
prejudice against it,
things
but there might be some
that
one player out there
shout out to us.
look further or think
made
further.
sense on, but on balance, we
And
would
over
say
the years,
well,
we've
good luck,
accumulated
son.
this
but,
background.
we're
of
looking
knowledge on for
various kinds of
7-footers. And then
businesses.
we find 7-footers.
And
We have
we
to
also
worry about
have
whether
come up
we
with the
can
conclusion that
get
we
them
can't
halfway
make
coordinated,
an
and keep
intelligent
them in
analysis
schools
out
and
of
things like
about
that.
all kinds
But
of businesses.
We see
And
certain
then
things
usually that some little shout out to us to look further or think further. And over the years, that we've accumulated this background. It was mentioned how I got the idea about businesses. Buying. We also have come up with the conclusion that we can't make an intelligent analysis out of about stock, all kinds of. It was in the bathtub, which is true. But the bathtub really was not the key factor. Some little fact slips into it. The truth is, I read a book causes us to rethink something. More than 50 mentioned years how I got the idea about called Biography of a Bank. It was a great book. The Bank of America. APG&NA and the offer of the Bank of America on a preferred. And I have followed the Bank of America, and I followed other banks. But the bathtub really was not the key factor. 50 years, Charlie and I have bought banks. We used to trudge around Chicago trying to buy more banks. I read a book in the late 60s, and more than 50 years ago. We have certain things we think about in terms of a bank that are different than we think about a bank when we're buying this car. I have followed the Bank of America, and I followed so there is not one size fits all. 50 years. Charlie and I have bought think about when we're buying an insurance company. We used to trudge around Chicago trying to buy about when we're buying a company dependent upon that. Dependent upon brands. Some brands travel very well. Think about in terms of a bank being a terrific that are different when we think about. And some brands don't travel. We're buying his car, and we just keep learning. So there is not one size fits all. And then every now and then we find some opportunity to think about when we're buying an insurance company. Certain things we think about when we're buying a company dependent upon that's subject to a lot of brands. Some brands travel very well. Lots of big short interest. Coca-Cola being a terrific example. Morale was and some brands don't travel. It just struck me. And we just keep learning about things like that with a bank. And then every now and then we find and some I'd never met Bank of America. Ryan Wayne at that point. Maybe I met him at some whatever it was in 2011 or something. But I had no memory of it. And subject to a lot of didn't have his phone number. Terrible. I mean, a lot of big short interest and morale was terrible. Things like that happen. Just struck me, and it's not because I calculate some price bank and my size PE ratio or price. I never met Ryan Wayne at that point. Maybe I'd met him. It is because I have some idea, some party or something, of I had what the company might look like, and I didn't have his phone number, and I have a reasonable amount of confidence in that judgment. And there's a disparity, things like that happen, value, and it's not because I calculate some price. Charlie, would you like precise PE ratio?
We don't know how to buy stocks
or whatever it might be.
Just by looking.
It is because I have some idea
and making judgments
what the company might look like in 5 or 10 years. And I have a reasonable amount of confidence in that judgment.
We need to know more about how their company actually functions.
And it's big. Charlie, would you like
anything a computer could be? We don't know how to buy stocks to do in terms of screening just by looking at financial figures. I never do it. Do you use a computer to screen anything?
No, I don't know how to.
We may be influenced a little by some of that data. We need to know more about how the company actually functions.
You can. It's a little hard to
anything a computer could be.
We don't really use screens. On the other we're screening everything. But it's not like we sit there and say, we want to look at things.
Do you use a computer to screen anything?
No, I don't know how to. The sort. We are looking at businesses exactly like we look at them. If somebody came and offered us the entire business, and then we try to think. What is this part going to be precise on? Because we don't really use screens, and then we're screening everything. But and like we sit there and say, we want to look at things that are low. We just don't know the answer to it. We do not know PEs or something. Which auto company is going to? We are looking at businesses be knocking the ball exactly like we'd look at them. If somebody from now, which one's going to be hanging on by its fingernails? And then we try to think. Watch the auto business. What is this place going to look like in 5 or 10 years? And how sure are we how to? And most foresee the future well enough on something like that. We just don't know the answer to it. We do not know which auto company is going to
will have a computer
be knocking the ball out of the park. 10 years from now, or which one's going to be hanging on by its fingernails.
With a high degree of competence.
We watch the auto
never
business for 50 years.
Degree of competence about Apple, no matter what their financial statement showed.
We don't know how to.
It's too hard.
Foresee the future well enough on something. We don't know about an oil company 10 years from now. In terms of what the product will be selling for.
Will have a computer.
I would say
competitive advantage.
We're virtually 100% confident. About
with a high degree of confidence. We would never have that degree of confidence about Apple, no matter what their very high IQs who are good at math. It's just naturally look for a system where they can just look at the math
company 10 years
and know what security to buy.
What the product will be selling for or anything, but
you really have to understand the company and its competitive position and the reasons why its competitive position is what it is. And that is often not disclosed by the math. People with very high IQs who are good at math.
It's not what I learned from Ben Graham.
Naturally,
although the fundamentals
look for a system where they can just look at the math and know what security to buy.
The market and all that.
It's not that easy.
Still part of the
catechism. You really have to understand the company and its competitive position and the reasons why its competitive position is what it is.
I don't know exactly how I would manage money.
It's often not disclosed by the math.
Do it by the numbers. It's not what I learned from Ben Graham. Although the fundamentals of looking at stocks as businesses, that takes care of that. The attitude toward the market and all that is absolutely still
writes a new
part of the catechism.
essay on the quote new normal unquote. I get more depressed about the prospects for my retirement.
I don't know exactly how I would
Do you
manage
share
money
his
if I was just
view
trying
that
to do it
market returns in the next few decades will be much
do it
lower than in the past few?
Charlie and I don't pay any attention to
That takes care of that.
We have
Every time Bill
worked
Gross
together
writes a
now
new
for
essay on
54
the,
years,
new normal,
and
unquote,
I
I
can't
get
think of a
more
time
depressed about the prospects
when we made
for
a
my
decision
retirement.
on a stock
Do you share his view that
or on a
market
company
returns in the next few
where
decades
a macro
will be much
discussion where
lower
we've talked
than
about
in the
macro,
past few?
and Charlie and I don't pay any attention to macro forecasts. What things are going to look like in any precise way.
Worked together now
for naturally we think if we don't
54
know,
years,
nobody else knows.
and
That's a little conceit that we have. I can't think of a
And,
time when we made a decision
so we-
on a stock.
Why talk? Why
or on
spend
a
time
company
talking about something you really don't know anything
a macro
about?
discussion.
Where we've talked about
people
macro,
do it all the time, but it's not very productive.
So we talk about the business,
What things are going to look like in
And,
any precise way. And incidentally, naturally, we
I
think
like
if
Bill
we don't know,
Gross.
nobody else knows.
Sounds
That's
like
a
Lloyd
conceit
Benson,
that
you
we
know.
have. He's a friend of mine.
So we,
I don't. It
why
doesn't
talk-
make any
why
difference
spend time
to me
talking about something you really
what
don't
he
know-
thinks
don't know
about
anything about in the
future.
future?
I mean, it doesn't make
That-
any difference.
people
to
do
me,
it all
you know,
the time, but
any
it's not very productive.
economist
So we talk about the businesses.
thinks
and,
about it. I have a general feeling that
I like
America
Bill
will
Gross.
continue to work well.
Sounds like Lloyd
And I
Benson,
don't,
you know.
back then, he's a friend of mine.
Throughout my adult
lifetime, but
before
I don't-
that,
it doesn't
there's
make
always
any
been
difference
all kinds
to
of
me
opinions that
what he thinks about
what's going to happen this
future,
year,
and
next
doesn't
year,
make
anything
any
like that.
difference to me.
Nobody
You know,
knows.
what you do
economist,
know, with a very high degree
thinks
of
about
certainty,
it.
in my view,
I have a general feeling
that America,
the NSF will be
continue to
carrying
work well. And
more
I don't,
carloads 10 years from
you
now,
know,
20 years from now.
all-
Throughout my
there will
adult
be no
lifetime,
substitute,
and before that,
there's
for the
always been
service
all kinds
that
of
they
opinions
provide,
that there
you know,
will be
about what's going to happen
two
this year,
important
next year,
railroads in the
anything like
west
that.
and two
Nobody
important railroads
knows.
in the east. What you do know, and that with a very high degree
have
of
an
certainty,
asset
in my view, that
has
has
incredible replacement
the
value.
NSF
Nobody
will be
could
carrying
turn out something like it.
more
and they'll
carloads
get paid
10 years from
fairly
now,
for
20 years from now.
what they do,
and that there will
It's
be
not-
no
it's not very
substitute
complicated, and
for the
to
service that they provide.
ignore
that there
what
will
you
be
know,
two important
because of
railroads in the
predictions
west,
about
two important
what you don't
railroads
know
in the
or what-
east, and what nobody else knows in our view.
and that
it's just
they will have an
plain silly.
asset.
So we don't.
It has incredible
We
replacement
don't have
value. Nobody
anything
could
against
turn out something like
somebody
it.
talking
And
about
they'll
a
get
new
paid
normal
fairly
or
for
an old normal or an
what they
in-between
do.
normal.
But
It's not very
it doesn't-
complicated.
it doesn't
and
mean
that-
anything to us.
To my own guess is
Ignore
that
what you know,
people
will
because of
do
predictions about
very
what
well
you don't
owning
know or what
good
and what
businesses
nobody
that
else
don't
knows
pay
in
too
our
much
view.
for them.
It's just plain silly.
You know, whether they
so
hold
we
them for
don't
10 years or 20 years or
we
30
don't have
years, and if they
anything
try and
against
time their
talking about a
purchases
new
in
normal
some way
or
by
an old normal or an in between
the
normal.
forecasts about
But
what's going to happen
it
in business
doesn't,
and
it
try
doesn't
and
mean
buy
anything
and
to
sell
us.
them.
My own guess is
they're going to do very well for their broker and not so well for themselves. Very well owning
Yeah, but
good
of course,
businesses if they don't pay too much for
when
them.
we have a lot of money, we have to do something with
whether
it.
they hold them for
So
10
we're
years or
gonna
20 years or
do our
30 years.
thing,
And if they try and
no matter what the
time their
external climate
purchases in
is.
some way by
If you're a busy surgeon
listening
and
to
trying to
forecasts
decide
about what's going to happen
whether to
in
work
business
2 more
and try
years
and
before you
buy and sell
retire,
them,
then
they're going
you
to
may
do
be
very
more
well for their
interested
broker
and
not
rationally
so well
so
for
in the new
themselves.
normal.
Charlie?
And I would
but of
personally
course,
advise the guy to work an extra couple
when we
of
have
years.
a lot of money, we have to do something with it.
So we're going to.
In other words, I kind of
do
agree
our
with Bill
thing,
Gross.
No matter
What
what
do you
the
think the normal
external
is?
climate is. If you're a busy
Well, less
surgeon
than we've
and trying to
enjoyed in our
decide
lifetimes.
whether to work 2 more
No,
years
normal.
before you
What have we
retire,
enjoyed in the last 10
then
years?
you're-
I mean,
you may be
it
more
hasn't been so
interested
bad.
and rationally so in the new normal.
It hasn't been so,
But it's not nearly as good as it was
Personally
in the first
advise the
30.
guy to work
Yeah.
an extra couple of years.
And do you think it'll be worse than the average of the last 10 years?
In other words, I kind of agree with Bill Gross.
I think
What
that's
do you
quite a
think the normal
conceivable
is?
outcome.
Yeah.
Well, less than we've enjoyed in our lifetime.
So take your pick.
The new
Over
normal.
time,
What have we
Fruit of the
enjoyed in the
Loom
last
and
10
others
years? I
have
mean,
lost
hasn't been so
nearly
bad.
all of the
No, it hasn't
T-shirt-focused
been- it
wholesale
hasn't been
screen
so-
print
you know, it's
market
not
to
nearly
build
as good
a
as it
relatively
was in the
new
first
player
30.
with very
Yeah.
low cost structure.
And do you think
Golden
it'll
is
be
now
worse than
going
the
after
average
the
of the last 10
underwear-focused
years?
retail market, and is there any reason to to think Fruit of the Loom
I
won't
think that's
lose
quite a
significant amounts of
conceivable
share
outcome.
here over time, just as they did in the wholesale screen print market?
take your pick.
What can they do
Over
to
time,
protect
Fruit of the Loom and
what
others
remains of their
have
franchise?
lost
Yeah, you keep
Nearly
you
all
keep
of
your
the
costs down and
t-shirt-focused
you
wholesale
and you
screen print market to
constantly work
Gildan,
at
a relatively
brand
new
building
player with
and
very
you,
low cost structure.
and you
Gildan is now going after the underwear-focused retail market, and is
Sure
there any
that-
reason to think
that
Fruit
your
of the
main
Loom won't lose
customers,
significant amounts of share here over time, just as they
in
did
turn
in the
have their
wholesale
customers
screen
happy with the
print
product
market?
and are happy
What
at
can
the
they
price
do to
points that you
protect
can deliver at.
what remains of their
And
franchise?
you're correct. Yeah, you keep your costs down and you certain aspects, the non-branded brand building and you of some parts of the business.
has hurt your main fruit customers in the last. In turn, have their customers happy with the product and are happy with the price points that you can deliver at. And you're correct. Turn out Gildan first quality, low price, certain aspects, the non-branded underwear with a strong brand recognition of some and I parts of the business. I think it will be very tough fruit to either build a brand against it or to beat our costs significantly. Now, Gildan certainly pays very little in the way of income taxes, you know, because they route stuff out the Cayman Islands. First quality, low price, and underwear with a strong brand recognition. I think you'll find it 5 years from now. It will be very tough now that our market share to either build a brand against it or to beat our costs significantly. Now, Gildan pays very little in the way of income. They're a competitive threat. They route stuff competitive Cayman Islands, and it's not a business that's a modest factor that you can coast in. I think you'll find it's not Coca-Cola 5 years from now, but it's not an unbranded product either. And I think fruit will do, particularly underwear, reasonably well, but will not. But you're right, they're a competitive threat. You know, Hanes is a competitive threat. The kind of profit margins that you can get, and it's not. It's not a business products that you can coast on.
And then too, with as many products as we have,
but it's not an unbranded
we may
product
average out pretty well in terms of market shares. We're not going to win every skirmish or every battle,
but it will not.
I think it would be great if you would publish the portfolio statements
of the
Buffett partnership years. I think there are a lot of small investors that would get a kick out of knowing, what you invested and how you went ahead
with as many products as we have.
Analyze the companies.
Well, Charlie ran something called Wheeler Munger.
Market shares. We're not
this
going to
portfolio was even more
skirmish
interesting, so we'll start with you, Charlie.
I think it would be great if you would publish the portfolio statements of the Buffett partnership years. I think there are a lot of small investors that would get a kick out of knowing, what you invested and how you went ahead and analyze the company.
You wouldn't recognize the names.
Charlie ran something called Wheeler Munger.
Buffett partnership. You'd recognize American Express.
His portfolio was even more interesting, so we'll start with you, Charlie.
Rattle off some of the names.
Yeah, well, we can start with Mosaic, Tile, a more concentrated portfolio than I did in those days.
The map
Meadow River, Coal and Land.
I don't think people would greatly help.
Hundreds of them.
You wouldn't recognize the names, most of them, if they were Buffett partnership. You'd recognize American Express.
I literally own.
But rattle off some of the names.
400 or 500 names. Well, we can at one time or another, but most of the money's been made about Tile and
the map
Meadow River, Coal and
I couldn't name 10 books either.
There's hundreds of them. Flag Utica, Coal and Iron.
That much better than the next 10.
I've literally owned.
My mind is a blend of so many books I can't even sort it out anymore.
400 or 500 names. Yeah, but the intelligent investor has been made changed my life in terms of. I literally had read every book in the Alma Public Library by the time I was 11 on the subject of investing. And there were a lot of books, and there were technical books, Edwards and McGee. I mean, that was a classic.
My mind is a blend of so many books I can't even sort it out anymore.
And I loved, I enjoyed intelligent investors. Some of them changed my life in terms of. But I never developed the philosophy. I literally had read every book. I charted stocks by the time I was 11 on the subject of Graham's book, and there were a lot of books. And there were technical books, Edwards and McGee, bedrock philosophy in those days, and a whole bunch of investing that made sense. I mean, he taught me how, and I love to think about. I enjoyed reading him a lot. Stocks. Some of them I read more than once about the stock market, but I never developed the philosophy about the market was there. I enjoyed. I charted stocks. Not to instruct me, but to serve me. Graham's book, famous Mr. Market example. He taught me to think about philosophy, stocks as pieces of bedrock philosophy, rather than ticker symbols on investing. That made sense. I mean, he taught me how. So it was that philosophy. Stock. He taught me how to think about the stock market in some way, and he taught me further influenced by Phil Fisher's book. Not and Phil Fisher was just telling me the same thing that Charlie was telling me, which was Mr. Market example. He taught me to think about stocks as economics and one that you could ride with for decades or things, rather than one where you had to go from flower to flower every day. So it was that philosophy and those. That in some philosophy has carried me along now, further influenced by Phil Fisher's book, and Phil Fisher was just telling me the same thing that Charlie was telling me, which was that it's very important. I have not found any fundamentally good economics and bedrock philosophy ride with it for decades that has flaws rather than one where you had to go from flower to flower every day. And those are the books that that influenced me. Philosophy has carried me along. In other arenas, Charlie's probably read more biography than over the years. Anybody, but it's the way I think about businesses now. I have not found any. We just about through aspect of that bedrock philosophy that Kennedy biography that has flaws in it. You have to learn how to apply it. I'm not sure you want to emulate everything he did, but it's still interesting reading that influenced me. And of course, in other arenas, Charlie's probably read more biography than we read for the enjoyment of it. I mean, it's been enormously beneficial to us. But the reason we read, and I like to read a lot of it. It's fun. Just about through reading. It's still fun. Kennedy biography. You've read that, haven't you? On top of it, we have gotten. I'm not sure you want to emulate everything he did. Benefits, but it's still interesting reading. My life would have been different if Ben Graham hadn't gone to the trouble of writing a book which he had no financial need to do. We read for the enjoyment of it. I mean, it's been enormously beneficial to us. But the reason we read is that
with the pending merger of U.S. Air and American, the industry will have consolidated to the point where the top four carriers will control almost 90% of the traffic. As a result, the industry has been consistently profitable this past several years, with many of the airlines now earning double-digit returns on invested capital and generating substantial free cash flow. Do you think the industry's much improved economics of U.S. Air and American, the industry would there be any economic benefit where if Berkshire were to own a domestic airline and pair it with 90% of the traffic?
The answer to the second
As a result, the industry has been consistently profitable this past several years, with many of the airlines now earning double-digit returns on invested capital and generating substantial free cash flow. Do you think the industry's much improved economics are likely to persist, and would there be any economic benefits if Berkshire were to own a domestic airline and pair it with NetJets?
The answer to the second competing to do very stupid things. You can argue that that's what happened with Freddie Mac and Fannie Mae. I mean, the enormous companies. It is true that huge advantage over everybody else. And in some businesses, you can have only two competitors. Both report higher earnings every quarter, and beat the other guy out. Drove prices, and sometimes loans down to the improper levels. Competing to do very stupid things. You can argue that that's what happened with Freddie Mac and Fannie Mae. You do see certain industries companies that had a huge advantage over everybody else. Once they get down to very few companies do in their battle to both report higher earnings every quarter and to beat the other guy out. Drove prices for insuring loans down to when they get to be two levels, and they don't do that with things too. So I mean, you see Coke and Pepsi. You do see certain industries only two colas where once they get down to very few companies do extremely well. Soft drinks or colas, and you see other industries. If you go into a supermarket on the weekend, where you will. See them when they get to be two of them, their product they don't do that low prices. Well, I mean, you can take and competing very vigorously in the United States. So I mean, it's very it's very industry specific. 50% the airline industry, soft drinks or colas, but has this. But if you go into a supermarket on the weekend, you will see them pricing their product at ridiculously low prices and incremental competing very vigorously. With enormous fixed costs. It's the temptation. It's very industry specific to sell that last seat. The airline industry at a very low price is very high in situation, and sometimes it can be very difficult to distinguish between the last seat and other seats. Very low. It's a labor-intensive cost per seat, capital-intensive, with enormous fixed costs, largely commodity type, and business. The temptation, and it's been to sell that last seat. Bill Miller points out a very low price is very high, and that's trap for sometimes it can be very difficult to distinguish between the last seat, Orville, and other seats. So it's, I mean, as I've said, there has been a labor-intensive. He should have shot down capital-intensive. That was all a favor, but largely commodity type. But having neglected to do that, it's been investors have poured money in. Bill Miller points out in that question, it's been companies and aircraft manufacturing companies, investors now for 100 years, ever since plus Orville. With terrible results. Took off. I mean, and if it ever gets down to where there's one airline and there's no regulation, that was all a favor. A wonderful business. The question is whether, having neglected to do that, investors have poured money in. Few that are doing airlines, seat miles, companies, and aircraft manufacturing companies. Now for 100 years, I don't know the answer to, but I'm skeptical. With terrible results. And if it ever gets down to where there's one airline and there's no regulation. Was when the railroads did exactly what Bill Miller suggests. Having gotten down now, the railroads got down and consolidated and got better control of their labor costs, and it turned into a wonderful business. And what did we do? We missed it.
And we
I don't know
stumbled
the
in
answer
very
to,
late
but I'm
to the party,
skeptical.
right?
Charlie?
So the last time we were presented to be slow learners was when the railroads did exactly what Bill Miller suggests. It's conceivable got down. Bill Miller is right in what he suggests. Got better control of their labor costs, and it turned into a wonderful business.
Which way do you bet?
And what did we do? We missed it. It goes into my too hard. We stumbled in very late to the party, right?
Right.
So we've proven ourselves to be slow learners in this field. But he could be right.
Yeah, sure he could.
It's conceivable, isn't it, that Bill Miller is right in what he suggests?
We like things we have stronger feelings about.
It goes into my too hard pile.
We do not think that things will change dramatically. Well, we'll seize candy.
But he could be right.
Yeah, sure he could. And it'll be fun to watch. Even there, we like profitability. We like things limited to the West Coast. Have stronger feelings about. We do not see some. We do not think coming along and that taking away business. Things will change dramatically.
You really couldn't create another railroad.
Overseas candy.
And
I hope not.
And you can create another airline.
Very easily, and you have people that like
about it.
Limited to the West Coast. People love doing it. It's exciting to people. We do not see. And you can sell the idea. I've had a competitor coming along and probably a dozen taking away business proposals. But over the last 25 or 30
create
years,
another railroad
that want to get into the airline business. And the number of them have.
Create another airline.
It's very easily, and you have people that like to do it.
That's what we don't like about it.
You know, and people love doing it. You go to the, it's exciting to people. Offices, and you can sell the idea. I've had CEO and say, I want to talk to you about a dozen, this new airplane. You get in the door, you know, I mean, over the last 25 or 30 years, hauling coal or something is a little different. So I want to get into the airline business. It is a business, and the number attracts people. And you can go out and raise money for a new airline. You know, and if you go to the record is, offices, it's really been something. I don't know how many bankruptcies. CEO and say, I want to talk to you about this new airplane. You get in, and of course, I mean, some have talked more than once. We bought US Air or something. It's a little different. So I bought that. I was at Garotz with. It is a business that attracts people. And Collide. You can go out and raise money for a new airline. He explained to me how wonderful and. The airline was, he's a good guy, incidentally. It's really been something. I don't know how many I wrote a check and been in the airline field. By the time the check was cash number, and of course they were having trouble. Some have done it more than once. We bought did not take long. No. And then they went bankrupt twice. We were very lucky on. We actually made quite a bit of money on Collide, turned out, because there was a little blip at one point. To me how wonderful. It went bankrupt twice. The airline was. He's a good guy, incidentally. Charlie and I were on the board. I wrote a check, and we would look at these projections. The check was cashed. And they were just ridiculous. They were having trouble. Did not take long.
No.
And then they went bankrupt twice. We were very popular. We actually made quite a bit of money on this, as it turned out. Because
how hard a floor should shareholders think about the 1.2 times book value buyback
after
multiple?
we bought it?
Are there circumstances under which you would not be buying
and we
back?
would look at these projections. Well, generally speaking, book value has got nothing to do with the price at which you should repurchase your shares. Intrinsic business value does, and the correlation. We were very popular because we actually pointed that out a few times throughout the investment universe.
How hard a floor should shareholders think about the 1.2 times book value buyback multiple?
Book value is unimportant in most companies.
Under which
it actually has.
You would not be buying back at 1.2.
It has reasonable. Generally speaking, book value has got nothing to do with the price at which you should repurchase your shares. Intrinsic business value does, and the correlation between intrinsic business value and book value considerably above throughout the investment universe, and we have signaled that virtually no correlation. So book value is unimportant in most companies. In addition, we signaled that by saying that we would repurchase our shares. Has reasonable tracking as long as we had a substantial cash balance. At Berkshire, met all the needs of our operating companies. Our intrinsic business value is very considerably above 120% of value, and we have signaled that if we got the opportunity, say it right here, we said it before, but in addition, we've signaled that by saying that we would repurchase our shares as long as we had a substantial cash balance. The calculus has met all the needs of our operating companies. You take care of your. You take care of your business, 120% of book value, and if we got the opportunity, businesses, it's something where you add there to the per share value of the business, buy a whole lot of it. You do that. If you can repurchase your shares at a significant discount from intrinsic calculus, the calculus like buying dollar bills, very much what I put in the report, 80 cents or whatever. You take care of your, it's a very sure way with money for improving per share.
value.
And if you can buy additional businesses, it's something where you do it because every time we announce the business, you do that. People say, well, if you can repurchase your shares more than 120% discount from
if those cheapskates are willing to pay that.
It's like buying dollar bills at 90 cents or 80 cents or whatever. Well, if at least one cheapskate is. It's a very sure way of improving per share value. And, they're right. It's been very difficult for us. We don't really to do it because every time we got mixed emotions on it. We don't. People say we don't really like the idea. He thinks it's worth more than 120% of running a company that makes most of its money by buying its partners out at a discount. Well, if at least partners want to sell out at a discount, we also like the idea of buying and making sure money that way. And we don't really. We haven't done much of it. Mixed emotions on it. We don't really like the idea. Our stock of running a company sold in a reasonable range, money by buying its partners out at a discount value. We would think that probably partners want to sell out at a discount. We also like the idea in recent years of buying and making at least some money that way. There were a few years when we thought it sold for. We haven't done much of it more than intrinsic business value most of the time. But if it our stock, in our opinion, has sold in a reasonable range. The stock relation to intrinsic business value. We're selling at a significant discount, and we've got the money around. A fairly significant percentage of the time in recent years it's sold at reasonably some discount. There were a few years when we thought it sold for for more than intrinsic business value. Likely, but there could be circumstances where we would buy a whole lot. In our opinion, at a price that would be attractive. The stock for the stockholders who is selling at a significant discount, and we've got the money around, and we've got
nothing to add.
Station 3 was in reasonable quantity.
Hi there, Sean Cawley. I'm a real estate agent in Los Angeles, California. Question for Charlie.
There could be circumstances
it's kind of a real estate question, and it's also a company culture question. Have you ever considered moving to Omaha to be closer to corporate headquarters?
Station 3.
Oh, I think the answer to that
Sean
is no.
Cawley. I'm a real estate agent
the answer to
in
that
Los
is
Angeles,
no.
California. Question for Charlie. It's kind of a real estate question, and it's also a company culture question. Have you ever considered moving to Omaha
we have gotten
to be closer to corporate headquarters?
The phone and,
oh, I think the answer to that is no. No, we've never learned anything.
I'm sure the answer to that is no. But we actually, I mean, as a practical matter, works. We each know exactly how well the other guy thinks. Even though we don't really even need the phone exactly. We have gotten to the point where we can handle using the phone, and we used to do a lot of phoning back when it cost a lot of money. Don't push us beyond that. It doesn't cost anything to phone, and we don't talk to each other. But we actually, I mean, as a practical matter, we each know exactly how. But Charlie has a lot of fond thoughts about Omaha. We don't really even need the phone exactly.
Yes, although as I said,
we used to do a lot of
phoning this weekend.
Back when it cost a lot of money.
They're rebuilding it so rapidly now that I feel like Rip Van Winkle. They've torn down so many of the buildings I remember. It's amazing how much
Charlie has
a
lot of fond thoughts about Omaha, incidentally. Well, you have to remember that a third of the lifetime of the country has passed during our lifetime. So you have to expect a little change
this weekend, Charlie. They are rebuilding it so rapidly now that I feel like
what would the underwriting experts at your casualty insurance and reinsurance companies advise you and your fellow board members are the emerging risks to Berkshire's many enterprises from the changes in extreme weather associated with climate change? What are your thoughts on the price on carbon debate?
Well, as you've noticed, if you've been here the last few years,
what would the underwriting experts
climate really is
casualty insurance and reinsurance companies advise you and your fellow board members are the emerging risks to Berkshire's many enterprises from the changes in extreme weather associated with climate change? What are your thoughts on the price on carbon debate?
Yeah, my general feeling is, if you've been here the last few years, the climate really is certainly a reasonable getting a lot warmer. That people that are worried about the warming and the effect of CO2, et cetera. Well, Charlie knows far more about science than I do. But I don't know enough so that I can say that. But that I can speak as any kind of an expert on it. My general feeling is I don't know the answer on it, but I certainly are willing to. I'm certainly a reasonable chance that. There are a lot of very smart people who think that, and that are worried about it's a reasonable warming and the effect of CO2, et cetera. I don't think are right that it makes. But I don't know enough
any
so
real
that I can
difference
say that I can
assessing
insurance rates from year to year.
I don't know the answer on it, but I certainly are willing.
We have a general tendency to be
a lot of very smart
pessimistic in our assumptions about the likelihood
reasonable assumption
of natural catastrophes, but we would have
I don't think
that it
general
makes
bias
any real difference
useful
in assessing insurance rates
there were no
from year to year.
carbon emissions of any kind going on.
We have a general tendency that to be
whatever the past
pessimistic
history
in our
had been of
assumptions
natural
about the likelihood
disasters, we would
of natural
assume that they were going to be
catastrophes, but we
somewhat
would have
worse.
that and general bias, which I think is useful.
Global warming,
In terms
regardless
of
if there were no
resetting
carbon emissions of any
prices
kind
of
going
insurance
on,
from year to
we
year,
would still
is not
assume
that is not a real factor.
whatever the past
general
history had been
pessimistic
of
bias
natural
disasters, we would
something of a factor.
assume that they were going to be somewhat worse. And the second part about pricing of carbon emissions, I want to repeat that again.
global warming,
The full
In
question,
terms of
and I abbreviated it, was
resetting
what are your thoughts on
prices
the
of insurance
price of
from year to
carbon
year
debate?
not
Do
a-
you think it's
not a
a
real
feasible way, for example, to
factor.
incentivize
Our
efficiency
general
improvements and
pessimistic
capture the
bias is
externalities of carbon's
something of a factor.
damaging effects, or is it a lofty,
The
idealized
second
concept
part
too
about
tricky to
pricing
figure
of
out in practice?
carbon emissions, I want to repeat that again. I would say that the question
The
calls
full
for-
question, and I
Charlie give
abbreviated
the
it, was
answer.
what are your thoughts on the price of carbon debate?
Well, you
Do
got to
you
realize
think it's
that I'm a
feasible way,
Caltech
for
trained
example, to incentivize
meteorologist, but
efficiency improvements
that was
and capture
before
the
they invented
externalities
most of
of
modern
carbon's
meteorology.
damaging effects, or is it a lofty, idealized concept
think
too tricky to
that,
figure out in practice?
Carbon trading is pretty
I would say that
impractical.
the question
A whole
calls
bunch
for
of nations with
Charlie
different
give the
ideas
answer.
and so on. Well, you
I
got
think
to
you're going
realize
to
that
change
I'm a
habits. The
Caltech
correct
trained
answer is
meteorologist, but
carbon
that was
taxes.
before they'd invented most of modern
I think
meteorology, because they're socialists and wanted to tax the thing. I think that the people needed the most. Carbon trading is pretty impractical. They put these big high taxes
bunch of
on
nations
motor fuel
with
different ideas and so on. They did it by accident and not because it was a good idea.
I think
because
if you wanted to change habits, the correct answer is
because they really needed
carbon
money.
taxes.
But I think they stumbled into the right policy because they're socialists and wanted to
have
tax the thing
way higher taxes
on the people needed the most.
motor fuel.
They put these big high taxes
and that's
on motor
efficient.
fuel. So they did it by accident. And not because it was a good idea vis-a-vis global warming. Were shareholders who they liked because they really needed the money. Clapping for high taxes. But I think they stumbled into the right policy.
They weren't all
I think
clapping.
The United States should have way higher taxes on motor fuel. And that's efficient.
The last 15 years has demonstrated that short selling can
Some
be a
people
value
shareholders, so they like
additive to total
clapping
return
for high
when done
taxes.
by professionals. In fact, I believe
weren't all
Todd
clapping.
Combs had success as a short seller when you hired him.
Had so much success and stopped doing it.
Mike, the last 15 years has demonstrated that short selling can be a value additive to total return when done by professionals. In fact, yes, Charlie, but he got Todd Combs had success as a short seller. My question is, you hired
No,
him.
he didn't.
Had so much success and stopped doing it.
Can't slide that one in there.
Okay. My question is, Mike, would you ever consider committing capital to a short selling strategy? Would you or Berkshire consider being my Homer Dodge, who invested in your partnership? Yes, Charlie, but he got 7 investors from that. Success. Would you, my question is, would Berkshire Hathaway be willing to give my firm
Can't
at
slide
least
that one in
$100
there.
million in a managed account? If Seabreeze failed to outperform, would you ever consider committing capital during the 2-year period of the book value increase in Berkshire? Consider being my Homer Dodge, who contributed half to the Sherwood Foundation 7 investors and half to 2 charities of my choice, including the Berkshire Hathaway, be willing to give my firm and at least $100 million in a managed account. If Seabreeze failed to outperform 25% of the earned fees during the 2-year period of the book value, and I want to add Berkshire, add something all the earned fees. You talked about being technophobic. Would be contributed half to the Sherwood Technology Foundation, may be very hard for 2 charities of my choice, including the Jewish Federation of Palm Beach County, many industries, and even whose business models are scathed by Berkshire's change in book value. 25% of the earned fees would be contributed to the charities. I want to add something.
150. Okay, 155 without an ad.
Technology may be very hard for Berkshire to invest in, but it is also disruptive to many industries whose business models are scathed by it. And this produces very fertile ground for short-selling opportunities.
We both we got to 150. Okay, 155 without that. So an ad, but just think about how lucky you are. You don't have the competition from all kinds of people that listen to us or that ourselves. No, we may even propose a little wager at some point, but we'll let that ride for the time being. Charlie and I are no strangers to short selling. I mean, we both failed at it. Yeah, to go back far enough. We did a reasonable amount of short selling, and I've certainly identified lots of companies from all kinds of people that listen to us. I thought would far overpriced. I've identified even proposed a number of companies at some point, but we'll let that ride for the time being. I was virtually certain I've known frauds, and so Charlie. I've been seeing them ever since we got in the business. Go back far enough. Making a lot of money short selling, and I've certainly identified lots of companies. Is not a game that I thought appeals to us far over a long period of time. It's one of those identified a fair number of companies that
we don't like trading agony for money.
I was virtually certain were frauds, and so Charlie, we've been seeing them ever since we got in the business, but making a lot of money short selling still.
Could you be more specific about what factors you considered
to us over a
when
long period
determining
of time? It's one of those things that
fair price was for
we don't like trading
acquisitions
agony
such
for
as
money.
Heinz, and also what sources do you use to make judgments about major changes that will affect an industry? Could you be more specific about what factors you considered
too much, isn't that right,
in
Charlie?
determining what a fair price was for
we find the business
acquisitions such as
so
Heinz,
compelling,
and also
management or associates so
what
compelling.
What sources do you use to make judgments
we gag
about
and we get there
major
on the
changes
price,
that will affect an industry?
There is no mathematical. We usually feel we're paying too much, isn't that right, Charlie? Looking back at when we bought wonderful businesses, we find the business out to continue to be wonderful, so compelling. We could have paid management or associates more money, so compelling, and they still would have been that great business decisions. We gag and we get there on the price, but you never know. There is no for sure. There is no mathematical. So it isn't a perfect mathematical formula. It isn't as precise as you might think. When we bought wonderful businesses that turned out to get a chance to be wonderful, we could have paid wonderful business, and by that I mean one that has they still economic characteristics. Business decisions lead you to believe. You never know 100% for sure certainty that they will be earning unusual returns on capital over time. It isn't as precise as you might think. Generally speaking, get the chance to employ more capital at high rates of return. And by that I mean one that has economic characteristics that probably lead you. You probably should stretch a little. Charlie and I have had a high degree of several conversations. They will be earning unusual returns on capital over time. Business unusually high, which we liked. And we're sort of gagging. Better yet, if they get the chance to employ more capital at high rates of return. That's the best of all businesses. And let's do it, even though you're probably kind of kills us to pay that last 5%. We did that with Charlie, and I had Charlie was the one that several conversations. For God's sakes, when we were looking at the building, was the one that was suffering. We liked, but it's sort of gagging. It's happened quite a few times, hasn't it? At the price, and
it almost always
Charlie
happens.
Or I will say,
modern prices are not
let's
cheap.
do it, even though it kind of kills us to pay that last 5%. We did that with See's Candy. Charlie was the one lots of them, and you're not going to get the opportunity to write the check. Although you do in the market. Suffering. The stock market will offer you opportunities. It's happened quite a few times. For profit percentage-wise that you'll never see. In terms of negotiated purchase of business. And negotiated purchase of business.
Modern prices are not cheap.
You're almost always dealing with someone that has the option of either selling or not selling, and you're not going to find lots of the time when they decide to sell and all that sort of thing. Although you do in the markets. The stock market will offer you opportunities. Crazy things can happen. You can have profit percentage-wise that you'll never see. That will cause a flash crash or negotiated purchase. The world really hasn't negotiated purchase of business, but all kinds of. You're almost always dealing with someone that has the option of either selling or not selling. You will
can sort of pick the time when they decide to sell and in the stock market that you'll never really. In stock markets, it's an auction market. Crazy things can happen. You can have, but what we really like, we really like buying. Will cause a flash crash or something. The world really hasn't changed at all. But all kinds of selling mechanisms are tripped off, and that sort of thing. So you've got lots of opportunity, and you're going to continue in the stock market. You'll never really want to deploy it in the businesses that you can own forever. But what we really like, we really like buying businesses to hold and keep. We like buying cheap marketable securities too, but
we're sort of in a different mode now.
Particularly when
that has a
you've
great
got
lesson.
Lots of cash coming in, and you're going to continue to have lots of cash coming in.
If we kept our earlier modes, if we'd never learned,
in great businesses,
we wouldn't have done very well.
You can own forever.
The game of life is a game of everlasting learning. No, at least it is if you want to win. We're sort of in a different mode now.
I'm an 86-year-old World War II vet.
That has a great lesson.
Puts me about halfway between you and Mr. Munger. I would respectfully and urgently request that you quit eating so many hamburgers. Those things plug up your arteries, and I want to keep you around for a while in spite of the fact the unfriendliness comes in here that you voted for President Obama. I'm an 86-year-old World War II vet.
This guy is trying to kill me, and he's doing
about halfway between you and Mr. Munger. You frequently I would respectfully and urgently reputation for thriftiness, and you many hamburgers. The virtues of the managers of Berkshire Those things plug up your arteries, and I want to keep you around for a while in spite of the fact the unfriendliness comes in here that you voted for President Obama. Achieve your astounding success. Now, here is the question. How can you possibly support an administration which has plunged our country into $16 trillion worth of debt for thriftiness, and you've extolled the virtues of the managers of Berkshire companies who have invariably been extremely cost-conscious? If these are hallmarks of the philosophy which has enabled you to achieve your astounding success, how can you possibly support an administration which has plunged our country into $16 trillion worth of debt?
The $16 trillion is on the. We'll have to give part of the government a certain amount of credit for that too. But in the end, I find it totally unproductive, and that fellow at 86 probably is. They should have found it out. They certainly didn't. To discuss politics with people. I mean, you're going to have roughly half agree with you and half disagree. Policies that if you look at this financial crisis, even though he's a Republican, I'm a Democrat, we really don't disagree as much as you might. Part of the government based on that. Otherwise, I could say you could just take your. In the end, I find it totally unproductive, and we would offer 86 for everyone. Should have found it out by now. To discuss politics with people. I mean, you're going to have roughly half agree with you and half disagree. So if you look at this. Trouble with Charlie and I, even though he's a Republican, I'm a Democrat, we really don't disagree as much as you might think based on that. Otherwise, I could say you could just take your pick here as vote for one of us and ignore the other appropriate. And we would offer a little something for everyone. The threat to the economy that was posed by the greatest amount in my lifetime. I mean, you literally had a situation in the last where Berkshire Hathaway was getting 4 years the amount of stimulus provided, General Electric provided money. And I think we were the last stop. Has been quite appropriate. And that is quite a situation. It's quite a situation when Freddie and Fannie go into the economy that was posed conservatorship and the greatest WAMU and panic in my lifetime. I mean, you literally had a situation where money market funds, where Berkshire Hathaway was going to have 5% drained out of them in 3 days and needed money underway. So we were the last stop. We needed fiscal stimulus in this country. That is quite a situation. Now, it's quite a situation. The real question is Freddie and Fannie how to get off of that conservatorship and WAMU and WACO is a problem. Fail and where money market funds we would have have 5% drained out of them in 3 days program in my underway. So starting in 2008, and how do you feel about the fiscal stimulus in this country?
I agree with you completely.
Now, the real question is how to get off of that.
And by the way, so did George W. Bush.
It's a lesser problem.
That was bipartisan. That we were in so much trouble on both sides of the aisle. We finally got together and supported
starting in 2008. How do you feel about that, Charlie? George Bush.
I agree with you completely.
Probably the 10 greatest words of economic thought in history.
And by the way, so did George W. Bush.
Yeah,
that was bipartisan. We were in so much trouble on both sides of the aisle. We finally got together
2008 and said if money doesn't loosen up, this sucker can get down. George Bush issued,
I mean, that is a man that knew how to get to the point. Words of economic thought. And I give him great credit for it. Most people don't give him credit for that. They think of Adam Smith. Plenty of members of his party advantage and Keynes and Animal Spirits and all those guys. But George Bush, we owe him a lot. Went out there in September of 2008 and said if money doesn't loosen up, this sucker could go down. Our leaders, generally speaking, of both parties. I mean, that is a man once they were in knew how to get to the point. I think of behavior. And I give him great credit for it. Enormous came up credit. With policies. Because plenty of members of his party did not agree with what he was doing. We owe him a lot in that respect. In avoiding something far worse than what we experienced. Our leaders, generally speaking, easy to do. Parties. They took some guts. Once they were in the terrible trouble, I am disturbed. I think have behaved by came up with policies, national debt that in general grows in respect very useful to GDP. In fact, I wrote an article in the New York Times, an op-ed piece we experienced in 2000. And they weren't easy to do. 2009 or took some guts. And then talking about this very problem. I am not, but I am disturbed. We came out of World War II with a debt higher, national debt, a gross or net debt higher grows GDP than in respect now and to GDP. In fact, I wrote an article in the New York Times predicting terrible things at that time. 2000 situation. I think maybe 2009 or 2010, talking about this very problem. The real danger is that it just. We came out of World War II here to higher a gross or net debt higher discipline GDP than we have now. We've encountered far worse problems. People were predicting terrible things at that time because of that situation. Our country's toughest hour country has done sensationally huge margin, and I think we will. The real danger is that it just fine, but with a lot continues to grow and it gets easier and to. Kind of nonsense that will exercise some bother you when you read about it day to day. But we've encountered far worse problems. Viewpoint of history 10 or 20 years from now, people will not be that disturbed. Charlie, this is not our country's toughest hour by. Well, I agree with you about George W. Bush, and I like these nonpartisan episodes and when we get together and do things. Kind of nonsense that will bother you when you read about it day to day, but when you look at it from the viewpoint of history, current problems are quite confusing. In fact, if you aren't confused, I don't think you understand it very well. Well, I agree with you about George W. Bush. That sort of immunizes you from everything. I like these nonpartisan episodes when we get together and do things. How bothered are you by the I also think level of debt in relation to GDP? Our current problems are quite confusing. In fact, if you aren't confused, I don't think you understand it very well. One fixed ratio that is written in the stars. That sort of immunizes you from everything. As a matter of fact, well, most of the debt, as I conceive it, is not even counted in what you call debt. By the off-the-books debt of the United States is bigger than the on-the-books debt. All the Well, I don't think there's any present value of future promises. One fixed ratio that is written in the stars. Yes, required. As a matter of fact, and most of the debt, as I conceive it, is not even counted in what you call debt. Really going to take the off-the-books debt of the United States somebody who's bigger than the on-the-books debt. Well, I don't think it's very likely. No. Present value of future promises that are. It's not a killer, actually, in terms of change. If you have a GDP that rises a couple percent and in real terms, well, of course, more in nominal terms. That's the great problem. Changed. But all of our really going to take Social Security GDP will just somebody who's worked a lifetime rise at 2% per annum. Well, I don't think it's very likely. No. All these problems that the Republicans are screaming about is not a killer, actually. Insignificance. If you have a GDP that rises a couple percent in real terms. To have policies that enable you to do that's the great problem. And I'm not sure we always all of our problems are trivial. If GDP will just stay tuned. Rise at 2%.
Some say that Benjamin Moore is disadvantaged because it doesn't control its own distribution, as does Sherwin-Williams, and they note that it has lost market share to Bear, which is sold in the home centers at lower prices. You recently replaced management there. What changes in strategy and or pricing, if any, are being undertaken at that unit, and what is the outlook for that franchise? Stay tuned. Benjamin Moore. Some say that Benjamin Moore is disadvantaged because it doesn't control its own distribution, as does Sherwin-Williams, and they note that it has lost market share to Bear, which is sold in the home centers at lower prices. Best regarded. You recently replaced management there. What changes in strategy and or pricing, if any, are being undertaken at that unit, and what is the outlook for that franchise?
Benjamin Moore, I
made a promise. I even made a video.
It's a relatively small percentage
of the total
people
paint
that
industry,
invested there
at the high
savings
and passed on from generation to generation.
paint.
And we have not lost from Benjamin Moore
position in
and
that
counted
respect,
on
but
the company
when
adhering
we
to a
purchased
dealer
their
system.
more,
Even though you could always get a huge
made a
jump
promise,
in
I
volume,
made a
video, particularly in the first
year,
if you went with
it had
a
a
big
dealer
boxes,
system,
we were always
and people
approached
that
by
invested
big
there,
boxes, and they said, savings,
let us
and
take
passed
Benjamin
on
Moore
from
into our
generation to generation,
stores,
whether it be Home Depot
dealerships
or
from
Benjamin Moore,
and
we would have
and
counted on
volume when that happened,
and
the company
adhering to a dealer system
to have
even though you could always get a huge jump in volume,
that kind of identity,
particularly in the first year if you
in
went
their
with the big
stores,
boxes. So
it would have
we were
represented
always
a
approached
total
by the big
change in the
boxes, and they said,
distribution.
let us take Benjamin Moore into our. I don't think it would have worked out as well over time, and I know it would have been. And essentially, we would have gotten a big jump in my pledge. Volume when that happened, which the management pledge too. It would have been double crossing to have a network of dealers that kind of identity in their stores, and it would have represented a total change in the distribution with the policy. Arrangement. I don't think it would have worked out as well over time, and I know it would have been with essentially a first-class brand like Benjamin Moore, which the never pledge too. It would have been double crossing a market share, a network of dealers will take a bear, which had trusted us and trusted through Home Depot. We were actually offered to continue one time with the policy. A dealer policy, but will work with the first-class brand like Benjamin Moore. It will never get the kind of market share investigating and well on its way to take a bear, which moves that would have distributed through Home Depot. We were actually offered bear at one time. We felt with that one.
Yes,
Drastically hurt the dealers and violate the pledge that I'd made to them back when we bought it. So we did have a change there. Actually investigating and well on its way to implementing some. We will not follow the Sherwin-Williams path, which is a very, it's a very effective business strategy. I'm not knocking that at all, but that is not. And violate the pledge that I made to them back when we bought it on the high end of the market. So we did have a change
besides, it's worked very well.
Oh yeah, it's worked well. It'll continue to work well. It doesn't mean that Sherwin-Williams won't do extremely well. I think they will. Doesn't mean the barrel path, which is a very, it's a very effective. We are in a different segment business strategy. It's up to us to knocking that at all, but that is not protect our strategy. Our strategy will be a dealer strategy focused on the high end of the market. And
besides, it's worked very well.
It's worked well. It'll continue to work well. The dealer doesn't mean that Sherwin-Williams won't do extremely well. I think they have something. Doesn't mean that they'll have something. Well, I think they will, especially with those dealers. We are in a different segment, and Benjamin Moore has up to us to lead to protect far higher market shares. I think it will lead, and it has, to very decent profitability. Benjamin Moore is a good business, and I think it will continue to be a good business. The dealer distribution network, and I think we can have something,
totally.
and do have something
wish you could buy 5
very
more like
special
it
with those
tomorrow.
dealers and with the position that
How about a strategy
Moore
of
has, but it will
perhaps
not lead
buying 20 of the best stocks in America,
far
Procter
higher
&
market shares.
Gamble,
I think it
Coca-Cola,
will
Johnson
lead,
Johnson,
and
whatever,
that has
the companies that have been
very
around
decent
for centuries,
profitability.
or
Benjamin
a century
Moore
or
is a good
decades or
business,
whatever,
and I think it
and just
will
leaving it at
continue to be a
that.
good
Do you
business.
think
Charlie?
that would outperform an index
Well, I
fund
agree
over the long
totally.
term? And I want Charlie's opinion
of
as
buy
well.
5 more like it tomorrow.
Exactly.
How about a
What are you
strategy
saying,
of
20 largest
perhaps
companies, 20
buying
best,
20 of the
you make
best
it
stocks in
different
America, Procter & Gamble,
different people
Coca-Cola,
on
Johnson
but
Johnson,
I think
whatever,
you would-
the companies
probably
that have
the
been
20
around
you
for
would pick
centuries, or a century or
would
decades or whatever, and just leaving it at
virtually
that.
match
Do you think
the results
that
of an index
would
fund. Who knows
outperform
exactly
an
which
index
ones would
fund
be the
over the
best,
long
but
term? And I want Charlie's
the
opinion
real
as well.
distinction, and Graham made this in his book, basically,
I don't know
is between saying the 20 largest companies, the 20 best is going to spend an appreciable amount of time, different people on which they are. But I think you would, something of an probably the 20 you would businesses, because that's what stocks are, or the person who is match the results of busy with another profession. Who knows exactly which one wants to own best. But equities, and actually the real distinction in equities, and Graham made this in his book. The real problem they have, the person who may tend to get excited about stocks at the wrong time, amount of time becoming, they something of an expert
on businesses,
really,
because that's what stocks
the
are.
idea of buying an
Or the person
index
who
fund
is going to
over time is not to buy stocks at the right time or the right stocks.
to own equities
and actually will do
very
long
well in
time
equity stocks. So
but
equities will
the
do
real
well
problem
over time.
they have is that they
just have
may
to
tend to get
avoid
excited about stocks at the wrong time.
Getting excited when other people are excited,
getting excited about certain industries when other
Really,
people are.
the idea
Trying
of
to
buying
behave
an
like a professional
index
when
fund
you
over
over
time
time
is
is not to buy stocks at the right time or the right stocks. It's
what's
to
needed to
avoid
gain
buying
to be
them
a
at the
professional.
wrong time, the wrong
And
stock.
if you're
So
an amateur investor, there's
equities
nothing
will do
wrong
well
with being
over
an
time.
amateur investor.
And
you just have to avoid
simply
You've got a
getting
very,
getting excited when other
logical,
people are excited, or
profitable course of action
getting excited about certain
available to
industries
you,
when
and
other
that is
people are
simply to buy into
trying to behave like
American
a professional
business
when you
in a
aren't
broadly
spending the time
diversified way
and bringing
put
your money in over time.
What's
So I would
needed
say
to
your
gain
your
to
group
be a
of 20 will
professional.
probably, and if you're an amateur
will
investor,
probably
there's
match
nothing
an
wrong with
index
being an
fund,
amateur
and you'll
investor.
probably do well in that,
and
you
you
just
will do well
simply
in an
got a
index
very
fund. Logical, profitable course of action.
Well, I've got nothing
available
to add.
you,
I do
and that
think
is
it's
simply to buy into
that
American
knowing
business
the edge of
in a
your own
broadly diversified
competency
way
is
and
very
put your money in
important.
over time. So I would say
You
your,
think you
your
know a
group
lot
of
more
20
than you
will
do, but
probably
you're really asking for a lot
will
of
probably
trouble.
match an index fund,
And
you'll
that's
probably
true
do
outside
well
of
in that,
investment.
Yeah.
and you will do well in an index fund.
Works
Charlie?
particularly well in matrimony. Well, I've got nothing to add. I do think it's
Do you want to give any other advice?
knowing
on those?
the edge of your own competency is very
He
important.
gave it in the movie.
If you think you know
I
a
saw
lot more
people
than you
taking
do,
notes.
you're
Your
really asking
enormously
for a lot of
generous
trouble.
multi-billion-dollar charitable
Yeah,
gifts
and
of
that's true
Berkshire
outside
Hathaway
of
stock
investment.
over the
Yeah.
past decade have and will continue to be sources of
Works
saleable
particularly
assets
well
for the
in
charities
matrimony.
linked to the Buffett, Gates, and Munger families. Could
want
annual
to give any
sales
other
of billions
advice
of
on
dollars
those?
worth of donated stock by these charitable foundations
He gave
be
it
a
in the
reason
movie.
why
I
shares have traded under
I saw people
120%
taking
of book
notes.
value? Your enormously And will generous announce share multi-billion repurchase dollar plans charitable fully gifts of address Berkshire this Hathaway selling. stock
give
over the
away
past decade have and will
4
continue to be
3/4% of
sources
my
of
stock,
saleable
we'll say, every
assets for
year.
the charities linked
And let's
to the
say
Buffett,
that's,
Gates, and Munger families.
$2
Could
billion
annual
worth
sales
of
of
stock,
billions of
roughly.
dollars worth of
That's
donated stock by these
1%,
charitable foundations be a reason why
little less than
shares have
1%
traded under
of the market
120%
value
of book
Berkshire.
value?
Many companies
And will
on the
announce
Stock
share
Exchange
repurchase plans
trade
fully
over
address this
100% a
selling.
year. I give away 1%, 4 3/4% of my stock, we'll say, every
sale
year annually, and let's say that's of the outstanding capitalization is
$2 billion
absolutely
worth
peanuts.
of stock, roughly.
That's you can even 1%. You can even argue in some cases that a little less than 1%. It can
of the
aid
market value of Berkshire.
many companies on the Stock Exchange
the availability
trade
of
over
stock
100%
sometimes
a
determines
year.
whether
A
people
1% get interested in buying, but one sale annually, a supply of 1% of the outstanding capitalization is absolutely
change the
peanuts.
level
At
which a stock trades.
You can even argue in some cases that it's insignificant compared to the
you can aid
the volume in terms of market price, because the volume of stock sometimes combined is people get probably averages $400 or $500 million a day. So a supply of 1% annually is not going to change the level at which a stock trades. I mean, you can argue that everybody else has a right to compared to the sell their stock or give it to a charity.
Berkshire,
I don't think I should be totally. Berkshire's volume, A and B combined, is tied up in terms of probably averages the stock away $500 million a day.
Well,
So
nothing so insignificant as an extra $2 billion to an old man.
And you can argue that everybody else has a right to.
I've never given away a penny.
I don't think I should
in any way changed my life.
Totally
No. Have you, Charlie?
tied up in terms of being able to give the stock
Okay.
away. Charlie?
Well,
We never even thought about it.
nothing so insignificant as an extra $2 billion to an old man.
It has a lot more utility in the hands of other people than it does in my
I've
safe
never-
deposit box.
I've never given away a
Looking over
penny.
your first
that in
quarter
any way
results,
changed my
the
life.
10Q.
No,
I was wondering,
no.
and this might
You
apply
sure?
more to the non-insurance businesses.
No.
What are you
Okay,
seeing in
well, of
terms
course
of
not.
reading the tea leaves of the
We never
U.S.
even thought
economy
about
right
it.
now? Are you
No,
starting
it
to
would
see
be
lift?
unthinkable.
And I'm curious if you have any, if you
It
feel
has
any
a
need
lot more
to start
utility
to
in the hands of other people than it
expand
does
Berkshire
in my
internationally,
safe deposit box.
outside of the
that-
US. Looking over
Well,
your
we're willing to
first
go
quarter results and the
any
10Q,
place where we
I was
think
wondering,
we
and this might
understand
apply more to the
what
non-insurance
things are going
businesses.
to, in a
What are you
reasonable way,
seeing
what
in
things are
terms
going to look
of
like
reading
in
the tea
5 or
leaves
10 years,
for
and
the
where we
US
get our money's
economy
worth,
right now? Are you
good
starting to
management, and all
see
of the
lift?
things that we emphasize.
I'm curious
But-
if
so we don't.
if if you feel any need to start to invest,
we've never foreclosed anything, but we're going to find most of our
outside of the U.S.
opportunities in the United States. It's just the nature of any place. We think we understand
what things are going to, in a reasonable way, what things are going to look like in 5 or 10 years, and where we get our money's worth. Most of our management and all those things that we emphasize, but we find things outside the United States, particularly in terms of bolt-on acquisitions. In terms of current business, we've never foreclosed anything, but we're going to find most of our opportunities the fall of 2009. It's just the nature coming on 4 years. We've seen a gradual improvement, and sometimes people and we're better known here, but it was speeding up quite a bit. Most of our deals will take place here, but we find things outside the United States, particularly in terms of bolt-on acquisitions happen. In terms of current business, what we see overall is just ever since slow the fall of 2009, you saw those figures on 4 years. Car loadings for the first 17 weeks. A gradual improvement. We were up 3 and a fraction percent, but the other railroads were up 4 speeding up quite a bit. The industry as a whole, many get feeling that 1% or thereabouts, a little over. They start talking about a double dip, which I've never believed in, and it hasn't. This economy is not. What we see overall is just it's not come roaring back in any way, shape, or form. The American economy. You saw those figures on car loadings for the first 17 weeks. I wouldn't be surprised if it keeps going. We were up 3 and a fraction percent, but the other railroads were up 0.4%. Overhang. So the industry as a whole and 1% or there. Housing over 1%. Ended about a year ago. But this economy is not. So we're starting the last 4 years. It's not come roaring back in any way, shape, or form. A big psychological it's never faltered, and we're seeing some. I wouldn't be surprised if it keeps construction, but we don't now finally. We don't want to start overbuilding again. Overhang. We do want to have and housing starts housing more or less equal household formation about a year ago, but and I think we're seeing that. So if you ask me where we're going to be, we're seeing some recovery in home prices, which has a big psychological effect. I don't think we'll be. We're seeing some improvement in construction, but we don't want surge of any sort. We don't want to start overbuilding again. Either. We really want to have housing starts.
It's not a field where
household
I've been good.
And I think we do know what's going on now. So if you ask me where we're going to be when we meet here next year, I think we will have moved forward. I guess that ends it. I don't think we'll be. It will be in any.
You can't make a lot of money knowing what's going on
surge of any sort, but I don't think it will stall either. And you can't make a lot of money thinking you know what's going to go on tomorrow if you don't.
It's not a field where.
Yeah, we will. We'll just keep playing the game. We do know what's going on now. And if we
know what's going on.
If we hear about something tomorrow that we can spend $15 or $20 billion on, and we feel we like the business, United States or otherwise,
what's going on now,
we'll move in an instant. And you can't make a lot of money thinking you know what's going to go on tomorrow if you don't either. We just never know. We will when opportunity is going to come along.
Yeah, we keep playing.
It does come along from time to time. If we hear about something tomorrow that we can spend $15 or $20 billion on, and it comes in a huge. We like the business. United States or otherwise, from time to time. We may not see very many more, but most of the people in this room, and if we don't, we won't do anything. We'll see 4 or 5 times. We just never know. In our lifetimes, they will see when opportunity is going to come along. But it does come along from time to time. And sometimes I feel myself very lucky, probably in equity markets, financial markets, and it comes in a huge way. People that will happen. Things will happen, and then, we may not see very many more, but most of the people in this room, and that means both, will see 4 or 5 times the ability, and also during their lifetimes they will see incredible mental fortitude offered to jump in when most people are jumping out.
If I'm in my 20s and I'm starting a partnership, what advice do you have about getting people to put in money before I have a track record as a solo investor?
Both in terms of having the ability and also, well, you haven't sold me mental fortitude. They jump in when most people are jumping out.
No, if I'm in my 20s and I'm starting a partnership,
people should be quite cautious about
what advice do you
investing
have
money with other
about
people,
getting people to put in money
even when they have a track record?
Before I have a track record as a solo investor.
Much, but overall, I would advise any young person that wants to. Well, you haven't sold me money later on to start developing an audited track record. No, as early as they can. I mean, I think it was far cautious about far from investing money with other people. We hired Todd, even when they have a track record. But we certainly a lot of track records that don't mean much. But we looked overall, I would advise any young person that wants to manage money and could understand money later on. We see a lot of records to start developing an audited track record as early as they can. You have it was far from the sole reason, some years ago, and we hired Todd and Ted, 300, but we certainly looked at their record. 10 million orangutans out there. We looked at a record that we both believed, they flip them, and could understand. 10 times, we see a lot of records instead of having that we don't really think 300 million left. If you get 300,000 roughly left, if you have a flip 10 times coin flipping contest successfully, some years ago, and those orangutans will probably go around trying to attract a lot of money to back them. 10 million orangutans out there, and they all flip coins. So it's our job. They flip them when we hire somebody 10 times. Money, to figure out whether they've been lucky coin flippers or whether they 300 million left. You'll have 300,000.
You had his problem.
10 times.
Didn't you scrape together about $100,000 from a loving family?
Those orangutans. Well, I hope they get loving me after a lot of money. That was the well, so it's our job. It was very slow, and it should have been very slow. Whether they've been lucky coin flippers, or as Charlie has pointed out, some people thought I was running a Ponzi scheme.
You had his problem.
May not have thought of it.
Together about $100,000 from a loving family.
They were selling investments, and I hope they kept loving me after they gave me the money. That was the. To attract money, you should deserve money. It was very slow, and it should have been very slow. You should develop a record over time that as Charlie has pointed out, some people explain to people why that probably there, and other people may not have thought it, but they thought it was to their advantage to sort of scare people because they were selling investments, simply being in tune with the trend or simply just being lucky. To attract money, you should deserve money, and you should. You're starting to develop a record over time. Years old, how do you attract money? That does it, and then you should be able to explain to people why that
friends and family
record is
or people whose trust they've already earned in some other way.
Sound thinking, rather
so it's hard to do when you're young, and that's why people
being
start
in tune
so
with the trend or simply just being lucky. Charlie, and relatively few will be successful.
That's right.
You're starting today, and you're 25 years old. How do you great many will be successful and make. I mean, we had the hedge fund
friends
record
and
here,
family,
and during that time,
people whose trust they've already earned
the
in
hedge
some
fund
other
managers.
way.
Probably
so it's hard to do when you're young, and that's why people
start a very considerable amount of money. As I pointed out, Todd and Ted, relatively few will be successful. Working under a 2 and 20 arrangement, some will, a great many will be successful and make. I mean, we had a hole in the ground, and during that time, make $120 million each. Probably made a very considerable amount of money. Exactly as I pointed out, an arrangement that Todd and Ted. You don't want to think about a little bit before you engage. Working under a 2 and 20 arrangement.
The arithmetic attracts many of the wrong sort of people.
In a hole in the ground would naturally we thought we were exceptions. Make $120 million each.
There's a unique dynamic that exists between your recognition of Ajit's special skills and Ajit's special skills. You comment often about how unique Ajit's skills are. So just tell us, is Ajit your successor?
Attracts many of the wrong sort of people.
And if not, what happens to Ajit's businesses
naturally, we thought we were
Ajit?
Exceptions. Well, they
At
won't
Berkshire,
be
there's a unique dynamic that exists between your recognition of Ajit's special skills and Ajit's special skills.
One of the ways he's particularly remarkable
you comment often about how unique Ajit's skills are. So just tell us, is Ajit your successor? And if not,
profitable into something
what happens to Ajit's businesses
something every Tom, Dick, and Harry is doing? Well, they won't be without new ways for a long time to do business. And he's remarkable. You started with the A's when you started on possible. One of the ways he's particularly remarkable is that when people start having any more luck when you get to the B's, and turning what was maybe quite profitable into something that becomes something every time.
The basic answer is that
he figures out new ways to do business.
If Ajit ever
and I noticed you started with the A's when you started on possible successor with Ajit.
Yeah, we won't look as good, right?
You won't have any more luck when you get to the B's.
That's true of a number of other managers.
Charlie, we have an extraordinary group of people. In most cases,
I think the basic answer is
do not need the money.
If Ajit ever
working for us, they may make substantial money.
Not with us,
and they are doing a job for
look as good, right?
shareholders and for me and Charlie.
And that's true of a number of other managers.
We have an extraordinary we don't deserve, but they are having. I think they're having a good time. Most cases, business is the one thing we do not need the money. Create an atmosphere where they can working for everything that they may make rather than spend all their time. running back and forth to headquarters, and they are doing a job show and tell operations, shareholders, sort of thing. For me and Charlie, and it's taken a long time though too. I mean, you can almost say we don't deserve, but they are having. I think they're having a good time running their 20 years. The one thing without a G. Create an atmosphere. Come in the office in 19, enjoy running the business. 65 instead of 1985, we'd probably own the world, the headquarters, and doing show and tell operations and that sort of thing. Fun to think about, isn't it? And
like you,
it's taken a long time though too. I mean,
like you,
we operated Berkshire
in the audience today.
For 20 years.
This question is
without
not meant
a G.
to be disrespectful.
He'd come in the office in 1965 instead of 1985. We'd
but
probably
it's a
own
question
the world.
I have to ask.
Okay.
Someday your son Howard will become Berkshire's non-executive chairman. I have two sons that I love. Berkshire is a very complex business. Like you, I have a son growing more complex as the years pass. Is not meant to be. Howard has never run a diversified business.
Sounds like it's going to be, but go ahead.
Nor is he an expert on enterprise but it's a question risk management.
Best
I have
to
to
ask.
Know.
Okay.
He hasn't your son Howard will become Berkshire's non-executive ever been engaged in taking over Berkshire a large is company. A very complex business. Away from the accident growing more complex. How is Howard the most qualified person Howard has never run a diversified business.
Well, he's not taking on the role that you described.
An expert
taking on the role
enterprise risk
of
management.
being non-executive chairman in case
he hasn't made material stock investments,
in terms
nor
of
has he ever been engaged in taking over a large company.
I think the probabilities
away from the
of a
accident
mistake
of
being
birth.
made are less.
How is Howard the
but they're
most
not 0
qualified person to take
and
on
I've seen
this
that
role?
mistake made.
Well,
in other
he's not
businesses.
taking on the role that you described.
It is not his
He is
job
taking on the
to run
role
business, to allocate
of
capital,
being non-executive
else.
chairman in case
If a mistake is made
in picking a CEO,
in terms of who is picked,
having a non-executive chairman who
a
cares
CEO
enormously
I think the
about
probabilities
preserving
of a mistake being
the
made
culture
are
and taking care of the shareholders of Berkshire.
But they're not
0 and 100.
not
And
running
I've
the
seen that
business at
mistake
all.
made.
It will be
in other
far
businesses.
easier.
So
It is
then
not
make
his
another
job
change
to
and
run the
he
business
is there as a
capital to anything
protect-
else.
as a protector of the culture.
If a mistake is made
in picking
an
an
enormous
enormous sense of
having a
responsibility
non-executive chairman
about
who
that,
cares
and he has
enormously
no
about
preserving
about running the business,
the culture and taking care of the
shareholders.
shareholders.
No
of
interest
Berkshire,
in running the business.
not running the
won't
business
get
at
paid for
all.
running the business.
It will be far
He
easier.
won't have to think about running the
then
business.
make another
only have to
change,
think
and
about
he is there
whether
as
the
a
board
as a protector of the culture
and
he has
himself,
got
but
as
an
an
enormous
enormous whether the
sense of
board
responsibility
may need to
about
change
that,
the CEO,
and
and
he
I
has
have
no
seen
illusions
many
about
times
at all about running
really
the
many
business.
times.
He would
Wouldn't
have no interest
60
in
plus
running the
years.
business.
Well, probably
He won't get
55
paid
years
for
as
running the
director.
business. He
Times
won't have to
when
think about running the
a
business. He'll
mediocre
only have to think
CEO,
about
whether the board likable and
not
dishonest,
but not the board, but whether the board
to be changed, and it's
may
very,
need to
very
change the CEO. And I
hard
have
to do
seen
when
many
that person
times
is in the
really many
chairman's
times.
position.
It's
over
not
60
plus
plus
not
years.
as-
Well,
it's
probably
a
55
bit
years
easier
as a
now that
director.
you have this
times
procedure
when
where
a
the board
mediocre
meets
CEO
at least once a year without the chairman present.
likable,
That's a very big improvement in my
not
view.
dishonest in corporate
But not
America.
the person who should run it needs to be
because
changed,
it-
and it's very,
the board
very
is a
hard to
is
do
a
when
social
that person
institution
is in the
chairman's position,
and
it's not.
It is not easy.
It's not as
for people
it's
to come
a
in.
bit
We'll say
easier
to
now that you have
Chicago or
this
New York or Los
procedure
Angeles,
where
the board meets
once every 3 months,
once a
have
year
few
without the
committee
chairman
meetings.
present. That
And
would
maybe
that's a
have some
very big
doubts
improvement in my
about
view.
whether they really got the
corporate
right person
America.
running it.
Because it
Very nice
a board is
person running
a
it. But they could do better.
is a social
But
institution.
who's going to make a change? And that's
and
the position.
it is not
the
easy
non-executive chairman
for
in this
people
case,
to
Howard
come
would
in
be
and
and I know
to
nobody
Chicago or New York
will
or
feel
Los
that
Angeles
responsibility more
once every 3
in
months
terms
of
of
have a
doing
few
that
committee
job
meetings,
as it
and
should
maybe
be
have
done
some doubts
than my son Howard,
about whether
you
they
know.
really got the right
I
person
think the
running it.
Mungers are
They have
much
a
safer
very nice person
with
running it,
Howard there.
but they could do better. But who's going to make a change? And that's the position.
You got to remember the board
that the
owns a lot of
non-executive
stock.
chairman, in this case Howard, would be in, and I know of nobody that will feel that
We're thinking about the
responsibility
shareholder.
more
We're not
in
trying
terms
to
of
gum it
doing
up
that
for
job
the
as
shareholders.
it should be done than my son Howard. You know,
Yeah, I think the Mungers
after
are
my
much
death,
safer with Howard there.
whatever it may be in terms of value then, but it would be, $50 billion worth
You got to remember the board owns a lot of stock.
will over a period of time go to
We're thinking about the shareholders. We're
help
not
people around
trying
the world.
to gum
It
it up
makes an
for
enormous difference.
the shareholders.
Whether that
Yeah,
the company behind that
after my
stock
death
is doing well or not, and whatever
both
it may
Charlie
be
and
in
I
terms
have
of
value then, but it would be, we've seen some dollars worth of stock. more than one example over a period of time where go to a CEO who might be around the world and makes an enormous on a scale of 10 and is perfectly likable and has perhaps helped select some of the directors that sit there and doing well or not. And continues, both Charlie and I have seen year after year when somebody else can do it a whole lot better. And more than one example. It can be hard to make that where it can be hard to make that, very hard to make that change. A CEO who might be controls the agenda 6 on a scale of 10. Keeps everybody busy when they come into town for a little while and helps select some of the directors
9 out of 10 and everything, but with deep flaws
continues to run the business year after year.
It helps to have
somebody else
some objective person with a real incentive sitting in.
It can be hard to make that
the position Howard will be in.
It can be hard to make that. Very hard to make that change in the past. That person, that controls the agenda and keeps everybody busy when they come into town inherit the earth. But after they inherit the earth, will they stay meek?
And everything, but with deep flaws.
Could be the problem. If somebody got made
it helps
CEO
to have
Berkshire,
some objective person with a real incentive sitting
people might want to
in the position Howard will be in.
Throw the example I've used in the past. You may have noticed that in the annual report, in terms of our newspapers, blessed are the meek, for they shall inherit the earth. But after they inherit the earth, will they stay meek? Endorsed for president. Could be the problem. Endorsed. If somebody got me into CEO Obama, I voted for Obama. It could be a position change that. But when I write that sort of thing, I'm trying to box in my successor to some degree. Throw their way around in various ways. You may have noticed that in the annual report. Berkshire our newspapers, I say, I am not going to. We want to be thinking about telling them who to endorse for president.
Sometimes somebody becomes CEO. Characteristic of
endorsed Obama, I voted for Obama, but I'm not going to change that. But when I write that sort of thing, I'm trying to box in my successor to some degree too. And we do not want somebody using
within the context of a
Berkshire
very low
Hathaway as a
interest
power
rate
base
environment that may be sustained for some time.
We'll be thinking about the shareholders.
And the challenge that insurance companies are facing in that environment with respect to managing their capital as well as managing their risk and uncertainty when they have future liabilities and potentially the need for liquidity. And maybe you could transcend that down to the individual as well, who is dealing with a low interest rate environment, trying to manage challenge that insurance companies cash return are facing. Just one final tag on, if you could, at the end, could you explain what Federal Reserve Chairman Ben Bernanke believes he has as a tool in his toolbox called the Term Credit Facility? And maybe you could transcend that down to the individual as well, who is dealing with a low interest rate environment, trying to manage uncertainty and yet still get some
the problem faced by people.
Investment. Just one final tag on, if you could, at the end, could you explain what Federal Reserve Chairman Ben Bernanke
cash equivalents
believes he has as a tool in his toolbox called the Term Credit Facility?
The loss, the answer is I can't. Can you, Charlie? Off their income. The loss of purchasing power, it's just staggering. The problem faced by people, these low interest rates, they are who have stayed in cash equivalents or short-term treasuries or whatever. It is low interest policy and a dramatically low interest policy, basically they live off their income. I've written the loss of purchasing power back. It's just staggering. 2008, when you get into own equities, I mean, equities were cheap. And you were almost certain to get killed, victims, in terms of for at least a while. Low interest. We had policy and promised a dramatically low interest policy. The Fed was going to hold rates very low. So it was a great time to own equities. I feel sorry for 2008 to own equities. I mean, it was equities were cheap. Fixed dollar investments, you were almost short-term killed. In terms of a period like this, and I don't know what I would do. We had, if I were in that position, imagine having, the Fed was going to hold rates very low. So it seemed like a very large amount of money to own equities. And a quarter of a percent on $1 million is $2,500 a year, and that is not what people anticipated when they were particularly short-term ones over the years. During a period like this, and I don't know what I would do. Well, if I were in that position, imagine having some sum that seemed like a very large amount of money in the past made sense, more sense than fixed dollars. A quarter of a percent on $1 million is $2,500 a year. Probably 90% of the time in my life, it's made more sense what people anticipated when they were fixed dollar investments, and it certainly years. I made dramatic sense. A few years ago, advised, I've always felt that were marked down to where they were
certainly made sense, more sense than fixed dollars under most circumstances. Not every time prospect, but fixed dollar probably 90% of the time in my life it's made more sense than owning a considerable period of time. Fixed dollar investments. I didn't anticipate made dramatic sense. We would see the kind of rates for the extended period that we have already, and I don't know how long it will mark down go on. But it's a real dilemma for people. I get letters. And I get a lot of letters from people. You could see the prospect. Say, I've got $300,000 and I say very little for it. So it's a considerable period of time. And I didn't anticipate from low interest rates as hit. We would see the kind of rates for the extended period harsh we have already, and I don't know much about it. I don't have much of a voice, but it's a real dilemma for people. I get letters. I get a lot of letters from people that we're owning productive assets rather than dollars, and I've said, what should I do? So it's in dollars during a period like this. Charlie, the fallout from low interest rates is
well, they had to hurt somebody.
Millions of people,
and the savers were
harsh way, and you don't read much about it, and they don't have much of a voice. But it's what would you do about a good argument for?
I would have done about what they did.
Assets rather than
yeah. So I would have felt bad about it, but I would have. That's what I would have done. Well, they had to hurt somebody.
Can you talk a little bit more about the IBM investment?
The savers were convenient.
Where do you see the moat for that business?
I would say that I do not understand the moat around an IBM as well as I understand the moat around the Coca-Cola. I think I have some understanding.
I would have felt bad about it.
I would have more conviction about the moat around a.
Can you talk a little bit more about the IBM investment? Where do you see the moat for that business?
I would say that, but I feel good enough. I do not understand the moat around an IBM amount of money. I understand the moat around the Coca-Cola. There's nothing that precludes both Microsoft, which you mentioned, and IBM. And I feel I would have more conviction. In fact, I hope they both are. About the moat around a Coca-Cola, or I've got enough conviction for that matter than an IBM, and I feel good enough about IBM that we took a very large position. I like their financial amount of money in it, and I think the odds are good. Precludes both Microsoft, which you mentioned, and IBM maintained in a strong way successful. In fact, I hope I don't feel the same degree of conviction about that. As I do about the BNSF Railroad. I mean, it's very hard. I've got enough conviction along with BNSF. IBM's position. I can think of some things that can go wrong. We took a very large IBM position. They incidentally have I think a very large. The odds are good. Pension obligation. Now they have a large pension fund too, but you're talking $75 or $80 billion. But I don't feel the same degree of assets and liabilities as I do about the BNSF Railroad. It is a big. It is a big annuity company. I can think of something on the side and with IBM. They incidentally have you can have a very large balls can take funny bounces pension obligation. Now they have a large pension fund too. I would rather you're talking $75 or $80 billion. That is a fact that I take into consideration when I buy. They show the assets and liabilities being roughly. It is a big equal, but annuity company. The liabilities are on the side and the assets over time. Charlie, you can have balls can take funny bounces in the.
IBM annuity field. I would rather has the resources of IBM.
That is a fact.
Suppose you're a big life insurance
take into consideration when I buy. They
all over the world.
They show the assets and liabilities being roughly equal, but the liabilities are a lot more certain.
In Japan, they agreed to pay 3% interest.
Charlie?
Of course, there was no way to earn 3% interest. At least once the Japanese policies and pension plan has the resources of IBM. Suppose you're a big life insurance company, revered, secure places all over the world. The life insurance companies have started to suffer the tortures of hell. And around Berkshire, you'll notice the life operations. In Japan, they agreed to pay 3% interest. And of course, there was no way to earn 3% insurance. They're pretty small, right?
Yeah, we do not like giving options in this world, and people tend to once revered, secure places. They got a sales force pushing them on. Unsecure in the life insurance industry. They have tended to give people
Berkshire,
options
the life operations
that have,
where we have
in certain cases, cost them huge amounts of money.
Distinguished from reinsurance.
You always want to accept an option. Yeah, we do not like giving options in this world, and life businesses and just the reverse. People tend actually the mortgage business. I mean, well, particularly they got a sales force pushing them on, as you have in the Charlie and I were in the savings and loan business. The idea to give people options of giving somebody a 30-year mortgage where they get, if it's a good deal for you, they can call it off tomorrow and money. If it's you always want to accept it for 30 years, those are terrible instruments. Life businesses, they're good for you if you're buying. Actually, the mortgage business. I mean, I recommend everybody that's room get a 30-year mortgage immediately. Charlie and I were in the savings and loan business. The idea if it's a bad deal and rates go to 1%, a 30-year mortgage where they can, if it's a good deal for you, they can call it off tomorrow and buy it back for 70 cents on the dollar. It's a good deal for them. They keep it for 30 years. Those are life terrible instruments in that big time. They're good for you if you're buying a house, and I recommend it decades. I recommend everybody that's paying the price and some mortgage immediately on haven't even realized exactly quite what the problems are. The other rates go to 1%, you follow in the switchblade fight. Rates go to 6 or 7%. The guy takes a big swipe at it back for 70 cents on the dollar or something of the sort. The fellow says you didn't touch me. The life companies have just engaged in and shake your head. Well, big. That's a little bit like where some of the life companies are paying the price, and some of them haven't even realized exactly quite what the problems are. They're kind of like
that's gloomy enough.
How was your investment strategy different when you were still accumulating money as opposed to managing billions?
The fellow says you didn't touch me. Managing $1 million is wait till you try and shake your head. Well, Berkshire Hathaway, or a little bit like where some of the life companies are right now. $50 billion fund of money, and I think Charlie and I were.
No, that's gloomy
$1 million.
How was your investment strategy different when you were still accumulating money as opposed to managing billions?
We'd be looking at some managing $1 million small things. We would be different game for small discrepancies and Berkshire Hathaway, or running some and $20 or $50 billion. The opportunities fund of money and are out there. Charlie and I, they're extraordinary. Running $1 million now or 100,000 or that's something we really don't think about anymore because some of our problem is. We'll be looking at probably some very small things or whatever it might be coming in every discrepancies, certain situations. That means we have to be looking for very big. The opportunities, forget about what we used to do when we were there, very young, and periodically they're extraordinary.
Yeah, I'm glad I'm through with that.
That's something we really don't think about anymore because our problem is handling. He worked pretty hard at it when it was 12 or 14 billion or whatever it might be coming in every year, and. We looked under a lot of rocks, looking for very big deals, and
I used to make big returns on my
very young. Charlie,
float on my own income tax. Yeah, I'm glad. The time I got the money and I paid it to the government, I frequently made enough money to pay the tax.
He worked pretty hard at it.
Working for small amounts of money and doing anomalous things.
Yeah, he looked under a lot of rocks.
How did you see
I used to make
investments
big returns on
in emerging markets?
Float on my own income tax.
Its investments
the time I got
in
the money
places
and
like
I paid
China.
it to the government, I frequently made enough money to pay the tax.
What kind of industries and companies
working
you
for
are
small
interested
amounts of
in?
money and
we don't
doing
really start out.
things.
He didn't tell me how to do it though. Looking.
How did you see
emerging markets
investments
or specific countries or
in emerging markets? Will Berkshire expand its
we may find
investments
things
in places like China?
You know, as we go around, but it isn't like.
What
Charlie
kind
and
of
I talk in the
industries
morning and
and
we say, you know,
companies you are
it's a particularly
interested
good
in?
idea to invest.
We don't
in
really
Brazil
start
or
out
India or China or whatever it may be. We've never had a conversation like that, have we, Charlie? Do either emerging markets or specific countries. It just won't happen. We don't think that's where our strength is. And we know as we go around, but it isn't like Charlie and I talk in the morning and we say, you know, we think probably it's a particularly good idea to invest in Brazil or India or China or whatever it may be. Strength isn't there either. We've never had a conversation like that. It sounds good, no, but I don't really think it just won't happen. To look at investments. If you told me that we don't think that's where our strength is. We're perfectly willing to know that our strength is do it. We owned a lot of China at one time. We own some BYD now. We think probably the United States and will continue to. But if you told us that we could only invest in the United States there either, the rest of our lives, it sounds good. We would not regard that. I don't really think it's a huge harsh way to look at investments. If you told me that
it's a great way to sell
only invest, we're perfectly willing
a whole lot of different
to do it. We own
categories.
A lot of China at one time. We own some BYD
lots of commissions, lots of advice, lots of action
outside the United States, and will continue to. But if you told us that we could only invest in the United States,
a lot of things we just
the rest of our lives,
we don't feel we've got enough.
We would not regard that as an
edge,
huge hardship, Charlie.
Yeah, it's a great way to sell
somebody talking concepts
to have a whole lot of different
of any sort,
categories.
Country by country
lots
concepts
of commissions,
or whatever
lots
it might
of advice,
be.
Lots of action.
We tend to think that they're probably going to do better at selling than at investing.
A lot of things we don't feel we've got enough
way. I mean, it's what people expect to hear when
so that we want to play.
Somebody comes calling, that today we think that when we hear somebody talking concepts around the world of any sort, just find a good business that are attracted by country concepts or whatever it might be, we tend to think that they're probably going to do better at selling
last year you liked
investing.
Sri Lanka.
It's just such an easy way. I mean, it's what people expect to hear when somebody comes calling. That today we think. And we usually think it's a lot of baloney at this or that.
That's why we're not comfortable.
Do is just find a good business.
The U.S. government is seemingly complicit
really like
in enticing the American public to buy a home
last year you
and therefore a mortgage at any
Sri
cost.
Lanka.
Do you think our legislators are doing the same thing now? And are we creating a bubble?
And we usually think it's a lot of baloney. I don't think we're. That's why we're not remotely near.
The U.S. government was seemingly complicit
now
in enticing the American public to buy a home and therefore a mortgage at any cost.
Complete.
Do you think our legislators are doing the same thing now? And are we creating a bubble?
No, I don't think we're really kind of went crazy. I don't think we're remotely near. And the government was a very big part of it because they're in terms of housing now. The financing. I certainly think certainly true that your plenty of legislators were encouraging but not complete. In terms of what went on before. I mean, things that the whole country almost, not just in retrospect. I mean, if you looked at it at the time, kind of went crazy in terms of housing. But there were an awful lot of people doing the same thing. Part of it because it was coming from all sources, financing, and it had that certainly true that aspect to it, which plenty of legislators were encouraging. Where year after year, for 3 or 4 or 5 years, whatever it might be. They shouldn't have been skeptics looked like not idiots. Just in retrospect. And I mean, if you looked at it at the time, jumped on the bandwagon. But there were an awful lot of people that were refinancing their houses at ever higher prices from all sources, and it had that speculating aspect to it, which other houses do. So it just looked all so wonderful. And year after year, for 3 or 4 or 5 really years, whatever it might be, to that sort of skeptics look like idiots. Effect where the people who their neighbors jumped on the bandwagon. Everybody's making easy money, refinancing their houses at ever higher prices, and it's just people who nature things speculating. It doesn't mean on other houses. It doesn't mean the people. It just looked all so wonderful, and they were necessarily evil. People are really susceptible to that sort of that legislation effect. Legislators where they necessarily were evil. Their neighbors making easy money. Everybody's making easy money. Overwhelmingly, they finally succumb. Just caught up in a grand illusion. It doesn't mean, it's happened. It doesn't mean that many times Freddie or Fannie will happen again. We're necessarily evil. And a few of them were. You can use that, or that very much to your project. We're not in that kind of a period now on housing. You've got very, very low interest rates, but overwhelmingly support. I think most people just cases the purchase of houses caught up in a grand illusion. It brings down the payments. It's happened many times, but I personally happen again. About a year ago, I mean, I recommend you can use that. They buy houses, and I probably we're not in the people that we're not in that kind of a period. They finance housing now. You've got very, very low interest rates, which you find a support if you're going to live in the community for some time, and you find a house that fits your needs. I think it's probably a very good time to buy it. In part because the financing is so I personally attractive. About a year ago, I mean, I recommended to people.
The main problem was
and I certainly recommend
as things got crazier and crazier,
they finance them now, and
the government could have intervened.
If you find
by pulling
to live in the community for some time, and you find a house that fits your needs,
everybody was totally drunk.
A very good time to buy it. In part because the financing is so unbelievably attractive.
And this was not a good idea. The main problem was that it's hard to, as things got crazier and crazier, governments in a democracy, the government could have intervened, the punch bowl from voters who want to get drunk by pulling away
it's almost impossible.
Punch bowl before I mean, everybody was totally drunk. So you're complaining a little bit about what sort of the government life increased the proof. Not too good an idea. And this was not a good idea.
You'll see it again, but not necessarily in housing.
It's hard to
you will see it and
get governments in a democracy to be pulling away the punch bowl from voters who want to get drunk.
Continue to make, it's almost impossible.
Yeah.
I mean, it isn't.
So you're complaining a little bit about.
They get fearful when other people are fearful. I mean, you saw it in those
not too good an idea.
Money market funds when 175 billion, again, flowed out. Not necessarily in housing, but I mean, everybody gets when people get scared. Humans, it's very, very persuasive. Continue to make. I've often thought that if I owned a bank, they get fearful when other people are fearful. I mean,
you saw it in those. I might hire a whole bunch of Hollywood extras to form a line in front of the other guy's bank. Everybody gets, when people get scared, the hell of it is that they, as soon as they got through forming a line, they start forming a line at my bank. I've often thought that, if people really get, they get fearful own the bank in a two-bank town en masse. If confidence I might hire a whole bunch of Hollywood extras to form a line in front of the other guy's bank. But when they get greedy en masse, too. I mean, it's just the hell of it is that they're constructed. That's where Charlie and I have an edge. Through forming a line there, they start forming a line at my bank because they, and many other ways. But people really are able. They get fearful. I think en masse. Confidence comes back. Not really get caught up, but with what other people are doing. But when they get greedy en masse too. I mean, it's just the way the humans are constructed. That's where Charlie and I have an edge over time, or have an edge particularly. And many when we see falling prices, we are able. I think it's an opportunity to buy and to not really. It doesn't bother us. Now we don't own things on a margin, or we don't get ourselves in a position where somebody else can pull the rug out from under us. And that's enormously important in life. We learn that over time, or what? But get out on a limb. And of course, when we see falling prices, leverage gets very tempting. When things are going up, and leverage what was introduced into housing. It doesn't bother us. Now we don't own things on margins, or we don't get ourselves in a position if you didn't keep somebody else on your house and maybe using that to buy more houses, or using it to live on, or whatever. You never want to, and then get out on a limb. And of course,
do you see investment opportunities in the Eurozone? For example, extending your stake in Munich Re. Do you trust in the policy of the ECB to bring the things together?
You're perfectly willing to look at business opportunities in the Eurozone that we bought, and then a couple of bolt-on acquisitions.
Do you see investment opportunities in the Eurozone? For example, extending your stake in Munich Re. Do you trust in the policy of the ECB to bring the things together?
You're perfectly willing to look at business opportunities in the Eurozone that we bought, and others. A couple of bolt-on acquisitions, one for a couple $100 million to buy businesses. We'd be happy to. Europe is not going to go away, but we'll be happy if we find a business in the European Monetary Union was the 17 countries tied to the euro. Major flaw, and there might be a few of them would be a little less inclined than others. To correct that flaw. It may create opportunities for us to buy business. With 17 political bodies, happy to. Europe is not going to go away, but a lot of diverse European Monetary Union it's really tough for them to do so. They'll do it. Major flaw, and they're essentially they synchronized a currency without synchronizing much else, and with 17 political bodies. Nature finds the fatal flaw always, and so does economics. And they found it fairly quickly. A lot of diverse cultures in terms of the euro, and it's really tough for them to do so. They'll do it. It was put in place, will not work, and they'll have to find something that does work. Essentially, they will synchronize the currency without go through a fair amount of pain synchronizing much else. Charlie? And structured as Europe finds the fatal flaw always, and so does economics. Living in Greece. They found it fairly quickly. The European Union in terms of the euro, and the structure using rat poison that was put in place will not work, and they'll have to find something that does work. And they will eventually, but they may go through a fair amount of pain in the process. Charlie? Yeah, it's not a responsible capitalist as Europe was structured. A place where people don't pay taxes. Living in Greece. It's just into the European Union. I've tried for years to get them to use country A and country B. Using rat poison as whipping cream. And it just committed fairly extreme fraud in the course of getting into the Union. They lied about their debt. Yeah. It's not a responsible capitalistic country. Place where people don't pay taxes and so on. They have politicians too. And I've tried for years to get them to use country A and country B, but and committed fairly extreme fraud in the course of getting into the Union. They lied about their debt. Sure. Think what Europe has already muddled through. Europe made terrible mistakes. They have politicians too. We would be delighted, even with that dire forecast. Not overly. We would be delighted tomorrow. You think it'll be behind them in 10 years? That we liked. I think Europe will muddle through. Sure.
I hope you'll call Europe has already bubbled through.
But we would be delighted even with that. I make these small suggestions, but you can see it doesn't help much. We would be delighted tomorrow.
How has social media impacted your business and any Berkshire companies, and what impact do you see it having on the world
you'll call me if it's
in the short and long term?
Probably half the people or more in this audience can answer that question better than I can. It has. I make these small suggestions, but you can see it doesn't help much.
How has social media impacted your business and any Berkshire companies, and what impact do you see it having on the world in the short and long term?
Founded in 1936. Probably half the people or more in this audience could answer that question better than I can. Entirely by mail. It has, and it worked very well. Geico, and then it makes a difference. And the world changed. Time will make a huge difference. Once the TV advertising and marketing numbers and that sort of thing. The internet made a change. I mean, then Geico was internet, and now it goes on to social media. And it had a great business idea of going direct. We have to listen. But it did it entirely to our customers initially, and it worked very well. It's much more dramatic. And then it progressed as the world changed. I've been amazed TV advertising, at how fast the world has changed. I thought the internet, and then it went to the internet, in terms of Geico, goes on to social media. So younger people very quickly in terms of we have to listen. Habits, but the truth is that to our customers spread across in all our entire age, some of them it's much more dramatic than others. Very, very quickly, and huge change. And I've been amazed. You have to respond to that, and how fast the world has changed. I thought the internet, for example, in terms of Geico, would affect. We have people that are younger people that are in our business quickly and are thinking about buying habits. But the truth is that they'll continue to spread across the entire age range. It would be a terrible mistake, very, very quickly, to put me in charge of social media. Huge change. Berkshire Hathaway, and you have to respond to that. Charlie would not be a particularly good choice either. By miles. Charlie, do you want to defend yourself? That are very good at it in our businesses.
Well, I don't
about it funny and
understand it very well for a very good reason. I avoid it like the plague.
It would be a terrible mistake.
And I hate the idea of the teenagers in my own family immortalizing for all time the three dumbest things
Charlie would not be a particularly good choice either. Charlie, we would have been in big trouble, Charlie.
We would have been in big trouble, both of us, if that were the system. Understand it very well for a very good reason. I avoid it like the plague. There's a time when you're. And I hate the idea of the teenagers in my own family immortalizing for all time the three dumbest things they said when they were 13. I also think that when you multitask like crazy, we would have been in big trouble, both of us. None of the tasks is likely to be done well. And so I think there's a time when your ignorance and folly ought to be hidden.
Is there anyone we've forgotten to offend?
Earlier in the meeting, you said when reading over financial statements,
I also think that when you multitask like crazy, like the young people do, none of the tasks is likely to be done
frauds. What was it in those financial statements that you saw that made you be so certain
to offend?
They were frauds?
It varies just enormously over the years.
Earlier in the meeting, you said when reading over financial statements, you identified
we can't identify 100% of the frauds, 90% or 80%, but there's certain ones
what was
that
it
jump out
in
to you.
those financial statements
people give themselves away a lot
that
too.
made you
in poker,
so
they talk about tells.
They were frauds.
Charlie and I enormously over the years. Bought a lot of businesses. It's very important when we buy those businesses that we assess. We can't identify 100% of the frauds or 90% or some degree of accuracy. Certain ones because that jump out. They hand us the stock certificate. People give themselves away a lot, and then we in poker they talk about tells. Run the business. Charlie and I enthusiasm have bought a lot of. They have the money, and it's. As they did before. It's very important when we buy those businesses. So we are assess the individuals people that we're buying from. And we don't think we can assess with some degree of accuracy accurately because we just have to be right about they hand us the stock certificate and we hand them a lot of money. And then we those decisions have not always been run the business perfect with as much enthusiasm. Pretty good, and I would say they probably they have the money better even as the years as they did before. And similarly, so we are assessing financial statements, people. And we don't think we can assess everyone. For example, accurately in the insurance, we just have to be right about the ones we've seen some frauds in their decision. You can see things being done with those decisions have not always been we saw it perfect, but they've been pretty good. And I would say they probably have gotten a little bit better. Even call them company A's and B's instead of naming names. Similarly, but in looking at financial statements that when they were offering stock to the public, in the insurance field before that, the reserves we've seen down very suspiciously, and you can see things being done with loss reserves occasionally, or even when they were selling them to other insurance companies. Like Charlie, I don't. We'll call them company A's and B's instead of naming names. But there's a million different ways, and I don't claim I know all the ways. Obviously, offering stock to the public. I have seen enough situations over the years, and I've seen how promoters act. And you can spot, or even when they were selling them to other insurance companies. Are one way or another buying in stock games with the numbers, building the reserves. But there's a million different ways. I can't give you a checklist all the 40 items or something of the sort that you look for. And I have seen enough situations over the years, and I've seen how promoters act. Charlie, can you help him anymore? And you can spot certain people who
I once was introduced by warrantable people by accident.
One way or another,
to a man who wanted
with the numbers.
Sell us a fire insurance
They give themselves
company.
away, but I can't give you a checklist of 40
Among the
items
first
or something
things
of the
he
sort that
said
you
with a
look
thick
for
accent.
in the balance sheet or the income account or the footnotes.
Eastern Europe, I think.
Don't
Charlie,
name countries.
Sometimes it's pretty obvious. I once was introduced by warrantable people. I don't remember the country. To a man who wanted to sell us a fire insurance company. But what he told me was, he says, it's like taking candy Among the first things he said with a thick accent. Only write fire insurance on concrete structures that are underwater. Europe, I think.
Don't name countries.
I figured out instantly that it was probably fraudulent.
The guy's
I'm a very acute man.
Yeah, the guy's a crook.
I don't remember the country.
Good.
But what he told me was, he says, it's like taking candy from babies, he said. We only write fire insurance on concrete structures that are underwater.
When you get into accounting for...
I figured out instantly that it was probably fraudulent.
The guy's a crook.
I'm a very acute man.
Yeah, the guy's a crook. Properties and anything where you got construction in progress, or it was a lawyer, progress payment type thing. There's so many ways you can cheat in accounting. When you get financial institutions are particularly probably prone to it. I mean, in terms of how fast you write off. There's been plenty of proper insurance. Anything where you've got
a lot of it
got construction in
they're
progress.
Not being deliberately
progress payment type things.
Because they're deluded.
There's so many ways you can cheat in accounting.
In other words, they believe what they're saying.
In financial institutions are particularly like to hire them as salesmen, probably prone to it. And there's been plenty of it in insurance. If you've got doubts, forget it.
A lot of it,
basically.
They're not being deliberately fraudulent because they're deluded.
It's interesting.
In other words, they believe what they're saying.
They've worked harder and harder and harder. People like to hire them as salesmen, coming up with disclosures in accounting. And I'm not sure. If you've got doubts, forget it. Present financial statements. More useful, or in some cases as useful as I found them 30 or 40 years ago. I don't know. It's interesting. The accounting,
well,
worked harder and harder.
The financial statements of big banks are way harder to understand
coming up with
than they used to
disclosures
be.
in accounting, and
they just do so many different things.
I find
and they've got so many footnotes, and there's so much
gobbledygook. Or in some cases as useful as I found them 30 or 40 years ago.
They're not my grandfather's banks.
Well, we couldn't understand them when we owned them.
Well,
I mean, we bought a company
statements of big
generally
banks
they had 23,000
way harder to
contracts.
understand now than they used to
be. And Charlie and I could have spent 24 hours a day and had the help of 10 or 20 math PhDs.
They've got so many footnotes and there's so much gobbledygook. We still wouldn't have known what was going on. And, it doesn't. They're not my grandfather's banks.
To find out. Well, we couldn't understand them when we owned them. I mean, we bought a company that generally they had 23,000 derivative contracts. And Charlie and I could have spent 24 hours a day and had the help of 10 or 20 math PhDs. And we still wouldn't have known what was going on. You would actually,
The same auditing firm would be auditing two different companies that are on the opposite side. And that was in a benign market. But nobody can.
And the accountants that certified the balance sheet.
Sure, to the same
It's a new kind of asset.
Charlie found one mistake.
I invented a name for it. I said good until reached for. But no, it was a big contract, and both sides reported a large profit blessed by their accountants.
The same auditing firm would be auditing two different companies that are like us in
just
Swiss
for
Re.
making it
Derivative transaction and attesting to different values.
Competitive frenzy. Things just
Charlie found one mistake at Solomon on a derivative contract. What was it? I became the interim chairman.
It was a big contract, and both sides reported a large profit blessed by their accountants
in 1991
on the same contract.
And fortunately, I tested
just for making it
to both the House and Senate committee
before
I found this out.
Frenzy. Things just go out of control.
And generally speaking, I became the interim chairman. Wanted to have conservative accounting. Interim CEO of Solomon. In many cases did in 1991. But they did come into me one day. And fortunately, I had testified. Warren, you probably should know both the House and Senate committee. This item before I found this around 180 million or something like that. And generally speaking, incidentally, billion maybe, but Solomon wanted to have conservative accounting. This is a plug number, and in many cases did. We've been plugging it, but they did come since Fibro merged with Solomon, and they said, Warren, you probably should for 10 years. This number moved around every day, and as I remember, Fibro or something, one of them was on a trade date system, that was on a settlement date system, but 180 million. And in 10 years with Arthur Anderson, this is a plug number as their accountant paying a lot of money on plugging fees. Ever since Fibro merged with Solomon, the thing to balance, so they just stuck a number in for 10 years. This number moved around every day. They literally plugged it for, as I remember, 10 years or so. One of them was on a trade date system that was on a settlement. You almost had to start over. Didn't they do that one time? 10 years with Arthur Anderson.
We did that.
Yeah, right. We had a lot of money in auditing
fees
fees.
When we changed accounting systems.
They just never figure out
in our
how the
savings
hell they
and
get the
loan,
thing to
and none of the
balance. So they
accountants
just stuck a number in every day.
So we just let it run out.
They literally plugged it for. Yeah, we let the account 10 years.
Let the account run
I couldn't
out.
figure out how to unplug it myself.
We start over again. We started over.
You almost had to start over. Didn't they do that one time out there? Accounting is not quite the science.
Yeah, right. Accounting had to do discrepancy things like changed accounting systems. They do in Italy when they have trouble with the mail. None of the account piles up could fix, irritates the postal employees. So we just let it run out. They just throw away a few carloads.
We let the account.
We just let the account run out. And
we start over again.
Smoothly thereafter.
Accounting is not quite the science that people might want.
Accounting, you can do things like
in some unnamed
they do in Italy when they have trouble with the mail. It piles up and irritates the postal employees. They just throw away a few carloads. Everything flows smoothly thereafter.
The business that attracted you in sub-Saharan Africa, outside of South Africa, are the conditions right today to make that an
international country? I might not know enough to do it myself, but I think I wouldn't rule. If it was attractive enough and I thought I understood the nature of the business,
if you
I would
found the
probably get some
business
advice from
that
some other
attracted
people, and
you
I might not end up doing it,
in
but I wouldn't
sub-Saharan
totally preclude
Africa, outside of South Africa,
that done.
Are the conditions right
University of
today
Michigan
to make that investment?
Hired an investment
I might not know
manager in
enough
London
to do it myself.
who specialized in sub-Saharan Africa.
I wouldn't rule. If it was attractive enough and I thought I understood the nature of the business.
What they did is the little banks would
I would
trade
probably
in the
get some
pink
advice
sheets
from
in
some other
Africa.
people, and I might not end up
And the
doing
first
it, but I
thing
wouldn't
people
totally
would
preclude
want
it.
was not to have the
I
money
saw
under
that
the
done.
pillow. And the University of Michigan bought all the little banks hired an investment manager in London, made a lot of money, who specialized in sub-Saharan Africa. It is possible if you know what you're doing. How are they doing this? To go into very unlikely What they did places. Is the little banks would say we're not very good in Africa.
No, that isn't our specialty.
And the first thing people would want was not to have the
and
money
if we were
under the
poor
pillow.
enough, we might even be thinking about doing it, right, Charlie?
They just bought all the little banks in Africa. I don't think so.
Okay.
They made a lot of money. So it is possible if you know what you're doing to.
Next year we'll prepare for this.
Very unlikely places.
I'm an estate planning lawyer.
No, that isn't our specialty.
And it's interesting as we wrap up today to ponder
and if we were poor enough,
the baby boomer generation is about to pass along the greatest transfer of wealth in history. I can design plans that eliminate estate tax.
Next year we'll prepare for this.
Great amounts of wealth to the next generation. I'm an estate planning lawyer. Many of my clients come to me and say, it's interesting as we wrap up today like Warren Buffett's, that the baby boomer generation is about to pass along so they can do anything, transfer of wealth in history. But not so much that they can design plans that eliminate. Now they ask me, and I'm asking you, pass down how much amounts of wealth, and how do you keep the next generation from ruining? But many of my clients come to me and say they want a plan like Warren Buffett's,
the behavior of
leaving their kids enough
amount of the inheritance
so they can do anything, but not so much that they can do nothing. Now they ask me, and I'm asking you, about the world, how much is that? And how do you keep from ruining your kids?
Your words, from the moment they're born. You're their natural teacher. Kids are ruined by the behavior of their parents, by the amount of the inheritance. Important and serious job, and I don't think your children are learning about the world that the amount of money that a rich person leaves and more through your actions the determining factor at all from the moment they're born. You're their natural teacher. That the atmosphere and what they see about them and how their parents behave. It's very important and serious. Is enormously important. And I would say this: I've loosened up a little bit. I don't every time I rewrite my will, the amount of money the rich person, they know I'm not reducing the amount anyway, determining factor at all. And I do something else. How children turn out. I find that the atmosphere, which I think is an obvious thing, what they see about them and how their parents behave. It's enormously how many people don't do it. I think that I would say this: your children are going to read. I've loosened up a little bit. Someday. Every time I rewrite my will, my kids are happy someday. They know I'm not. It's crazy to have them read it after you're dead for the first time. I mean, and I do something else. They're not in a position to find that. Which I think is an obvious thing, but unless the Ouija board really works or something of the sort. It's amazing how many people don't do it. I think they're going to have questions about your children are going to read how to carry out the will someday, or assuming why you did this. Your children are going to read the will someday. Why leave them? It's crazy to have them read it after you're dead. So in my own case, I always have my children only not rewrite a will every 5 or 6 years or something. Answer questions then, unless and I have them read the Ouija board really works or something of the sort. They should understand. So, if they're going to have questions to carry out their obligations or embodied in the will, this or that, and they should also, if they feel there's anything unfair. So, in my own case, I always tell my children, I sign that will, I rewrite a will every 5 or 6 years or something like that, and I have them read it. So, I do think it's very important to understand once the kids are of a certain age, how to carry out their obligations that are embodied in the will. When they get, and they should, also if they feel there's anything unfair about it or thereabouts, they should express themselves. They should be participants. Sign that will, and we should talk it over in the will. And I do think that I'm right, or that if you get to be very wealthy, so the idea, I do think it's very important in wealthy families. Once the kids are of a certain age, a dynasty of doing this as your fortune runs against the grain, as far as I'm concerned. When they get money has far more utility. By the time they're in the mid-30s, the last hundreds of millions or billions, they should have far more utility to society in the will. And I do think would have to make it that create a situation very wealthy that the idea don't have to do anything in life, trying to call a trust officer once a year, create a dynasty of sorts. It just sort of runs against the grain, as far as I'm concerned.
I don't think I want to go into this.
The money has far more utility.
I'm absolutely sure you don't want to discuss your will with
have far more
your children if you're going to treat them unequally.
Than they would have to create a situation where your kids don't have to do anything in life except what you want to discuss. Call a trust officer once a year and tell them how much money they want. There may be circumstances where one child will have much more of an interest in one type of asset than another or something of the sort.
And if you don't want to make sure that your children, if you're going to treat them unequally.
Your definition of equality in terms of handling different kinds of assets. But there is one of the problems. What you want to discuss just for that, or at least is understood. There may be by the children circumstances where the fact that you gave one child and another have much more of an interest in one type of asset than another inequality. You thought it was equality. You want to make sure that your Charlie, your definition of equality. He's staying away from this handling different kinds of assets.
You've long been against stock splits,
or at least
but as you think about the Berkshire
by the children,
share,
so that they don't think the fact
one
that
day
you gave one a
if you don't split it, you can get to $1 million. Is the board thinking about
when you thought it was equality?
How to deal with that in terms of getting new stock
Charlie,
owners.
No,
I think we've got away from the arrangement now.
You've long
evolved
been against stock splits
originally through.
But as you think about the Berkshire
try to make a lot of money off of our
and one day
shareholders by creating their own split shares, so we created
$1 million.
The B shares.
Is the board
and then
thinking about
when the BNSF
how to deal with that
acquisition
in
came
terms
along,
of
we wanted to be sure that
getting new stock
the people that wanted
owners?
to have I think we've got a pretty good arrangement now. Change or the one to get shares and evolve. Not prohibited originally they had a small amount of BNSF people that were going to try and make a lot of money off of expensive. So I think shareholders by creating their own one stock, so we created the in the $100 B shares, and then people can BNSF people can split this. People that own the A stock can split their stock. Any people that want to have a wish and a stock. We've always pledged that there won't ever be this situation. But if there was some corporate transaction prohibited like that because they had a small amount of BNSF, the A and B will get our B shares treated identically. So I think now with one stock, in the $100 range, I really see no reason to change. People can split this. The people that own the A stock can split their stock anytime they wish.
I would not hold your breath.
We've always pledged change. There won't ever be this situation. But if there was some corporate transaction or anything like that, we will. The A and B will get. We'll take about treated identically. 5-minute or so recess, and then we'll. Get on to the business part of the meeting. I really see no reason to change. Thank you all for coming, and I hope you come next year.